Hello and welcome to the 20th episode of Quant with Karim, WhalesOnly, Gunter the accountant, and myself, Matty ALLin.
Woo! What's up, everybody?
How's it going,
Glad to
guys?
be here.
What's going on,
Another
guys?
fire episode. Shout out to Gunter. Wanted to invite him today. It's going to be a great show. So I hope you guys are top team, ready to go, and having a good time.
Thank you. Thanks for having me.
Welcome.
Hell yeah. Here we go. So now we got the show tonight, and then next week, and then the one after that's going to be live together in Vegas.
Yes, sir.
Right.
Excited about that. Hexicans.
Hope you guys are ready because I am.
Yeah.
That'll be super dude. I'm looking forward to it, honestly. Long deserved. So meeting you guys in person, that'd be great.
Absolutely.
Gunter, you coming, right?
Unfortunately, I will not be able to make it.
Oh, y'all outside the country?
Stuck in the middle of the United States somewhere.
Oh, right.
That sounds horrible.
Yeah, because I know for some people, because of their restrictions in their country, that's why I thought maybe it was that. Hey, we'll send you some videos and more live from over there too.
All right.
Right.
I'll send you some dirty vids over the Telegram. I got you.
Hey, all right.
Yeah, they're watching the price. Oh man. But oh boy, man, so much great things happened over the last weeks. Again, this is one of those days, Hexicans, where it's a little I told you so, but because we always prepare with, playing that chess, that's why we always protect ourselves, protect the community. So, and I think that's a great segue to start and do a kind of a recap because oh my God, a lot of things happened over the last 7 days, man. And then that Bitcoin conference was a couple of the jokes that I've seen. You couldn't make this shit up. I was like, is this real?
Dude, I had to do a stream just on that. Everybody was like, where's Karim? Where's Karim? They're like, they don't understand you work, bro. What's going on, people?
Exactly. There was so much to see. Oh my gosh, especially that dude that went on stage with the Doge. I read like articles and people respond on Twitter like, yo, we deserve to go to 16K after this. I was like, dude. Oh man, the cringe. I mean, it's just not professional. I mean, it's stuff like that you see, and then you want the people to get wrecked almost. You know what I mean? That's bad. They don't get it. Like, but hey, wake up call.
So there was a Bitcoin conference in Miami this past week, and they do a conference every year, just like we do, except they've been doing theirs for a little bit longer. And I guess, they've been so butthurt over the years by being called a scam and not being able to deal with it because they don't have as good of a community as we do. They had to take out all their pent up aggression out on, everything and everybody. It was really, there were a lot of cringe moments. There were some moments that they were speaking on topics that made sense, right? Mm-hmm. But even then, it was pretty shocking. Like, for example, they stole some of our narrative, right? That crypto it can be good for people's health. And, they tried to spin it into like a moral imperative for people to have Bitcoin. They tried to say that Bitcoin's good for the environment, right? Like,
that's kind of hilarious.
Yeah.
No, my biggest thing, Maddie, that I heard, right, was, and I think Pump said it once, like that Bitcoin is DeFi. I'm like, wait, whoa.
No way.
That's a stretch. I'm sorry. Listen, so I mean, that's a big. Come on now. Doesn't pay interest. You know what I mean? What do you mean Bitcoin's DeFi and it's decentralized? No, what a joke. Come on.
Yeah.
But yeah, I mean, it was just a combination of multiple things too. I mean, first of all, compared to the previous stream, like we told people, which I have the data, we're going to check again. The GBTC is still negative. It's actually went worse today. Negative 12%, guys. Now trying to break bad news, just like I told you last week. People say, oh no, it's at 37K, 38K. We're going to go back to 45. I'm like, listen, understand how this works. Every time they keep telling you, oh, the money is moving from the weaker hand to the stronger hand, the blah, 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 the bigger wallet, and that's not good. That means what you call manipulation, so to speak, which is kind of ironic, right? Because when the price goes up, everything's great, right? The hypocrisy, but when it goes against you, it's like it's bad. The more it goes to those people, the more they get to dictate how price will go and how the market will go. They're not done accumulating. After a distribution pattern execute, understand something. They just dump the price, everything from 60 to 50 to 45K on average. They're not going to buy it right back at 40K. Make no fucking mistake. That's stupid. They're going to dump that shit all the way down, wait for you to panic, and then they buy it right back below 30K or more and reaccumulate again. And then, if we're lucky, within 6 months, it goes back, or it might go for another year or two. But this is just what they do. They didn't do all this work, all this propaganda. Who knows how many people they bribed and narratives and news media. It's a combination of so many different things. And they literally just dumped it recently. And you think they're just going to pump it right back up? No, it's not going to happen. And I told you, they're buying it at 33K to 31.5. And lo and behold, where did the price go? Boom. As we speak right now, it's trending back down. Because those big wallets, you need to understand, those are the one buying. Those are the one having the cash on hand. Not the little guy that's like a leaf in the sand, in the wind, already blow his load, has no more money. And now he's just waiting and hoping. Man, it got so bad. People started to wishing on Twitter that the whales comes and pump the price. When you hear stuff like that, that's the beginning of the end. Because that means they got no more ammo, and that's when they're going to drop it. And right now, everything considered, price at 33K, premium is negative 12%. What does that mean? Quick math. People are buying right now, as we speak, people are buying Bitcoin at 30K to 31K, which tells you, because those are the ones controlling the bid support, which then brings it from the market maker. And I want Wells to talk about that because it's very important. That comes from the traditional market, because when the price goes down and it goes down, there's no crazy volume. The sad part, it can continue to go down until it finds that volume, until the bid order needs to get filled.
Yeah, wait until I talk about that.
Oh man, that's gonna be crazy, because the market makers, they always buy and sell, always buy and sell. Richard already told you, those motherfuckers make money on the volume. If they realize that, okay, there's no more volume, people are not willing to buy, or people already got blowed out. Remember, over $13 billion worth of liquidation. Like, what do you think we get no gas fee on Ethereum now? The money's gone. They lost it all. So now the market maker, all right, no more people playing at this level. So what I'm going to do, I'm going to push the price where the bid support is, where the next big buyers are going to be. And if the big buyers are institution and say, hell no, I'm not buying at 50K, I'm not buying at 45K, I'm already in the red, I'm trying to dollar cost average, therefore I'm putting my bid to 30 to 31K. That's what the professionals do. They let the order comes to them. They do limit orders. They don't do market orders. Wells, can you talk about that for a second? It's very important.
Yeah.
People don't understand.
Yeah, there's a reason they say sitting on your hands is what pays. And there's a reason Hex is so superior. And this is all really a function of, like, you guys really have to understand, right? Like, there's a reason Richard says a lot of the things that he says. It's not for fun. It's because it's true. If you read through any trader's interview, like any famous trader from the legacy side, think of Michael Marcus, Bruce Kovner, Paul Tudor Jones, whoever, right? That they're still around, still alive, and Stanley Druckenmiller, whoever, that they're big time traders with real track records. Andrew Keane is another one from New Zealand. Like, there's so many, right? But what you have to understand is that what makes you the money is not the clicking, and it's not the clicking. It's not the buying and selling that makes you money. It's the buying, forgetting you have that shit, aka letting it ride, and letting it ride, and letting it ride. That's what gets you paid. That's why all those people that sold Bitcoin in 2010 and 11 are buying other coins now, or still trying to make their way up to the top, right? Because they didn't buy and hold. It's really simple. That's why Hex is superior. It's all really one and the same. It's designed to do that.
Yep.
Hence the staking. Hence you don't have to think about it. Plus, it pays you. Go ahead, man.
I mean, in Hex, you have to do your time. And while you're doing your time, then you're creating value for the community by holding up the price, keeping the asset scarce, right?
Mm-hmm.
And all I saw on stage at the Bitcoin conference was people who are paid by centralized exchanges. Even the morality panel had somebody from an exchange, from a derivative exchange on, and they said, this guy's from a derivative. He didn't have anything to add to the moral argument. He was just there to flap his lips.
Come here, come do the long and the short.
The whole time there was advertisements being played. Why is it that if y'all are getting rich and getting billions of dollars in Bitcoin, why is it that you have to run ads for exchanges in the middle of your conference?
And the fucked up part is those people got no shame. And this is so important what you just said. And this is exactly why I wanted Gunter to be here today, because of what he has done. Because Hex is not only true DeFi, but because we know what's going on. We know the wallets. We know where the coins are moving. So therefore, we know what's going to happen. The most dangerous thing about the exchange is because they're inside their order book. You don't know what's going on. So much manipulations, pushing this and that. And just like market makers like to manipulate price of a certain stock or short certain stock when especially they know they hold most of the supply. So they know that if shit goes against them, they know where their stop is. So when they go to work, they're like, hey, we're controlling this. We're in cahoot. Because most of the big exchanges are the one controlling the Bitcoin price at the end of the day. They can push it whatever direction that they want. So that's how they can coordinate those attacks and those different things and then pushing the price and get the people liquidated because they make even more money by liquidating people. That's what they don't understand. It's this number one source of revenue because that money is gone. The price can go back to 60K today. Those people will never get their money back. That's the number one source of revenue. Number two is obviously the trading volume, the fee, which is why now the price is dumping because they already did number one, liquidated all the people. They took the $1 billion. Thank you very much. See you later. They dumped the price at the top. So they liquidated your crypto, then they dump it at the top, switch back to fiat, extracted the value out of the system. Fucking genius. Now they run the FUD and the fee and the whatever, and then they're just waiting to reaccumulate. And even if, this is the most fucked up part, even if you know what's going on, because yours truly is nice enough to tell you, because they already took the money, time is on their hand. Like Wells was saying. There's a reason why Wells even Gunter, those are pictures of snipers. What do snipers do? 98 just know the target's going to be here. Dude, I got my sandwich. I got my drink. I'm serious.
It's not a mistake, people. It's by design.
It's by design. Some of those motherfuckers already know. I'm not trying to be negative, but they already know they're going to be buying Bitcoin at 24K. Yeah. They just say it's a matter of time.
20 or maybe 15.
20K. And then the 20K support will break.
Yeah. They're looking at it like, okay, is it going to be next week, next month, or whatever? But this is the target. This is what we're bringing. And the only thing they're worried about, this is the only reason why I look at Quant. They're only looking at who hasn't been blown up yet, aka retail investor, because most of them are gone on red right now, praying for price to go back up. And they're looking at who got the big money, and because they're the one that can come and pump the price back up. But big money is not dumb. Big money is like, this is my bid support, take it or leave it. Just like the pawn shop analogy that I told you guys all the time. And the big bid support is around 31K right now. So they're basically telling the market maker, either you bring it over here. And when I say market maker, I'm talking also exchanges. I'm talking the miners. It's all in Kahoot. It's one big because those are the one controlling supply. And that's what I was talking about because they understand this is the play. If shit goes wrong, who can come and bust us out? And it's those who have supply. And those people already exited at the top for the most part. Now they just want to reaccumulate. I'm not talking about the coins that are in like long-term storage that's not coming back. I'm talking about those who just like to dump, 10K Bitcoin here and there, just flushing people out. Because the goal isn't for them to dump the coin. The goal is to create massive liquidation. There's a reason why also potentially on a death cross, if too many people go short, guess what? They're gonna create a short squeeze to get those people liquidated. Because that's their job. That's literally what they do, Maddie, every day. Too much long.
Let me talk about that for a little bit. I'm sorry to cut you off. Go ahead. So let me explain something very, very simple about markets and how they work and why sitting is the most important thing you can do in a market. And by sitting, I mean sitting and waiting like we were just talking about. The whole thing about it is that price is always going to move.
Yep.
Right? That's a fact.
Yep.
What you don't know is where price is going to move to or when price is going to move there. Right? That's what you don't know. And that's why sitting and waiting and picking your spot is important. Right? And that's also why projections and forecasts don't matter.
Yep.
Right? Like you can make them all day, but you know, the market's going to do whatever it wants. It doesn't really give a shit what you think. It doesn't, you know, like it doesn't matter. You know what I mean? Like it just literally does not matter. So what does that mean? Like, what am I trying to say? What I'm trying to say is that the market is going to ultimately decide what it wants to do and when it wants to do it. Right? Like this is why sitting on your hands after you get into a trade, once you've decided what you think the trade is going to do, is the only strategy, right? Not placing targets, not all that, unless you're like doing a day trade and you know you're trying to like scalp the market and you're trying to get in and out and all this. There's literally no reason for you to even be using stops or anything like that, because all you're doing is inviting trouble. Whether you want to believe it or not, doesn't matter.
Because you're giving away your location.
You're giving away.
You're telling the guy where you are, and again, because
that's a smoke signal. Basically, you're putting up smoke. You're letting people know where you are in the market.
Yeah. So they can blow you, pretty much.
Exactly. Yeah. And I mean, and that's exactly what it is. That's exactly what it is. It doesn't become anything else. You know what I'm saying? Like that's literally what it becomes. Because what are you doing? You're exposing, i.e., letting everyone know where your position is. That's all you're doing. It's not anything different, right? You think because it's something that you hear in some class that shit makes sense? Nah, man, that shit doesn't fucking make sense, period. It's not how it's done at all.
And the most fucked up part, which makes it even more worse and cringy, is more rigged because they know your position while you don't know theirs. That's the difference, and that's what true DeFi brings. Because, and I want Gunter to talk about this, because in true DeFi, aka Hex, right? Because we know everybody's in the wallets and whatever, so we know who holds what. So if you make a move, you can make a move. It's free, but at least it's a more fair situation versus you're out there manipulating. We don't know what's going on, and then you can push the prices in direction just to FUD people out, and then after that you bring it right back up instead of having something where you have full control. Because again, we're not even talking about how they lock you out of your account, do all some other stuff, right? Man, take away the buy buttons or the sell button. I mean, we can go this next level crazy.
That's nothing. That's
at nothing. Least DeFi, you have some level of fairness, some level. Okay, this guy got out of this position. This guy bought.
You know what's funny? I feel like all of that stuff you just mentioned is the easy part for them, right? Like that's the easy part, because in order to get the market to move to where you need it to go, right, that requires risk capital. Like that can't just happen. Like, and this is what you're talking about with the market makers and the liquidity providers, right? Like the miners, they're all on one side of the equation and we're on the other.
Yep.
Right. And this is why Hex is so superior. It eliminates the need for them at all. Like you don't need them.
Exactly.
So it obfuscates the whole variability in what you are typically used to seeing in a market, right? Like this is why Hex automatically doesn't dump like the rest of the market. Well, the only thing you see is the people that are reacting to the rest of the market.
Yes.
That's it.
And I will even dare to say that's what creates a free, real market, real people trading. Okay, so not just bots, whatever, because at the end of the day, they're moving all this, like you said, it's risk capital. But for them, it's almost a risk-free trade because they know information that you don't. It's true inside information. They know your stops. They know how much you bought. They know your entry. They know where you're going to be in or out, where you're going to be at a loss, right? So then they can literally just create all those events to create that fear, push you out, and then buy you back low. After they dump at the higher price, they're going to buy it back at the low. That's the most disgusting thing. So it acts like it's fair, but it's not. It's rigged in so many ways you don't even know. At least in the decentralized market, you know, okay, this is where this guy bought. So as long as I'm smart enough to understand that data, which is free, again, decentralized, okay, he's going to be supporting the price here. So as long as I'm buying here, or I understand if the price goes low, it's an accumulation phase because the big dog is here. Instead of you don't know what's going on, but the big dog knows where you are and can easily just FUD you out just so that they can buy back your coin at a low, make you at a lot, and then rinse and repeat.
This is when you call this is where the term wick bandits comes from.
Ah,
Mm-hmm.
Go ahead, Gunther.
interesting.
No, I'm just laughing. I never heard that.
So I know since we're a community, we always want to recognize whenever there's someone in our community that has a life event. And I'm happy to say that a member of our Hexakin community here, Randy Hilarski, has had a life event. He got divorced from Bitcoin on Saturday.
Wow.
And he left Bitcoin for a much younger coin. And I think we're okay with that.
Maddie, you are the best, bro.
He said it was a very sad day for him.
Wasn't just younger, harder, smarter, more useful.
A little bit of everything.
That's right.
It's better.
No, just a leech that just said take.
It even cooks better, I heard.
Exactly.
That's right.
Very important. It's not just all about age.
Better for his health, so we're happy for him.
And we're here for you. Come to Vegas. Your freedom.
Come to Vegas. That's funny, yo.
Oh man, it's epic.
Thank you guys for the donations. Gentlemen, wait till BTC crashes so low that the BTC maxis and influencers start blaming each other.
Oh,
man.
man.
It's going to be great.
Oh man, they're going to be at each other's throat. And Maddie, this is when you're going to see who's real community and who's BS. Those people, they talk, but when the when the price start to go the wrong way, shit, people start to talk shit. Hold on, yeah, niggas out.
Everybody's man for themselves at that point, huh? Everybody for themselves.
No, come on now.
Who's selling?
Yeah, right? When you have a superior product, superior design, you don't have to worry about that. It's the real 300 because the shields are connected. So it's just everybody's best interest. And Hexakin, remember, my most important thing I always say, which is what it's all about also opportunity cost, which is the number one value of staking. Every day, 8 p.m., just 57 minutes ago, we got paid today. Chill, nothing. Bitcoiners start talking about, you got to reaccumulate and don't worry about the USD price. No, because of course you're like down 50%. So it's like, it's fucking doom and gloom, right? Just get more coins, And then that's actually fucking dangerous because you're out there over trading. Liquidation bots are working overtime, taking you to the cleaners. Because they say it like that, but it's actually very dangerous. It's not that easy. It's not because market is going down. I'm just going to sell and buy back lower. Bitch, you don't know. That's why you got jammed in the first place. And then you sell and the price pump, and then you buy back, you get less coin, and then it dumps again. Like last week, we hit the 30K dead cat. We're going back to 45. And what happened? You got spanked again. Like, no. Hex, you don't have to worry about that. Stress-free, more coins. People emergency end stake, more coins. Everything is cool. And better yet, the price is stable. What? It's amazing.
Right. And you can explain how it's stable because it was just explained to you.
Exactly.
Nobody can tell you anything.
Disclosure on the blockchain. Gunther right here created an awesome spreadsheet for us. Spending all the time. Like you see what's going on.
Everything is 100% transparent.
Yes, trustless trust. It's not because we're a community or whatever or like the Bitcoin Max. No, we can back it up by facts. I can agree with somebody that's in my community.
Nobody here matters in reality, and that's the best part.
Exactly.
That's right.
Right, because it is what it is, and the information is just being relayed, and that's it.
Yes, and that's what makes it a superior product because people can get together by understanding and deriving the same conclusion because the data is there, the facts is there. So,
man, these charts you guys are about to see today are fucking wicked. I'm telling you. Wow.
Oh man, it's gonna be epic.
It's gonna be one of those days. I'm sorry.
There's 202 people watching. Go ahead and hit the like button or get out.
Boom. Yes, hit the likes. Maddie, I'm gonna share my screen so we can do that.
Let's do it. Thanks to Family Architect. Hex.
Yeah. So let me see here. Share. Do. This gets fun. So a lot of hands clean. So people to see this. In case we got new people on it today, welcome to the Quant game stream. So and let me know when my screen is shared, Maddie.
There we go. Got it.
All right, perfect. For people who are new, right? This is Crypto Quant. Again, that's one of the sites I like to check on all the time, especially for what we call the Bitcoin Premium, because like we just talked about, when the money is moving from the the little hand to the big hand, so to speak, or the big older wallet, you get to track this because you want to see what the bid support is. When the price did his little rally thing, we were closing the premium. And by the way, Grayscale is still dumping people little by little, but 500, 1,000 Bitcoin here and there, that's a lot of money, especially in a low liquidity market. So, and then it did this little rally all the way to here, almost negative 6%, which was great because it's been there a while. And then boom, dumped again. What does that mean? For those who are new, very simple, is that there is people right now buying Bitcoin at basically 12% lower than the price that you're seeing right now, which is 33.3. So if you were to do the quick math on that, right, 10% will be 3,300. So it's getting to a point where people are about to buy Bitcoin at sub 30K. And when I say about, I'm talking about literally starting tomorrow, because they can literally get it through through Grayscale, because of the shares, and also tied to the regular market. Well, this is important because I caught that today. I made an analysis. You guys saw Tesla started to dump because obviously, the whole ALLin, this and that, but there's a bigger story people are not realizing, because if you guys remember, Tesla made more money, right, in a quarter just from selling Bitcoin than all the other cars and stuff. Right? Remember that 200 million? But what people fail to realize is that ALLin started to buy Bitcoin right around here, 35K-ish. Now, why is that important? Very, very important.
He's in the hole.
Exactly. So they sold that 200 whatever million. That's what helped them make a profitable quarter. But now they have a strong decision to make. Now it's basically close to breaking even / in the hole, hundreds of millions of dollars, because he bought 1.5 billion. That's serious money. Not trying to create FUD, but just put 2 and 2 together. There's a high probability that he might dump the rest, because if this thing goes below sub K, he's going to be down hundreds and hundreds of millions, and that next earning is not going to be pretty. Now, sophisticated investors, people like me that play chess, understand that, and now I'm like, oh shit, that's what Tesla is dumping right now. People are seeing the trend. This is what's going on. This is where Bitcoin is trending. They got that shit on the balance sheet. It looks great when the price goes up. Remember that. But it looks horrible when the price goes down. This is why Michael Saylor's stuff got hammered. This is why Grayscale stuff got hammered, because if you run out of premium because there's no more sucker to buy, and the premium is going negative because people are getting out. And understand something. If people are getting out, that also means that people are selling at a loss, which is bad. But those people selling at a loss in the big institution, they actually believe, right, Wells, that they can buy back Bitcoin at 20K. So they're like, you know what? I'm going to write off my fucking loss. It's going to help me for my taxes. And I'm going to buy back that shit before the end of the year, much lower.
Yeah.
That's the key.
That's a great point.
Yes. So what does that tell you, Hexagon? Again, for free here. Shout out to the Quant gang. That tells you, that's a big indication that if that start to unwind and we find out next quarter or very soon, or there's going to be a leaked news that ALLin and the boys dumped the rest. Because remember, ALLin had the perfect excuse. What did he say? I didn't sell. Tesla did. What does that tell you? That TK has the perfect excuse. It's not my fault, it's them.
And I know how business works.
Yep. And I know how fucking business works. I know how company works, okay, at a high level. And make no fucking mistake. Now that shit is like toxic on the balance sheet.
Oh, yeah.
Because it was supposed to protect, now it's not. And by the way, they can dump it and then buy back a month later. People forget this is crypto.
It don't cost them nothing.
Nothing. It's remember how we used to brag about how fluid it is, liquidity in and out. Well, guess what? Big institution is also liquid for them too.
Yep.
So don't be surprised if certain long-term support are not hold. This is what's going to create the real cascade. So what we're seeing right now, what we're seeing right now here, not only is bad on a 4 hour, but the real volume hasn't really come up yet. So if this thing doesn't bounce, because on the 2 hours, which was funny, we had the best fake out ever. See this? Try to do a cross and then change back. On the 4 hour, it's just still bad. Get out of the triangle. And then you know me, I'm all about bigger time frame because I look at the DMI, right? Because DMI already told you the whole story way back when on the weekly chart right here. We crossed already. And again, for those who are new, why is DMI the best indicator? Because like Wells was talking about, it has nothing to do with price. Nothing. Because if the big institution or the market maker know where your stops are, they can just dance you around, liquidate you. Movement is what matters. So that's how you get to see what the market makers are doing. Are they pushing the price up, or are they trying to cool this shit down? And by the way, this is the most scariest thing. Hexagon, listen to this. Bitcoin can dump right now all the way here to 13,000 and still be bullish. I need you to understand that. This is how insane it is. It's a weekly chart. Like, it can do this and still continue. This is still technically a bull run. So once you know that this is happening here, and then you go on the daily chart, and I saw the same pattern. Again, looking at the DMI, what you're seeing here is looking very similar to what we had back in 2017, right? We had a similar type of movement. And in 2019 here too. Dumped here, did the little fake out. We might get a minute pump for the def cross, over there. But then after that, def. Same thing over here. Dump down, did a little relief rally, and then see you later. So the moment when this thing cross orange here, bearish, which it is clearly doing here, it's a wrap. So you need to understand what's happening here. And also look at the arcing. Yeah. Look at how violent the green is coming down. It's not like this when it's like kind of like smooth. It looks
the thing that I love about the three of you quantitative analysis guys with the giant brains, right? Mm-hmm. The thing that I love is that you guys are able to look at these markets that are not clear, right? They're not open. They're all controlled by centralized exchanges that wash trade in order to try to get that little bit of secrecy that they need in order to trick people, right? But just looking at the numbers, you're even able to tell what Bitcoin is going to do ahead of time, let alone think about Hex and what we know it's going to do, because it's a completely open market. When we have all the data, we can be even more certain, whereas with something where there's a lot of spots that we can't look at, right? It's pretty amazing. And shout out to everybody who's been donating here. We really appreciate it.
Because again, three important things, and I'm going to talk in general terms so average person can understand. It's just like business. Those people, that is literally their business model. This is how they make money. Remember, I said 3 sources of revenue. Number 1, getting people liquidated. I know it sounds crazy, but I need you to understand. That's why I'm going to talk like that. It's not. I feel bad for some people that lost their money, but I don't feel bad for those that we won and then we told you not to trade and you went to trade. Now you like yourself. That's on you. Again, about personal accountability. Hexagon, I told you all the time, right? We're not nice people. We're kind people. We tell you what to do. You don't do it. That's on you. So first move already happened. They liquidated the $12 billion. Cash in the bank. Life is great. Now they might deploy some of it to buy the dip to create a little, hey, come back here. Now they're working on plan number 2, which they do all the time, which is just trading volume, like Richard talks about all the time, because at every trade they get a commission. Understand that. It's literally highway robbery. They're making money 0.5% on the bid and on the ask. What that means is every time you trade in and out, just to make a profit, you need to make more than 3% on your trade. If not, you lost money. That's insane. This is also what Pulse is going to fix, because for decentralized exchange, that's the disgusting part about the fees. So they're working on that second play because obviously market is in fear, but more importantly, retail guy ran out of money. At the end of the day, he got liquidated. He's done. He cannot even, that's why when you hear bullish news, the price don't pump. It's not because it's manipulation. It's because the little guy blew the load already. He got no more money. And guess what? The little guy didn't want to go back to work. The little guy got no more money. He blew it up. Now the summer is here. People are going to go back to apply McDonald's and stuff again, because everybody, they couldn't get application because people thought they were the best traders in the world, right? Now reality just worked them up. Now they have to go back to get the money. So meanwhile, you look at pattern. So they're working on plan 2. This that you're seeing here with this strong arcing, it's look like this. Why is that important? Because sometimes if it's not as strong like this, you might be optimistic and be like, you know what? They might be able to pump it back up and then revert the thing. Kind of like back in, was it 2012? Like right around here, it was kind of like avoided. You know what I mean? Or like here, see? You can kind of save it. And then, but when you start an arc like this, or like this, or what we're seeing right now, like this is severe. Mathematically, sometime next week, I think maybe the 16 or the 17, we're going to have the def cross. More or less. And when you look at the pattern, you see the prices start to go down, but Elon and the board haven't really dumped yet. See, the volume is still low. you need to see volume like this. And when that next candle comes out, shit, people are gonna get washed out. And then when this is lost, you see that little red zone? This is the last savior. That's why. By the way, Maddie, you remember I drew this like months ago, back in January. That's the last line of defense. We can bounce around here. This is how the little guy gets liquidated more because he goes long, he gets stopped. He goes short, he gets stopped. And right now, because they ran out of money, the system is looking like, okay, I liquidated too many people now. I'm looking for the next best thing, which is volume. So where can I go to fill my bids? And if the big money, once again, right here, big money is telling you my bid is over here at 30K, take it or leave it. So now market makers are like, all right, everybody got liquidated already. Next up, 30K. Because that's where I need to go to catch some volume. Does that make sense?
Yeah.
That's why they got to play it. And then when you look at DMI, same thing. You thought it was about to cross. Nope. Bounce again. Right. To say, I'm not done. I'm not done dumping. And it's the same play you have. So right around here, we did the same thing. Went below. Dumped again one more time. And then right around here, which is the last hope. Let me explain this. There was a bear flag. This is very important because this is, I think, the most current to what we're about to see. There was a bear flag. We went below. It started to dump. But then here's the problem. Too many motherfuckers went short thinking they were so smart, not understanding that market makers know exactly what the fuck you are. So what did they do, Maddie? They engineer a fucking short squeeze. Pump the shit out of people. And look, markets still dump. So people were right. But the problem is, like Will's been saying, when you operate on centralized exchange, they know you're fucking stuck. They know where you are. So then you thought you were going short here. Then they stopped you. Then you put your stop maybe somewhere here. You think, oh, nice, it's going to reverse. And then they take you to the cleaner all the way here. And then you get liquidated. And because there's no more money, then they still dump the market. You still end up getting the death cross, right? So the macro change did not change. But they got to liquidate you first because remember, that's the first order of business. And then they dump. So this is why I tell people, be careful. Understand what we're saying. Understand what we're doing. But like what you said, don't trade. Don't go overly short because they're waiting for that. This is how they build a trap. Well, I want you to talk about that. It's very important. This is how they do short squeeze because they siphon all the liquidity. They know there's low liquidity. They make you think the price is dumping. And then if you go too much short, you become the next prey. Because the big investor, he's not shorting. He's just putting his bid order. He's just waiting to get filled. He knows that no matter what kind of manipulation the market maker trying to do, he's going to be okay. My bid is here. Take it or leave it. You might come close, flirt with me a couple of times, and go to the 4 hours.
Thank you to Hex Hound, $20 super chat. Crypto Hut with multiple super stickers there. Thank you for those. Gordon Ghetto at 1999. Good name there. Great stream. And,
this is awesome.
Yeah. Okay. And then Latin American Crypto. Please support the Quant Gang. Their content's free. Let's show them that we appreciate all their hard work on behalf of the community. And I'm pretty sure that that's why the numbers keep going up is because YouTube likes it when people are commenting and hitting the like button. I'm going to kick all of you out that haven't hit the like button yet. No more free riding.
Yep.
And so Karim, I know that you're showing me math and numbers, and that's usually important, right? But I heard that this time it's going to be different because of El Salvador, right?
Right. It's hilarious, and I was because people don't understand that this is the sad reality. You have to understand. At the end of the day, when you hear, I'm gonna give you an analogy. When you hear people like entities, endowment funds, like Harvard, like South United States, that have 15, 19, 20, 30 billion dollars, those people got more money than countries. I'm not saying that to make you feel bad. I need you to understand that if it's not a big country or a big endowment fund, whatever, I hate to tell it to you guys, it doesn't matter. It doesn't matter. It's not you don't have enough buying power to push the price up because you're failing to understand how high the fucking price went up. Guys, just a year ago, Bitcoin was 3,000, right? 3,000, $4,000. Like, I need you to understand, this is a different game. This is the reason why I waste my time going to crypto quant and whatever, because the people that can support this market at this kind of velocity is the big money, the real money. not the little countries. I'm sorry to tell you, but that's just breaking news. Because making legal tender, that's one thing. That's basically say, hey, I take your money, come and spend it. But that's hey, I'm gonna come and buy. Big difference. It's like, no offense, when you have, $20 buys, $50 buys, you're not gonna push the price. Those things matter when Bitcoin was in the hundreds of dollars, maybe $1,000. But at this level, I hate to break it to you guys, it doesn't matter. And it's always after the facts. And remember, velocity is the enemy. Price goes up when there is low velocity. Again, you don't sound like a breaking record. Richard already told you that. When this is like the IPO. When nobody fucking knows, that's when they pump the price. When everybody know, oh my God, we're gonna launch Uber, and then you become the fucking liquidity.
When was the market top? When Coinbase
exactly
issued their stock.
So, and I'm not blaming them. This is a good macro view, okay?
This is a great macro lesson.
Yeah,
exactly.
Totally.
El Salvador, those kind of things, it's going to matter in 2023, 2024. Why is that? Because it's going to be a domino effect. More country, more adoption, and eventually the big gun, which by the way, they're already in.
You know what's funny? After El Salvador came out with that news, Peru, Guatemala, I think, Honduras, maybe Brazil, a whole bunch of Latin American countries are jumping on the bandwagon now. But here's what people have to understand.
Exactly.
It costs more to transact in Bitcoin than it does for them people to survive a day. Meaning,
amen.
The average person will not be conducting any Bitcoin transactions, thereby letting you know that this is strictly a move for government to take crypto away from the morons dumb enough to transact in those countries under that parameter, right? Because here's the thing you have to understand. They can't track shit, right? So you have to tell them you're doing it.
Exactly.
Very important people understand that.
And by the way, I'm not blaming those countries. This is a great source of revenue. Okay?
Well, no, it is what it is, bro.
Exactly.
I'm fucking Hispanic.
Oh,
so everybody can kiss my ass. It is what it is. It is what it is, bro. You know what I'm saying?
I wanted to make sure people don't take it wrong.
Yeah, but that's the thing. It's like you talking about African countries. It's the same.
Exactly. Yeah, in my country in Africa, same shit. Yeah,
it's the same level of poor. It's no different.
Yep.
Just because you can fly there because it's closed, don't mean it's different. People think it's different because they can fly there. Nah, motherfuckers is still very poor. I'm sorry. And the country's still being exploited, just like the countries in Africa. It's all the same thing. It's just closer. That's all.
Come on, guys. Don't you know how the Lightning Network works?
Oh, man.
Come on, that's going to save
us, Maddie, you know what's even more disgusting?
Because you lock up your money and then you can't spend it. That's the Lightning Network, right? Like, that's gonna help poor people to lock up their money and not get interest on it.
You're trying to kill me over here.
That's
Manny, let me just say this. If you thought that, when you go to a country that exchange rates were bad, wait until you see how those people are being raped. It's not even funny, dude. Like, because they hide it. It's just like the comment. They hide it in the bid and the ass. They tell you there's no fee, but it's not true.
Yeah, they put a spread on that. You're buying at a markup.
You're talking about people that may be able to invest like $100 a month. That's reality of life. So when you get a bid where it's like the real price is maybe it's $100, but then you're getting a bid and ask spread of like 105 to 110. That's 10% of your monthly investment. You get what I'm saying? So they run the fucking thing way too expensive so that little 2%, 3% spread that they have, it becomes a big deal. When Bitcoin is $3,000, that 2% is nothing to some degree. When it's 50, 60, whatever, it's a big difference. So the reason why they push the price up to that level is so that when they tell you, Maddie, come on in, there's no fee, No, they fuck you with the spread. That's how they fucking do it. This is what I told you. Revenue number 2. First, they got to get the degens. Because the degens, they got all this free money. They don't know, or they think they're going to get rich overnight. They go take loans. They got to take this money first. That's the easiest money. Again, like we say all the time, don't spend a dime if you can get it for the nickel. But if you run out of the nickels, you got to spend the dime. You got to do a little bit more effort. You got to, and that's what they're doing right now. It's a little bit more sophisticated now. But make no mistake, that's the play. And then after they're done dumping and washing and getting everything, they're going to announce more countries and all this other stuff, get everybody back on the bus, right? And then they're going to run into the 6 figures. And then we're going to do it again. And then we're going to tell you more country got on board. Like, no offense to people, but I need you guys to understand. news about endowment funds, news about, like, why we care about the Bitcoin premium? Because back in the day, when there was only fucking Grayscale, this shit was great. But now you got Canada, now you got all the other fucking other places that have some level of money. In Asia too, they're sucking some of that premium. This is why Grayscale got cut with their pens down, because they didn't anticipate it. It's not really their fault. They thought the regulator would do the release the what's it called? Oh, shit. The what's the thing we've been waiting for Bitcoin for fucking years? Oh man, I forget the name. The SEC is supposed to approve that. Fuck. What's it called?
Wait, what?
The thing that the SEC is supposed to approve for Bitcoin already. I'm blinking. The
ETF?
ETF. Yeah. Oh my God, yes.
Never gonna approve
the
that,
market,
bro.
and then we're gonna dump it on the market when the ETF comes in. Level. They didn't anticipate that it would take longer than expected. They didn't anticipate that Canada would beat the punch.
I forgot about that.
All of that demand, because if you're United States and you're big, you got funds, you can invest in Canada, no big deal. You can invest in Europe, no big deal. So those other people came in earlier, sucked some of that liquidity that they were supposed to get. This is why the premium crashed faster than expected. Now it's too late. Now people are panic selling. When you have institution panic dumping to some degree, that's where you get those crazy negative premium. But those who dump over here, they don't care, because you got to understand something. Those people are ruthless, and they're also ruthless against each other. They're smelling blood in the water. If an institution, hedge fund, can take out another hedge fund, they will fucking do it in a heartbeat. They don't care. They're like, you bought late. Oh, you bought at 50K. Oh, you're worried about your fund blowing up. Guess what? I'm gonna dump. I'm gonna make you blow up, because then you blow up, then I buy back cheaper. Do you understand? Even some Bitcoin maximally, they will never fucking tell you that. They'll tell you, hold on. Those motherfuckers are dumping on the price because they know those market cycles. There's a reason why people like Sunny Decrees are no longer here. They disappear. They go on vacation, right? So better yet, some of them even short the market and they tell you, no, because they know this was the top. They're just not going to tell you that. You know what I mean? A few of them are really clueless, but some of them that's been there to many cycles, they know that. But they don't want to tell you because they got to dump first before you. So only here the coin, because we don't care which are the facts, because we know Hex is better. Because all that time here, let me go back to the chart. All that wasting energy since the top, Hexicans, we're getting paid every day. Clockwork. It might take us 6 months, a year, whatever, to go back to a new all-time high. It doesn't matter. We're getting paid every day. That's the fundamental difference. I'm just letting you guys know so you understand that the bloodbath may just only sadly just beginning, because more volume might actually show up. Same thing on the Ethereum chart. Remember my famous thing I told you guys, look out the long-term trend. It's very close to breaking out again. Sadly.
Oh, look at those moving averages.
So, yeah, because it broke below, test, rejected, rejected.
The bottom one, the red one, is the slope is decreasing in the end. That's very important. I talk about that all the time.
And here's the fucked up part. I need you guys to understand. Ethereum can dump right now onto $1,800. I know it sounds scary, but I need you to understand. It can dump to $1,800 right now and still be bullish. Look at the DMI.
Very true.
He made his move, and he's ready to make another move. Again, let me zoom out. Go back. This is nothing new. This is the one that I used for my tweet. I told you guys, it's the same play back over here. When the long-term trend is broken, fell below, retest, fell. And from here, I need you guys to understand. It sounds like it's small. This is a 50% move to the downside. This is no joke. Actually, 53%. Literally. And the reason why it's scary is because next week or this week, we got the whole drama, EIP, blah, blah, blah. Guys, the fucking fee is low right now. EIP 155 was relevant when people had money before they got all fucking liquidated. It made sense when the fees were like $200-$300, because the fee burning is going to create enough value to offset the inflation. That was the whole point. But now we're getting stupidly low gas. No, let me go back. Let me see if I can pull it up.
I just did a send for like 50 cents, bro.
Yeah, hold on.
It's just crazy right now. It's free 99. Get all your transactions in before
Look at
Paul
this.
goes live.
You can't make this shit up. Look at how fucking low. Nobody is transacting. Why? Because they all got blown up. They got no money.
Yeah, there's no mining because there's no transactions.
Yes. And then guess what? When I told you, rule number one, same thing for DeFi. Get the people liquidated. They got liquidated.
Mission accomplished.
Yeah. Rule number two, do the trading volume. Already done, because they got there's less volume here compared to the traditional. Mission accomplished. And then rule motherfucking three. When we can't make money from 1 and 2, what do? We got all this supply. Because remember, when you get liquidated, they get your coins, they get your crypto. They don't get necessarily the USD right away. Now they're going to push the price back where it needs to be to find the next volume. And the next volume can only come for those who have the money to actually buy. And those are the sophisticated investors or the long-term thinker. And they're not stupid because they know how dirty market makers are. Therefore, they got to put their bid somewhere where they know that no matter what, I'm going to protect my bid. And if the price goes below that, that's fine. I'm going to be in accumulation zone because those are the most patient ones. Those are the snipers. And the snipers, they don't waste money. So back over here, and this is why it's scary, because this move that you're seeing here, when you break that trend, it's a wrap, 50% to the downside. And although I love Ethereum, the problem is this motherfucker here called Bitcoin is going to be the catalyst because it's going to cascade from here because a lot of Ethereum pairs are coming from Bitcoin. And then let me go back to the 4 hours. Like, it's literally textbook. Look at that. We kissed it a couple of times, but this is the end of the tunnel. If it doesn't do what it's supposed to do, it's see you later. If Bitcoin go to 30K right now, this thing will crack and then see you later. Look, this is a long-term trend for months. And as you know, Wells can talk about it, Gunter too. The more you touch the trend, the danger it is. And this is different. This time here, we quickly went back up. This time here, quickly went back up. This one, we've been hanging out here for way too long.
Yeah, this is going to break. Every time you hit the support, it just weakens it. Every touch weakens the support.
Exactly. And this time around, it's about to do that same little kind of fake out I saw here on Bitcoin on the 2-hour chart, which was, it looks like it's about to cross, and then it's a pump fake, and then you see you later. The same way when you go back to on the daily chart, and you go to Ethereum, you see that same thing where it could literally break, go to 1800, and then just bounce and still be bullish, and that's okay. Just kind of like how it did a play around kind of like here, whatever, and back up. So just be aware of that. Now, why does all this thing matters to me on the big scheme of things? It's because the most beautiful charts right here, which we all like to talk about, is just doing his own thing. And what we do always in the bear market, this is when we do one of this. So it's literally, I am telling you, you got sophisticated investors out there just waiting for the crack. Because some people are thinking, okay, Ethereum's going to do one more move. I'm going to get it. But if that move break, they're going to be like, fuck this. Let's just get the yield and whatever. Right? Maddie, you were at the conference. If you remember the interview, I caught that on YouTube from Kevin O'Leary and something. Not that I care, but those guys already know. In the bear market, it's a yield game. And who got the best yield?
You know who.
Uh-huh.
And it ain't the Ghostbusters, motherfucker.
Exactly. So this is literally the last straw, the last detonator. So when that thing cracked, don't be surprised if we go to 10 cents. We're telling all these other things for you to understand what is happening. What is the DMI is already telling you? He already recessed, ready to go. It's just a matter of time. And it's not Ethereum's fault. It's just understanding the macro because Bitcoin is going to drag it down. We're going to hear about EIP. It's going to make the buzz. Yeah. And people are going to realize it's not deflationary. Why? Because there's no money. Nobody's trading.
And because the Ethereum Foundation keeps printing more Ethereum. So they're only talking about deflating the Ethereum that comes from fees.
And homeboy Vitalik, just like last time, dumped the price here, right? With the Shiba Inu and all this other stuff. Oh, yeah. I mean, you can't make this shit up. Oh, they always used to dump the top. Hey, come on now.
So the question is, of the three mechanisms that you just described, Karim, which ones are they able to pull in hex? Are they able to get the degenerates to go long and short and lose all their money? No. Are they able to play whale games? No.
This is when I bring the Uniswap chart because that one is also good for that. So a couple of different things. Look at how beautiful this thing. If you guys remember, this is what I call the Fibonacci extensions, right? So to make sure people understand, not only we're traveling perfectly here, but you got all kinds of bullish stuff going on here. Massive bull flag, cool continuation. We can just trade sideways when everybody dumps. That's still bullish because remember, the number one value of hex is the yield. And if we literally do the flagpole, the next target just from this is right around like 13 cents, 11 to 13 cents. And then there's a continuation because every time there is the big dump, this is when we literally just kind of like liberate and just push. So when you see that, let me just go back to the regular phone. Yep. When you see that, you understand that the trend is your friend. And then still low liquidity because guess what? Who's going to dump the price? You don't have any. Okay. When you go here too, remind everybody, Hex that vision, do a refresher here. Liquidity just keep getting low and low and low. The big stakes is mainly OA stake and then big long-term investors who are just pushing share rate, rightfully so. We're still above that 1,000, chilling, doing our thing, and understanding that it's the bear market. I just need to make more coins, leave off the yield, and life is great, right? So once you understand that, and you understand that staking average is constantly going up, all the bullish signals, because it's directly from the blockchain, is telling you we're just getting harder and harder. And look, those are just big stakes just to push share rate. There's almost no liquidity left. So when you compare that, you add the fact that we are 25 million and still trending down less and less. When you compare also on the DMI, perfect. Look at this. You can't make this shit up. Perfect reset. I told you guys the most violent move on the DMI is when everything collides, ready to go. And it's already reset because Hex always likes to do up and to the right. So we were very, very bullish. This is when we got that big bar. Now we cool off. We're ready to go.
Hey,
Even
just a
RSI.
question for you.
Yeah, go ahead.
Sorry to interrupt you. So why is the DMI so important? Like, I know you guys talk about it a lot, but like, can you break it down in just like a very like simple way to like understand?
Perfect. I'm gonna use Bitcoin as a perfect example. The DMI is, to me, it is my favorite indicator, and I'm gonna explain that it's very important. And the most violent way to understand what's gonna happen on the DMI is on the weekly chart, because as a value investor, which is very important, not a day trader, you want to try to minimize the amount of, for lack of a better word, manipulation. There's always going to be some sort of manipulation. You just want manipulation that you understand that's going to benefit you because you know what's about to happen. Because it's a movement indicator. Price can be faked, right? Somebody can push the price certain things with low liquidity just to create fear, certain things and this and that. And then the DMI tracks how much is the momentum, how much is being sold, how much is being bought. So even though they dance up and down, you know where the long-term trend is. The same way, when you have a strong bull market, you get that. The blue means buying pressure. And then the red follows to say not only is a lot of buying as the volume increase, but it's consistent buying, because the red is also important, which shows how much consistently more buying than selling is done. And it's a more powerful indicator because it kind of tells you about price, because blue means that there's more buying than selling, so price goes up. Red tells you about the intensity, so it acts like an RSI. And more importantly, it's telling you stuff that the chart cannot fake. And it basically allows me to know what the market makers are doing, because those are the only motherfuckers that matters. Everybody else, they're just chickens. Market makers are the people to be feared, because those are the ones, they're making money. It's not even funny. Those are the people, what's talk about? Those are the people that can buy like $200 million penthouse, like it's like a fucking, buying a pizza or something. You know what I mean? It's just the money that they make is insane. They make money every day. They're constantly buying and selling. Those are the people that Richard talks about. Like, the more volume you see, the more money they make. They always win. They're on the other side of your trade every time.
Yeah. So market maker's job is just basically to facilitate the transactions on both sides of the tape, whether you're buying or selling, and they're to buy or sell to you.
Yes.
That's it.
Those are the ultimate whales. Forget that.
Yeah.
What is the biggest whale?
To be a market maker, you have to be a whale, because you can afford to make a market, right? Yeah. That implies you have a sizable book, because you're providing liquidity to the marketplace.
Yes.
Right. That's the whole point of becoming a liquidity provider.
Yes.
Right. That's exactly what that is. Yeah. That's exactly right. You can't be a liquidity provider without inventory, right? And inventory is your product, in this case being crypto. So that's how that works, right? If you don't have, like, let's say you want to be an Ethereum liquidity provider on some order book somewhere, whatever, right? Like, let's say you want to be a liquidity provider versus Hex. You got to have that equivalent dollar amount in both coins. So if you got 50 million of Ethereum, you'll have to take 25 million and convert that into Hex in order to provide liquidity for Hex. That's how that works.
And the reason why they're important is because you can actually turn a market maker into your best friend if you get out of his fucking way, because no matter what you do, he's going to tell you, this is where I'm going. This is where the train is going.
Yeah, they don't give a shit.
So once you understand that, you're going to have a way better time. And then you're actually going to be like best friends with them almost, like, because they're telling you what is happening. And the DMI is, going to answer your question, is the best indicator that tells you what the market maker is doing. The reason why Wells and I were able to spot what's about to happen is because, number one, we spot the wake-off pattern distribution. Why is that? Because market makers, they use those patterns to create those distributions event. So we caught that already because it's moving like that. Because when a market moves to a certain T at this kind of level, it has to be, I don't want to use the word manipulate, but it's literally like textbook. Somebody is telling the price to go there because it's literally painting the chart, so to speak. Then you add that, plus you add the DMI, which is telling you what it's doing. Like over here, price go up, down, this and that. You keep seeing this strong volume. Oh, we're riding. But then right around here, when you start to see, it's still blue, but the volume start to go down. The intensity of the buying is start to go down. This is when you know, market makers say, okay, it's time to pull the plug. But they can't just do it right away, because remember, the bigger the fish is, the more he can be noticed. So he has to be able to do it in a certain way that you don't even know he's there. But you cannot fake the DMI. Because right now, that's what's happening, is distribution. You got idiots thinking we're going to go back to 50K, not understanding that the market maker is not done getting rid of inventory until this shit cools off, which is exactly what happened here.
So what's the orange line then?
Orange line sale.
Oh,
blue is buying pressure, orange is selling pressure, and this is intensity. So right around here, we were talking about with Wells, it was like, the cat is out of the bag. Forget about it. Because it was a combination of all the event, all the indicator, the wake-off pattern. And then when I saw this cross, which I literally saw, it caused all the tops. It's crazy.
Yeah, but hold on real quick. What about all the news, all the headlines? I mean, we spend so much time just talking about those indicators. And I said it. That's my most favorite indicator, because guess what?
Yep.
That tells you how bad it's gonna be. That tells you when it's coming. That tells you everything. And oh my God, what was the late? What was the thing that I think in like into the end of March, early April? I think even Paris Hilton was freaking wearing Bitcoin glasses somewhere. Like, it was just getting disgusting, man.
Exactly.
Like, come on.
She went to the conference.
Yep. And then Gunter, what's crazy is that when you see this little dancing over here, when you see this little dancing over here, people think, it's just a consolidation. We're going to go back up. They're failing to understand that market makers are floating. And the way the DMI is catching him is by saying he's buying, but he's doing diminishing return. You see, it's kind of like what RSI will tell you. But instead of having so many fucking indicators, it literally just tells you blue means buy. So if blue reverse, that means sell. And then when it cross, that means it's game over. Because that's telling you market maker is changing the game.
That means
he's buyers are buying less than he's selling.
Over.
Yes. He's telling you this is where the train is going. Either get with the program or get wrecked. And idiots out there won't tell you, narrative, but so-and-so just bought. Dude, no. The motherfuckers, they control the fucking market. You need to understand that. So instead of being butthurt, understand what's being done so you can play it to your advantage. And then guess what? Now patience is your best friend, because you got to wait for the tide to turn. And then this is where he's going to find some type of cool-off point, just like here. Because, again, he called the top here. He called the top way back here, too. So, and this is why it's telling you we're going to go dance around the support right around, 29,000, which is literally where the bid support is from the grayscale premium. I mean, you can't fuck this shit up. Negative 12% of 33, 38, that's roughly 29K. I mean, it's literally textbook. So it's literally telling you where the price is going. I don't care what anybody and those little influencers are telling you, those idiots, they don't know what's going on. The big gun is the only people that can bring the bid support. And they are the one owning the pawn shop right now. And they're telling you, this is where I'm willing to buy. So once you understand that, prepare yourself. Now, if the indicator change, that's great, but understand the bigger picture. So DMI gives you the big picture. So you don't be stressed on the day-to-day. And then, like Wells perfectly said, when the news event comes in, we're literally laughing about it because we fucking expect it. Because when you see this cross here, okay, load the FUD. I hear more of that shit. The same way back here, bullish news after bullish news. Oh my God, so-and-so, They're coming in. When they're like, motherfucker already bought the dip long fucking time ago. because sideways is where true accumulation happens. They were buying that shit over here. Then they created that little event over here, whatever. And then they got that. And then they were running. Now they're offloading. They're offloading. Make no mistake. And they're going to buy back below the moving average because historically, that's the best buy. Same way here at 6K. Buy below the moving average.
Yeah. Damn. You know what's even better indicator than DMI is like when your average coworker or sibling who doesn't give two fucks about crypto comes to you and be like, I'm ready to be a buyer. Like, how do I get in? That's what I'm doing. I was like, oh, that's the top. Like, that's already we've already reached the top. Price is already coming down.
Yeah, I think even my sister mentioned Doge and some shit. I was like, what the hell is going on, man? Like, get out of here with this crap.
I know, and people are bleeding right now, especially when below 30 cents. But you see, Gunter, this is why on the Quant game, what we do, which is the ultimate thing, is we like to talk about what's called confluence. We never just show up with one thing. That'd be too fucking easy because it's not just a ride or die. It's just a combination of so many factors. Because we told people all the time, play chess, think the macro. So we were talking about not just DMI. We're talking about what you just said about the people, the euphoria, the NFT frenzy, crypto quant, what's going on, where are people buying? Because when you hear about, $2 billion worth of whatever, but the dip, that's bad. You need the little guy because the little guy is with the frenzy and the FOMO is the one actually pushing the price because the market maker will just sell to them. Market maker just put the limit order and wait for the little guy to come push the price up. That's what they don't understand. Because they always make money. They just place and they just make the trade when you're ready. And then if you're no longer coming in because they already got you liquidated, took all your money, and they remember, they got to make money every day. They got to make a certain amount of daily money. I'm talking about they make millions a day. It's so fucked up. If the daily profit goes too low, they push the price down to the next level so we can create a new dance again because they need a certain daily active volume. If it goes below that, they'll just let it dump. They'll just push another 500 or 1,000 Bitcoin in there just to push the price down and then to see how people react. Because they need you at some point to go long or shorts. They can't just let the market go sideways too low. They only allow sideways when there's accumulation. Because some people will buy during sideways. But if there's no accumulation and it's sideways and there's no volume, make no mistake. They're going to push it down. They're going to throw another narrative just to create that interaction again because they constantly need to get paid. Does that make sense? And this is what separates the little guy from the big guy because the big guy understands who the real boogeyman is that they got to be afraid of. So, but then because they understand that, they know where to put their bid support and just chill. Wait for the market maker to come fill them, which will always happen. But they're just in the low priority list because they got to do 1 and 2 first before they get to 3. Just like in Ethereum, right? Based on your gas fee, the miner decide if it picks up your transactions or not. But if you know that, like Richard said, bear market fixes it, you can put your fucking trade, just wait. You eventually, right? The transaction gets picked and then filled. It's the same shit. Now, right here, look at this. On the 4 hour, you see the same pattern. What you're seeing here, again, DMI accelerating right now to the negative side. It's the same shit you saw here. Same acceleration. It started like this, did a little dip, dance, and then collapse. So we're starting.
I had some comments about the like, talk about yield farming. It sounds like the whales are just harvesting all these plebs and all their money, right? Because when the price goes up, then they just charge them more, right? Like that's all that's happening is
this is how they do it. This is how
market manipulation, like the theme that you were talking about earlier. And I wanted to shout out KCW. Congratulations on your P share. That's outstanding.
Hey,
huge.
There you go. Awesome.
That's really awesome.
So this is how they do it in DeFi. This is the next level fucked up because they can't fully control. That's why you need something completely correlated like Hex. Like obviously Wells got that beautiful chart to show you about how we're not correlated. That's why it's so fucking important because that's how you actually truly protect yourself. That's why I can't invest in another DeFi product. Because there's no product, there's only projects. Let's start with that. But also, not because I'm a maximum, this and that. No, because I understand that all those motherfuckers are either in cahoot or influenced by those other pairs. They don't understand about how reflexivity can actually work against you. So it all starts with Bitcoin. Because Bitcoin, by dumping, is going to affect Ethereum. And then what's going to happen is Ethereum is going to break the trend. And when Ethereum break the trend, like this event here, when Ethereum broke that trend over here, like right around here, and then dumped, what did we see in the market? Fees went to the fucking roof, right? On purpose. Why is that? Because first they create the event. They dump that shit because people got complacent here. Little dead cat. Oh, we're going back up. And then they dump that shit. And because they dumped that shit, all the Ethereum pairs started to go red. So everybody wants to get out, right? And then you got all the liquidation bots that kicks in, miners and all this stuff because they want to push the price higher for the fees. So they harness you. So they purposely create those high fees because number one, they want to get out first, right? Number two, big institutions who are in DeFi, make no mistake, a lot of them are, and some people will have high network individuals. They can afford the $300 fee because they're gonna do a fucking $200,000, $300,000, $500,000 swap. So what's $300, right, Matt? It's nothing to them. So them plus the bots are gonna create the high volume, and they do that on purpose so they trap the retail investor. Because the retail investor, that's just sad, man. I need you guys to understand this. Because the retail investor, maybe he only has like $1,000 or $500. He's not going to be willing to pay $200-$300 fee. Why? Because mathematically, he's automatically losing 30%. So he has to be mathematically convinced that the dump is going to be greater than the fee that he's about to pay. Let me say that again, very slow. The retail investor, to make sense of the trade, has to be convinced that the dump is going to be greater than the fee that he's about to pay. So if he does the math and he's about to pay $200-$300 fee on a $1,000 swap because that's what he has to believe that the price is going to dump 30%. Because if he does not, he's going to be more at loss. And by the way, that's the smart one. The one that's not, price only 10% swap. But guess what? You got charged fucking 30%. For the fee, the privilege to swap, plus you lost 10% of your value too. Make sense? So now this is how you're getting harvested. So they create this on purpose. They push the gas price. They dump the price to create the panic. And then that's when you're done. To the point where then you run out of money. So that's why it's hesitating right now because nobody's swapping because they all got liquidated. So what they're going to do, they got all those tokens. Now they're going to phase two. Phase two is trading volume, which is, again, look how low it is. Look at this bar here. This is when they got people liquidated. They got all the Ethereum here. And now they're doing the trading, the little volume, getting people on the day-to-day. And now that is drying up and nobody's swapping because it's pitifully low. I mean, look at this. Wells is right. Look at this. Like $5. That's like unheard of almost. You know what I mean? Or maybe they heard of Pulse. That's why. But then, Maddie, they're going for step 3. And step 3 is they harness all that Ethereum over here. All of that shit. Now they're ready to drop the fucking thing because there's no more buyers. Because if buyers were coming in, this would have looked like this and rally back up, right? Or like this, rally back up. But this is still sideways for a while. So there's a high probability, again, no perfection, but in the balance of probability, there's a high probability that this is going to drop, and the panic that this is going to create is going to be insane. Just by looking at the long-term trend, the way this pattern works, and Wells Gunter, you can chime in. But technically, when something like this break, guys, the next support is either here, where the last of the break, or here. And this is scary. This is a $750 Ethereum. That would be nasty.
Yeah,
I like to believe that doesn't happen, but make no mistake. My first stop is here. Where is it? 1800. Where's 1800? Right around here, because it's a long-term trend here, and it perfectly coincides with the support on the daily chart, which is right around here. But Wells already told you that things start to arc down, which is no good.
So let's play a little game. What do you guys think the Ethereum end of year price is going to be?
Well, it's not looking good. I mean, if I had to pick a number, I'd say below 1,500, probably about 1,200.
That's a solid bet.
1,000.
I would say possibly that, because, Matty, here's the thing. I'm a little bit optimistic about Ethereum because I think it's going to trend to swap Bitcoin. This is another one that I follow very closely is this chart here. The ETH to BTC ratio still holding strong. That's very good. That's very bullish. Because typically, this is what I told you guys last week, and I'm double down again. This is more of a Bitcoin bear market than an Ethereum bear market. Ethereum, in all balance probability, is actually doing well. The reason why the price is getting smacked down is because it's also still relying on Bitcoin, but it's still catching up. That's a strong move. And this is about to be a bullish cross. You know what I mean? But then again, if Bitcoin dump hardcore, this shit might reverse. So that's the X factor. If you continue to blow and make a new all-time high and go, This is the best case scenario. We want Ethereum to smack Bitcoin in ratio, and then Hex is going to smack Ethereum, and this is how we get the dollar Hex faster. But then again, DMI is my indicator. DMI is telling me, Karim, you ran high already, and you might be crossing, because I told you guys, right around here, look at this. When you cross below the red and we lose intensity, it's the beginning of the end. And this is the ratio Ethereum to Bitcoin. Because if Bitcoin crashed like crazy, dominance is going to go back up because all the bots are going to liquidate everything to go buy the Bitcoin dip, because that's just how the market is. There's too many fucking Bitcoin pair to Ethereum or whatever. This is where reflexivity works against us.
So let's make sure everybody gets their number in.
Yes.
We do want to make it a game, you know?
Yeah,
so,
and this is why Hex having a strong pair to USD is sheltered from that reflexivity. So right now it's looking good. But I'm looking for this cross here. I need blue to stay above red, which is intensity.
Karim wants to get the number right on, like
yes.
Perfect.
because to me, I don't look at the actual dollar amount. I look at crosses. If it cross, I'm like, see you later. I literally just sell, and then I see you in weeks, months. Look at here. When that cross happened, imagine, Maddie, you made that play, right? June 19th, which is literally possibly this month, right? June 19th, peak of the euphoria. You're going to hear about EIP, blah, 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 blah. If this shit cross, never to be seen again for years. That's how nasty it is, because it pumped pretty high. Right now, it's okay. My question is, are we kind of here and still dancing, which means we might go do a double top and go for another run, meaning this can go here? Or are we going to cross below? And if we cross below, it's a wrap. If we cross below, it's going to look like this. And if it looks like this, dominance crash, which means Bitcoin is dragging it down. So that's why I'm looking at that. But back to Ethereum price, I would say the safe bet is what Wells says perfectly. So I look at the weekly chart, because you're talking about end of the year. So I got to look at the weekly chart. Ethereum for me is going to remain bullish. But I need people to understand bullish means that right now, if the price crashed to $1,200,
that's like that's about a dip level, what I'm talking about.
Yep.
Yeah.
And I need you guys to understand, it can dump all the way down. I know it sounds scary. It can dump all the way down to 600 and still technically be bullish.
Yeah, now, actually, yes.
Now, here's the good news. Here's the good news. I'm expecting the red line to continue to travel higher because the price is much higher. So if we're lucky, see July, August, September, October, November, December, right around here, end of year, if we're lucky, red's going to go over here. That's perfect. It's going to come here. And like Wells perfectly said, 1,200 range by the end.
Let's remember that it was just about a year ago that, or it's just for big payday. Matter of fact, not even a year ago, Ethereum was at $400. So 6 months ago.
Exactly. A year ago, some of us bought it for $100 or $120.
Yeah.
And again, this is very important. Hex clip, if you're watching, catch this. It's very important. We're going to predict the future again because you guys love it so much. Just to show you how much I do not give a fuck. I do not give a fuck about the price. I need you guys to understand how I trade, and I can go to work, make money, and never look at the chart and just come hang out on Telegram. It's literally like the Bitcoin play that we predicted months ago. We're going to do it here for Ethereum because it's just a time delay. Going back for the new people.
Yeah, it is a time
delay. Not going to look at the chart. What did we say? We said if DMI cross, it's a wrap. See you later, bear market. Just like here. Just like here. Now back to Ethereum, same fucking thing. It's cooking right now. I need you to understand. Look at what DMI is doing. So fucking good. Karim, we ran. Red follow me. Intensity. And guess what? Fucking Vitalik and the boy dumped it, right? Got all the free money. Made the fucking top. Just like back here. Right? And then what happened? It started to trend down. It's losing momentum. People can tell you we're going to go to $10,000 Ethereum. I don't give a fuck. DMI is telling me, Karim, nobody's buying right now. There is more sell than buy. People are rotating money out. Some of the money came from Bitcoin, but it's not enough. If the liquidity exit, what you're seeing here perfectly on the weekly chart is what you're seeing here. This is the move. It's going to do this. It's going to touch the green. Green is right around 1,200. DMI is going to come right around here. Textbook. And then if that shit crosses, little fake out here, tried to relief rally, but then failed. And it's probably because Bitcoin dumped hard. So he pushed it down. And what happened? The moment that shit crossed, bear market. See you later. Guys, this is 2018. 2018, June 4th. And then from here, never to be seen for like fucking 2 years. Now, why is that important? Same play. Bull market, cross blue. Perfect. Textbook. Let's run. We run. Shit. Vitalik dump on us. Bitcoin is doing some bullshit. Guess what? The intensity start to trend down. But lucky us, we haven't crossed yet. But make no fucking mistake. We're very close. Very close. So watch this. You better hope. This is a two scenario. You better hope that here is here. Like it's doing a fake out, stay above, and then run one more to give you a second chance. For some of you out there, I know you're fucking out there, not staking your fucking hex. Actually, should keeping that Ethereum, thinking you're gonna make more money, hoping for another $3,500 Ethereum that you may never fucking see. I'm here to tell you, Quant gang, if this thing doesn't behave like this and run again, you're not gonna get your $4,000 Ethereum ever again. If this shit cross and behave like here, then look at this. Let me draw this again. I need people to see. This is fucking negative. What is it? Negative 82%, people. 82%. You're complaining about $2,400 Ethereum because you're greedy for the $3,500 Ethereum, and guess what? You might end up getting Ethereum back to fucking 84% below. So what is it? $800 ish. So I need you to understand. This is why DMI is so powerful. You don't need to worry about the day-to-day bullshit. And Gunter, like I tell many people, weekly chart is the most powerful thing for the DMI because it doesn't care about price. It looks at movement. It's looking at what is the market maker doing. The market maker right now is cashing the fuck out. He's doing it in the way people don't see, but the DMI is always able to catch him. Now,
thank you so much to Nemorians for the $50 super chat.
You're very welcome.
Hashtag for Hexkind. That kind of sounds like for mankind.
Amen.
With hex in it.
Welcome.
So I love that.
So to recap, Hexagon predicting the future, right? 2 outcomes. Very simple. So basic, everybody can do it. If DMI doesn't cross bearish, meaning orange doesn't go below above blue, we might get lucky. We dodge the bullet. That means we're gonna be here. Which means, like here, we got a little dumpy. Then we went back to all-time high, did the bull flag, and then took off. Same thing here. That means we saved the day, went back to 4K, and then went to 6,000. And then, lucky us, the Ethereum dominance continued to fucking explode. Bullish cross, yada, yada. Everything is good. Hallelujah. EIP. Life is good. But I put that probability at fucking maybe 20%. 80% is scenario 2, which is, because Bitcoin already did it, is we're basically right here. We're about to do right here. Creeping, and then dump. Because this kind of rising wedge here is the same rising wedge we have here. You can't make this shit up. Textbook. Then we dump once. We touch the green line. Everybody think, oh, it's going to go back up. It's going to go back up. Not understanding that DMI already crushed bearish. Then you get the other fake out one more time. And then the market maker just fucking unload on you. So you just need to watch this shit like a hawk. Because in Bitcoin, it already happened. Because in the bull market, it never does. It never. That's how good DMI is. It never does it. Never. The moment it does it, see you later. Beginning or the end.
Hey, when the founder is dumping his coins,
shit, that's
on your head.
Facts.
Right?
Facts.
I mean, why are you buying? Why are you buying? If he controls supply as the controlling entity and he's dumping the coins on your head, why are you still bullish?
Yeah. Shit. Wells, he's probably watching the fucking stream too. Shit. Those 5,000 views.
Probably is.
You're watching. We know you're watching right now. You know what time it is. Because they know because the DMI is the best because you're not worried about price. You're looking at is the money coming in or is the money coming out? That's the key. Because Richard already told you, when liquidity gets pulled, the problem, it affects all the other pair. And the reason why, like I say, it's more 80% bearish is because this motherfucker called Bitcoin is going to drag everybody down. And that's why we're trying to bring you confluence to not just one thing. We say, look at this, look at that, look at how hype the market is. And again, very important, because the premium is still negative, and you know where the next bid support is, because those are the people that can actually afford to buy Bitcoin. And if those people are telling you, I'm willing to buy only at 30K, where the next support is, that tells you that it's going to create this cascade effect to continue, and then it's going to just drag it down. So I hope people really understand that that's the key. Stick to the thing that works, right? Look at this guy over here. Look at this. Beautiful. Weekly chart to show you how nasty this is. This is Hex to USD, right? Obviously. It's really up to the fucking right. Look at the intensity. What does that fucking tell you? And by the way, make no mistake, we also have market makers in Hex too. Our biggest, most friendlier market maker is called OA. OA already tell you, get along with the fucking program. It's up and to the fucking right. Get on with the ride or get liquidated, meaning we're going to buy you out and then we're just going to fucking, like the people that learned what we were, 4,000 of a penny, 7,000 of a penny, penny and a half. The market maker is telling you what is going on. You barely see orange barely getting up, barely. It's telling you what is going on. Same thing when you look at on the Hex ETH overall. Look at that, grinding, chilling. This is the most bullish shit I've ever seen in my life.
So what do the traditional market guys think whenever they see Richard Hart saying Hex is going to go to $1 and then the OA doesn't sell? I mean, how does that play out in their heads, right? Like, it doesn't add up. They think it's some great big rug pull that is never going to happen because they don't get it.
Yeah.
Look at this separation.
Because they can't get in.
They're like, look at the indicator. They're like
liquidity.
in the Maddie, look,
not invited to the party.
Yeah, they're like in two planets. Look at this. It's like this is like Mars over here, and this is like Pluto. Like, look at this. They don't even interact. There's a complete disconnect.
You know what it is?
And
you know
what tell me
the
price is gonna go down.
Like, here's the thing. This is the funny thing, right? Because people, like, no matter what an indicator shows, right? Because all we do is talk about what price does. We don't talk about anything else, right? No matter what an indicator does, it's just like Gunther was saying. What do you do supporting a coin when the owner or the operator of said protocol is dumping it on your heads, right? Like, how are you bullish that? But here's the thing. People will forever stick to idiotic thoughts just because the same thing happens to them, even though there's no empirical evidence of such event ever happening or ever even being potentially possible, right? So that's why, even though the OA owns 85% of the liquid Hex, you can
95%.
95, which is crazy.
Nice.
95. I mean, hey,
and that's before sacrifice.
Yeah. Hey, look, all I know is keep at it, baby.
Yep. And I can safely say there's another percent or percent and a half then combination of the community that just have like some liquid Hex just for like emergencies and stuff that just sits there. So that thing is not being sold. They just keep that for the sacrifice or whatever. I mean, it's insane, and people have no clue. And do you know the biggest joke I hear? Oh, look at Cardano, how much is stake? You have no fucking idea. You don't know how.
Yeah, that's why they get no yield.
Like, they don't get it. Like, oh my god, it's only 8% stake.
Yo, don't they gotta sell ads to get people to stake or some shit? Like,
it's
what?
So stupid. They don't understand
so
that it's actually
asinine, bro. That shit is actually centralized. Your staking functionality, your staking, the way it works, that systemic staking is centralized at every staking point, meaning you're dependent on the leader of that staking node. I don't know if people even understand what the fuck that means because it's stupid.
Yeah. Not your key, not your crypto, people.
Yeah,
what Wells is telling you, it's like you're putting money into a pool. That's what it is. And
a mini pool. There's a bunch of mini pools, which is retarded.
Which at any time, which at any time could whatever happened, disappear, this and that.
Like a random person is running that pool, literally.
Yep. So
not even anybody that you like, a random pool.
And again, going back to that market maker talk, again, it's not to demonize them, it's understand their function in the system, and you can make them their friend if you understand what they're telling you the market is doing, so that you can be positioned to win, not to lose. And because I know they are the real big dog, and they're the only one that matters. And this is, again, in conclusion, why I love the DMI so much, because number one, I am not a trader. I'm not a day-to-day guy, whatever, long-term investor, long-term planner, but that doesn't mean I'm not trying to get good entry price. Market makers are your best friend when they artificially, whatever, suppress the price, short the price, because they allow you to buy the coin cheap. Imagine in Hex, if we didn't have the launch phase with the billion token, some of us couldn't be able to buy it as low as we were. It's the same thing.
Well, that was different, though. In most markets, you have to be a contrarian. If you're in the majority, then you automatically lose because it's rigged. But in Hex, it's rigged in your favor. And I love this question from Diamond Dad asking, can you explain how the origin address holding liquid is good for the stakers? It's good because the origin address, the goal of the founder is to create a legacy. He already has billions of dollars of Bitcoin and Ethereum. So which one do you think he's going to sell first? Not Hex.
Yeah, right. But better yet, I'm gonna give you the more. I'm gonna go back to my face here. I'm gonna give you the more also mathematical accuracy about why that also doesn't matter, just how the function of the system works.
You want to know something? Just that simple fact alone is enough.
Yes,
that's the basic reality.
It really is,
right? Everything else is really just fluff. Because at the end of the day, a person's personality and character is going to really define their actions. And the fact that that person has that entity has no incentive to sell. And after 550, no incentive. And after 550 plus days has not sold a single freaking hex.
Mm-hmm.
The odds of that ever happening at any point in the future in the form of dumping it in the market is zero.
Exactly. And also, again, it's a function of the system. Remember what this is. It's a fucking CD. Blockchain, but CD, certificate deposit. OA is part of the system. Kind of what I used to tell all the time, the AI is you come in, you stake, and I'm going to give you the high yield. Interest is only paid to the staker. So by not staking, and that's me answering the question for the guy, I know most people know this, but by not staking is how we're getting those high 37 to 40% APY. Because have you had stake, because seeing liquid is technically the worst thing you can do in a CD in what Hex is. Because you literally obviously just sits there and you're being diluted every day because inflation is only paid to the staker. So it's the biggest favor that it does, because by saying you want to get new Hex, just stake, because I'm not participating in the staking pool. Therefore, you get a greater portion that you would have otherwise have if I decided to stake those coins. That's value number one. Number two, it's also dictating kind of what the interest rate has to be. So it's not too high, it's not too low. There's a reason why we're at 37%, which is insanely good, 37%, and not at 80%. Because if you pay people too much, the grid's going to kick in and they just don't dump the price. We need to have that kind of dynamic system so it creates support, but also create high yield to bring the new people in. That's what we're the best DeFi product out there. Nobody can beat our yield. So all that is part of the system. Look at it like on the Federal Reserve monetary policy. It tells you what interest rate is, so you know why it's valuable to do the action, and you also provide that price support. So you actually believe that I'm going to come in, bring my money, stake, get the reward, but the price is not just going to crater. Because if it does, then you're going to feel like, why am I getting yield on something that loses value too much? So that's why in Hex, even when the price goes sideways, you're winning like crazy because your daily payout is really what this is about. So understand how the system works. Understand that it's a function of the system. That's what makes it great. And it only stakes what needs to be staked to make sure that the bond math is acting accordingly. And as more adoption comes in, the new people are going to participate in the pool, and the more OA stakes is going to be removed, because you just want to maintain that high APY. Because let's say tomorrow we get a bunch of new people coming in, staking a lot, which is great. That's what we're here doing at the education, which has already happened and continue to happen. More people stake, APY start to go down because more people are in the pool. So OA is going to remove some stake to maintain the high juicy bone, keeping the meat on the bone, so the new guy can come in and still get 37%. That's why Hex is so great, because it doesn't matter when you come in. If you come in and you commit for the right amount of time, very important, you get your bonus t-shirt and you're going to get your high interest rate, unbeatable in the market, especially now that we're hitting the bear market. So understand how the system works. Know that it's a function of the system. Those coins are never going to go into circulation. And let's not forget, it also acted as the liquidity provider so that the new people can come in and buy. Because remember, when everybody bought and there's not a lot of coins, when the new guy comes in, he's trying to make a market buy. He's going to push the price so high that it's going to be insane. It can't really accumulate. So by providing that liquidity, it allows the new person to come in and buy at a decent price. Again, it's not selling. It's just providing the liquidity so the new guy can come in and buy at a decent price without pushing the price too much against him. So all that is just smart next level to tell you that it's up and to the fucking right.
There's another side benefit too with the OA holding that many tokens liquid.
Yep.
And obviously, we know that market cap is a vanity metric, but hey,
That too.
it's great for marketing. So when you have such a high market cap, and Hex does, for example, a 20x move from current price, well, guess what? We just flipped Bitcoin like a fucking buttermilk pancake.
Amen.
Right? Like to the number one position on nomics.com.
Fuck
Only
yeah.
a 20x move. So
Yep.
That looks good. That's good for marketing.
Yep. And which is the power of bond math by restricting that supply and allowing the price to go higher and higher. It's funny because it makes your coins more valuable. So when, like Gunter just said, when you get a 10x and a 20x, virtually it's like your stack just did a 10, 20x. You got the same amount of coin, excluding interest, which you paid every day. But it's like because the price did all those multiple, it's as if it's like a wealth transfer. That's why it's so powerful to be staked long, because you're benefiting from that wealth transfer over time, and you're getting more coins, and your coins are getting more valuable over time. So literally, it's paying you to behave the right way. Like Maddie will do, like therapy. Like, no, bad behavior, you get a slap on the face.
That sounds like Hex therapy to
right?
me.
Exactly. You do something wrong, you emergency instinct, you get a slap. You do the right thing, you get paid.
So speaking of which, Karim, I want to keep telling people and making this announcement slowly that I am going to be releasing an app soon, very soon. I've teamed up with somebody who is already working on a Hex app for over a year. And so we're going to add some therapy games on the front of it, and it's going to be fully functional. And so I'm really excited that we're going to be able to release this probably before Las Vegas. So we're talking in the next couple weeks.
Nice.
We're in testing stages. And the point of this is to spread the idea of Hex as therapy and to make it actually so easy that that your friends can do it who haven't gotten into Hex yet. Now, I know, Karim, you have a lot of sophisticated friends, and I know you have a high motivation, so you enjoy sales from a natural perspective, and so you get people in. There are still a lot of people out there that they deserve to be in Hex, but they won't be able to get into it because of the complexity that we're all so enthusiastic about. And so that's why I'm creating a simpler version in order to give people the option to do things in a way that they'll be more likely to act on. And then the psychology of the community has shown me so far that what people will do once they start to see gains in Hex after 3 months or 6 months, then they'll suddenly start asking the right questions and be paying attention to the streams just like everybody else has.
Amen.
What do you guys think of that?
I think it's a great idea, and I think when obviously the thing is done, released, and hopefully some type of audit, Manny, that's my only thing, because security, safety, right? That's my number one thing. But I think your mind is in the right place. Again, the intention, everything. So as long as it's done safely, more than happy to see it when it comes out, and then we can even talk about it on our show. So I think it's great, and then again, it just involve the community, involve more people, pushing the right behavior, and then making people not just wealthy financially, wealthy physically, working out, so want to live longer, not being in depression, stuff like that, and and also wealthy spiritually is very important. That's how, guys, and I've said that in the Telegram many times, that's how you get to fight the wealth syndrome, because your life actually has purpose. Your life is not just attached to things, financials, all that kind of stuff. Because when you do that, the problem is a lot of the time, even when you get that thing, you find out the hard way that you're still not fulfilled on the inside. And that can spook you because you're like, oh, fuck, what am I going to do in my life and stuff like that. That's why, again, you must become, especially men, because when you do that, it adds real identity to who you are. The money just allow you to spread that message that, like Maddie's building the app and all sort of stuff. He's just spreading the message that he always wanted to do all along. It just, the financial just accelerates something that he always wanted to do, because he already did the work, the inner work to be, this is who I want to be, is I want to help. That's why even me being in sales, I always wanted to help people. I wanted to be a professional. I understood at a young age, it's highly unethical for you to sell or recommend something you do not understand. And I cannot support something that is going to hurt people. I just no, but again, not everybody has the same morals, but those are the things that help you so that when you get where you want to go, you don't end up self-destructing yourself. That's very, very important. So for that, I think it's going to be great.
Thank you to Nemorians for $55.50 super chat pointing out that original Quattro Cinco stakes are now a 10th of the way through.
Nice.
Congratulations. And another cool thing about that too, which is related to the OA, is that people that used to have like fear. Oh my God, my long-term stake, and now they're more calm, they're more relaxed. And then now more and more I see people doing like long-term stake, like it's just bread. You know what I mean? Like, 5 year, 10 year, 15 years, like it's no big deal. Because I remember when I first got in front of the like, oh my God, you're gonna stake for 2 weeks? What happened next week? You know what I mean? Like, yeah, it was so fucked up. It was crazy. Now it's like, oh man, only 2 years? Only 5 years?
Yeah.
What are you doing with your life?
That's right.
So it just, that alone is so powerful. And another cool thing with the OA in terms of market maker, related to what Gunter was saying earlier, is that people forget, because we also truly DeFi, which is good, but it also protect in case there's some type of bad fork that shows up that's trying to copy this, trying to steal, commit whatever. With that kind of liquid hex, it can make sure if there is some bad stuff happening, it can guard against that. There's so much game theory to incentivize the right behavior, but also a self-protection mechanism, which is the reason why, like I said, market makers are not good or bad people. They're just here to provide a function. Understand what they do so you can always be in their good side. And it's good to see what I call congruence. What the market maker is doing, which again, the DMI is telling me with what is being advertised that what the product does is in perfect symmetry. It's up and to the fucking right, to the point where the chart is fucking telling me. Indicator is telling me this is what's going on. So that way it just adds more peace of mind, and it just allows you to just say, hey, it's not YOLO anymore. So, oh my God, you're doing it. No. It's a calculated long-term investment for the betterment of myself and my community, because all the interests are aligned, which is very important. And just to finish up, Maddie, I'm going to share my screen one more time because I think it's important. I want everybody to just...
So let's make sure everybody gets a chance to weigh in on some of those great points that you just brought up. I know that, this idea of community that you're talking about, it's so powerful. And that's something also that I see, right? The Hex community continues to get stronger. And so that's one of the reasons why all of us are here doing this for free. We're here. That's why the app that I'm creating is going to be free. It's not going to charge any spreads. It's not going to charge any fees. It's a product of Hex given to the community, right? And so that's a really powerful thing when we're getting something for free. So why would we charge for it? And so the developer that's working on this is completely 100% behind me. And I think that this can create an example for future people to come, that if we're living in a technological society that can create abundance, then why would we be just creating more middlemen situations? Why would we turn into the next Bitcoin that has ads at their conference to get people wrecked on derivatives and leverage exchanges, right? We don't have to do that.
Yeah, because again, it's simplification. Yeah, exactly.
Yeah.
Pretty straightforward.
It's also super rewarding to make a lot of money and give to people for free. It is actually so liberating. It feels very good, and it's healthy for both sides, for the recipient and for the giver, because money is just a tool. It's just a resource. It's not the end all. It's just the means to the end.
It's just a commodity.
That's it. If you're not using it to make the world a better place, then maybe you're not the right candidate to become super, super wealthy.
That's right.
And this is where, philosophically level, this is where abundance comes from, right? The reason why you're able to get more, because you give more than you get, and therefore you always have more to get, because almost like spiritually, it comes back to you because you have created that abundance, and it gives you, once again, that sense of fulfillment. That's why I told you guys all the time, when you build wealth and not trying to just be rich, it gets to a point where you don't even need the money, because just the simple fact that you're at peace, joy, you can just give without an agenda, because you're already whole and complete. You are fulfilled. You just want to to the point where those who are still in that chaos mentality, they're like, oh, you're dangerous, because they're like, why are you so nice? Why are you so da? We're not nice, we're kind. But why are you doing all sort of stuff? Because they don't understand that it's still in that scarcity mindset, that fear, that zero-sum game, because they always get those wrong setup, which tells them, for me to win, somebody else needs to lose. And this is another really powerful thing Hex naturally creates, so that we can have that environment created for us Some of us that got there through different ways are just able to see it and just duplicate. And even those who didn't, when they come in, even after just a month or two, they start to display those behavior because they're now more at peace, they're less stressed out, and then they allow themselves to be the better version of themselves. That's why I'm working extra hard to make sure people don't get wrecked, to get invest in the right thing so that they can experience those things and just be chill. And just that joy alone, you would never worry about trading, chart, this, that. You'll be worried about living your life, your purpose, traveling, whatever things that you wanted to really do. And you're not going to be like triggered by events, news, media, Elon Musk, whatever. None of that stuff.
Well, I think as technology continues to advance and we're at the cutting edge of it in Hex, smart contracts that are actually decentralized, live on decentralized exchanges, are protected by a billionaire who has only legacy to gain, right? It's, you know, what Lance Mitchell is saying here, you know, how we can't have 100-year stakes because of the Ethereum problem. Well, that's being solved by a Pulse. And I can tell you, as somebody who's working now on the side of programming, that programmable money is here, and it will allow us to write rules for ourselves that we can't even imagine yet. But one of them, to be sure, is that you will be able to write your own contract, have a safe, like a Gnosis safe contract that that you put Hex into, and then you can have a perpetual stake where it only stakes for 15 years, but you can't touch it, so you only get the interest. I mean, that's a simple rule that can be written.
Nice.
You know, we're not going to have that in 2 weeks, but that's something that can be added at some point by anybody, you know, in the community who's, like you said, doing audited and secure work.
Amen. Dude, that'd be great. Just for a legacy standpoint, and not worried about if you're at the wrong place at the wrong time and you can't end your stake or whatever. Just having that too will be great. Again, more cool stuff can be built on top of afterwards that are audited as well. So that's great. But Manny, real quick, sorry, just want to share my screen again just to wrap up this chart here. So let me know when I'm sharing.
Got it.
All right, perfect. So Hexagon, in conclusion, again, keep an eye. Very important. We'll go back to 4 hour real quick. You know, somebody made a comment. Yeah, it's looking fugly. So again, it's running. It's running. Be prepared. And again, it's dragged by Bitcoin, because you got that little fake out again. It's doing the same pattern than over here. Same play. It dumps first. It does the little dancing, and then poof, and then it runs. Like here, start, then it runs, and then it stays out for a while and cools off. So be prepared, be ready. First stop, 30K. Second stop, 29, where the Bitcoin premium is. But then if that breaks, I mean, it's just way worse after that. Start to tilt. Why is that important? Because it's going to affect Ethereum. Because now, if this thing breaks that long-term support, it's just going to be nasty. So it already break on the 4 hour to already tell you what's going on. It's doing the same play over here. Break, dance, done. You break out, and you start to run. So when you go on a daily, you see how very close it is. Daily first target for support, you're looking at right around here. Why is that? Confluence. You have long-term support here. And you also have the red line, which again is 1800, 1835. So, because when it breaks, it does a violent move. It's going to do what is done kind of like here, or what he has done over here, depending on how violent it is. But it's all about knowing what the trend is doing. So, it already break bearish here. The last thing that's missing, it did on 4 hour, did on the weekly. I told you weekly is the strongest one. He hasn't done it yet. But keep in mind, if this becomes this, and this is the beauty, you can just check next week, the weekly chart. If it becomes this, forget about it. Let's go home. Because after that, you may get a little relief rally, but this is what you're looking at after. If we're lucky, this becomes this, and then we might get one more run. And if we do get one more run, then my confirmation is going to be here. The Ethereum BTC is going to continue to run and then break out of here, and then but we don't know yet. The same way if this breaks to the downside, when this cross, that tells you also that Bitcoin is taking back control, and then it's going to drag everything down. So keep an eye on that, because I know for a fact, some of you guys, let me go back here, because I know it says some of you guys still own a bunch of Ethereum instead of doing what you should be doing for your best, because Hex is going to continue to do its thing. Because when Ethereum crash, this is what happens. Let me go back to the other chart. This is Hex to ETH. It's not slowing down. It's doing its thing, like it's just whatever. The same way we had back on the weekly chart, I told you it's going to continue to run. Let me go back to V1 with the biggest history, and I'm going to end with that.
Have any of you guys sold Ethereum here in the past 6 months? It feels so liberating,
Yeah,
especially
it's
now that we know
Hex.
Pulse is right around the corner.
Look how bullish this is. This is crazy. So it's and on the weekly chart, by the way, mind you, we haven't even done the bullish cross just yet. When that happened, explosion. Everything's looking great, pointing to the upside, big ass bull flag. So you got many more run to go. But then I told you the extension. This is the real target. This is how we get to $1. This is the way. Look at this. Fibonacci extension all the way here. And it's going to get there faster if Ethereum crash because it's a ratio. It's going to push it higher and higher and higher. Why does that matter? It matters because if you don't convert your Ethereum on time, what ends up happening is that as the price crash, you're like, oh, I lost so much money. I'm going to convert to Hex now. Well, guess what? You're going to get less Hex because you didn't do it. You waited. You don't understand. This is the trap because in the bear market, if we go back to what happened last year, when this happened, this is when Hex pump. So you got to understand how Hex works. You got to understand the inverse correlation. This is how we got this major move over here. So be warned, be prepared. Go back here.
You actually get wrecked in both ways because you have Ethereum crashing on you with the Hex going up simultaneously.
Boom.
You get even more, like you get less coins.
Yep, very well said. And I told you on the long-term play, once again, friendly reminder, this W pattern that you're seeing here and then took off is what we're doing on a big level here. 1, 2, ready to go after that. And if we go back to the DMI, look at this. Beautiful. Look at this arc. We went from selling, because this is the long-term V1, which was launch phase, sell. That was the only time, and this is a Hex ETH, not USD, never happened, where selling was higher than buying. And then since then, look at this trend. This is what the market maker is telling you. This is where the train is going. Get along with the program or be left behind. That's the moral of the story. So when you see that, you need to understand what's happening. And this is the weekly chart. And for those of you who like MACD, because to me it's not really relevant, but look at that. This is beautiful. I mean, this is literally what we see in a traditional market and wealth. I want to talk about this. When a company go IPO for 3-5 years, they dump the coin first because they need to raise money, to build shit, whatever. And this is where the banker gets in. They accumulate for years. And then when the shit turn, see you later. And you can see that here.
And then they dump.
Yeah. And again, this is the weekly chart. The most violent, most precise way to use the DMI is on the biggest target. The weekly chart is telling you, this thing is telling you where the train is going. So get along with the program. Don't worry about stochastic RSI. It's just going to count because it's just up and to the right. So
yeah,
I want to end with that.
We talked about both of these spreads, right? Months ago, both Hex versus Bitcoin and ETH.
Yes.
We talked about the spreads. We did an in-depth review on both of them.
Yep, absolutely.
So it's just, coming to
bullish
fruition
everywhere.
Yeah, I mean, it's not
this
rocket
is called
science.
The alligator channel pointing up, telling you what's going on. You got the bullish cross coming here, which is awesome. About to cross the 15. This is again on the weekly chart, people. Weekly fucking chart. And you got the what's called the Keltner channel telling you that we're just looking healthy as hell. Healthy as hell. But understand, this is Hex ETH, which means if ETH does what we most likely believe it's going to do, sadly, which is go down because Bitcoin's going to drag it sometime this weekend, keep an eye on that. Keep an eye on the weekly, because if this thing crosses, it's game over. So protect your value. At the very least, go to USDC, but get yourself some Hex because we're going to leave the train because we're literally waiting for that to happen. I need you guys to understand. I'm waiting for that to happen because we're just going to leave more and more people behind. The train is ready to go to the next station. It's just a matter of, do you recognize what's going on? So, yeah. So, thank you.
Yeah, I mean, it's just chopping, right? Mm-hmm. Hex is literally just at the highs, probing, waiting to break out, while the rest of the crypto market is just waiting to break down. Literally, what's going on.
Mm-hmm.
So,
The train is like, Maddie, we stay in this city for too long. We're ready. We're ready to move on to the next location. We're just waiting for that last backdrop. And by the way, guys, it's great PR. Everything crashed. Hex stays strong. That's even better. Decorrelated. This is what the Hex ETH is going to push so high, because just to maintain the USD price, because obviously it's going to push things down. And that's just going to create a pump because it's going to inversely correct back. So, which is why it's exciting. I'm excited either way. So that's why it's awesome. Gunter, I wanted to ask you. You said you had questions before when we were talking Telegram. So I wanted to give you the floor.
Oh, no. I mean, my questions are more just like natural and organic as the conversation flows. Not anything that's that was I didn't prepare any like specific questions.
That's cool. That's cool. The best one on the fluid one anyway comes to
exactly.
So,
but yeah, thanks. But that's crazy times, man. Crazy times. I've never felt more at peace in the midst of what I see to be a multi-year bear market. Like I don't even see Bitcoin and Ethereum. I see Bitcoin and Ethereum reaching an all-time low around April of 2022.
That's a good point. It's a possibility. Yeah, if it does the same fractal as 2017 play, that's what you're looking at. Yeah. And then just to add more fuel to the fire, my big event this week on the traditional market, and Wells can talk about it, is on Thursday. We're going to get the new inflation numbers. That shit might get ugly. And if they say, oh, too much, we decide to pull the plug, then, oh my goodness. Because the market is also frothy over there too. Regular stock market. Like I talked about earlier, Tesla is selling off. That's a bad sign, because then they can introduce more selling pressure by getting rid of it.
We talked about that too, didn't we? I think we talked about that. Yeah, I'm pretty sure we talked about that last week too. Yeah, because I mean, I'm pretty sure we looked at the SPY, didn't we?
Yep. Yeah. Frothy, ready to go. I mean, this is too many confluence. So again, we're not wishing anything bad. We're just telling you what we see.
Yeah, it's just what's on the charts, man.
Hey, one question. So why would you want to be a liquidity provider in Hex when you look at this amazingly bullish chart, like on the monthly chart or any time frame? Why would you want to be a liquidity provider if you can only capture the square root of a move as a liquidity provider? Like, for example, if the price goes up 100x and you're a liquidity provider, then you're only capturing the square root of 100. You're only capturing the 10x of that. Why would you ever want that? How could that ever outweigh?
That's why, everything's like kind of backwards in Hex, because the incentives are so aligned, with the origin address, which we know has provided liquidity, and then other people who are just whales that want to make sure that the market is, able to
even those people
operate.
Get peanuts compared to the OA. I'm so glad you asked, because now you get to realize again how valuable of a sacrifice the OA has done to provide that liquidity, so that the new people that comes in can get some type of size without having to get nothing and the price just explode. So just that alone is another function that it does to create that market. So it's not staking, it's sharing the thing, and it's providing liquidity to detriment to a point, because as the price continues to go higher and higher and higher, why would you want to, provide those Hex when you can just hold it more? So that's just another function of how the system works, and how selflessly, like Maddie, you say all the time, when you have a bunch of other tokens and stuff, and Ethereum or whatever, then you don't even need the money. You're just making sure the system is working. So it's a fantastic question, which is why I have no shame saying I'm not a liquidity provider, because I'm ready to just get my yield, period. So, but I know that it's designed in a way, very important, to be liquid enough, not too much, not too low, because that way the price can do what it's supposed to do. We're not giving no handouts. Those days were gone. That's why we go from station to station. We go to the next station. We live there for a minute. If you don't take advantage, we remove. We go to the next station.
I mean, the liquidity in Hex is dynamic, right? It adjusts with price organically, and that's why the market functions so well relative to the rest of it.
Amen.
That's really just all it is.
It's also like in sales, we call it time limited offer.
Yeah.
Component. Because whenever no.
So let's talk about that, right? Because if here's an important thing to understand. If Hex wasn't actually decentralized, it wouldn't work like that. Because you would have a whole bunch of externalities affecting the book. right? The order book, the price book. That's why when you look at an order book for Bitcoin, it's a whole mess. It's all over the place.
Mm-hmm.
When you look at an order book for Hex on Matcha.xyz, for example, it doesn't look anything like that.
Yeah.
It's stable. It's just there. Right?
Yeah.
So it's understanding those differing mechanisms of how price transmits through markets.
Yep.
Right? That's very important to actually know. So
Yep.
if you want to see that, like you can go look at a level 2 in either a stock market or a futures markets or even an FX book, right? An FX market order book. Like there's a lot of places to go see this because in crypto, it's really trying to just copy those elements of the
it
legacy
tells you
market.
also how much of a pro the market maker is.
Right.
Make sure everything is clean, because again, that's the difference between, right, what we call economic centralization, which is good for price support for long term, especially if it's in the strong hands, than just all the nonsense where just like nothing gets done, people just throw around. Because you can be decentralizing the ownership of each individual owning their own money, right? But you can centralize point of economics so that we don't get those crazy reflexivity. Because some people will use that to try to manipulate, and like we see in Bitcoin and other places. And I know it's frustrating for even some, even exchanges, because they don't understand that other bigger exchanges can manipulate them indirectly by just pushing price a certain direction and everything just bounce around. That's how some projects get wrecked completely, because the liquidation bots just comes in, see as opportunity, arbitrage the shit out of you, and then trash your tokens. That's how you get those exploits. Because Maddie, they're not real hack. Like when you hear exploit about flash loans and stuff like that, no, the guy just used the system to the most efficient way, and it's fucked up to say, but that's why they're able to get rid of it, because they don't understand that if you don't design in a certain way, like Wells talking about, you expose yourself to those vulnerability, and one shark comes in, they smell the blood, they take you to the cleaners.
Yeah, so a flash bot just skips ahead of everybody, right? They're not really doing anything. Like the name is pretty self-determining. You know what I mean? It's self-explanatory.
Come with a flash, maybe. Blitzkrieg. In and out.
Seems like a big argument between the people who are rigging the market, who say that it's a feature, and the users who are getting wrecked, who say it's a bug.
Correct.
Right.
And that's just the nature of the beast when you're on the wrong side of the market, right?
Exactly.
That's why, but that's why Karim was saying a while back, like you need to know where the flow is going, because if you don't, it's gonna crash you, right? Like you can't expect to be a drop of water and have an effect in an ocean. You don't matter.
It's like surfing, Maddie. You gotta know how to catch the wave.
Exactly.
You have a great time.
It's literally like surfing. This, and it's funny. That's exactly what trading should be, or investing, whatever you want to call it. I always call it trading, because at the end of the day, the only difference between a trade, as we know it, quote unquote, and an investment is the time frame. Right? That's like, for me, it's all the same, because it's an action that I'm making.
Yes.
I'm trading money for time. Anytime you make a trade, you're trading money for time, no matter what the asset is.
Yes.
That's why your objective should be to pick the best asset, because at the end of the day, that's opportunity cost that you're giving up with that capital.
Exactly.
It's
and
very
the other
simple.
benefits we get is also yield, because by holding you
But
get
that's
more.
the whole point. But that's the whole point.
Yes, sir.
Otherwise, why are you giving the money up?
Exactly.
Because it's opportunity cost. Here, you're guaranteed. If you're taking it for 5555, for example, right, the max, just as an example, you're guaranteed 35% minimum.
Exactly.
Minimum at this point in time.
Yep. And the reason why that's important is because that's how me, as the value investor, I know for a fact that I'm not a trader, because my action is not just about, I bought at this price, I know the price is going to go up, blah, blah, blah. Yeah, that's just a typical trader. But I also know that there's a time factor. There's an opportunity cost. That's why we're telling people, listen, hey, bear market coming in, da-da-da. If you just bought Bitcoin, whatever, but let's say you were listening to what we're saying, you exit out of that shit, you got into Hex, price already doubled since day, more than that, and you're earning yield. This whole bear market does not fucking concern you. As a matter of fact, you have no opportunity costs. You can be stake, earn the yield, well, for the bear market to do its own thing, and then by the time your food is ready and your yield, whatever, market will be, hopefully much higher. So that's the whole point. That's what makes it an investment, because the time preference is what makes the difference. Understanding that, listen, I'm taking away the price fluctuation. I'm looking at the yield as the real value that I'm getting. And I've always said, If you never sell the principal, only sell the interest, you cannot lose money. I don't care what anybody says.
You know what's crazy is that if you bought Hex on like day 32 or day 33 of the product, however you want to say it, if you bought just $300 and staked it for 10 years, only a $300 investment, it would currently be worth about $694,000.
Facts.
Fact, not fiction.
Yeah.
That's insane. That's crazy. You can't. Can anyone compete with those numbers?
Nope.
Anywhere in any financial market, anywhere in the world.
Nope.
Yep. And once again, that's not counting future daily payout interest all the way to that 10-year mark.
No, that's like present day value.
Exactly.
Yeah, that's just up to now.
This is the most craziest thing I tell people all the time. Oh my God, Karim, the million. I said, no. I told my friends, even the one with the big money, he's getting close to that million now. I'm like, listen, the number one value, it's not what you're looking at right now. Always calculate what's the daily payout. This is what you sign up for.
Yeah,
this is what they keep buying more and adding and building and playing for their family, their kids, their retirement. That is the real value.
Think about that 694,000, right?
Yes.
If the price 10x's, well, now you got 6.9 million.
That's just cherry on top.
And then another 10x. Now you got $69 million, and then another 10x.
Yeah.
Now you have $690 million from a $300 investment.
How'd that happen?
Yep.
And that's not counting any further interest that you would accrue. That's literally just like your stack today. That's just USD price appreciation.
Yep.
The numbers begin to get really stupid as you go forward.
It's important to remember that the yield is paid in Hex.
Facts.
Yeah.
It is super huge because guess what? Down the road, when your stack is doing whatever and you take the interest, you sell. Guess what? Even when you sell, because you're only selling the interest, you're still protecting the golden goose and you still got your machine, your T-share generating the future yield. So you don't get that guilt tripping that the Bitcoiner have, which is that forever dilemma. Price goes up, everything's great. But when you sell your fucking Bitcoin, you run out of Bitcoin, right? And then the price can just leave you behind. You get that buyer remote, this and that. This is the thing where I also believe another reason why Hex is going to be much superior and do, it already is, but do way more in the price appreciation and faster because of that mechanism. So you never have to worry about, I got to wait about the price to come back down to my price, what I sold. None of that shit. Because every day you don't stake, T-share is leaving you behind. So you can buy when it's quote unquote expensive compared to your entry. But if you're turning that into a T-share and you're earning yield, you're always winning.
Correct.
It's
easy to win when you're 30% ahead of the market at all times.
Exactly.
And that's why having a very nice sizable portion of max stakes, 4x5 day stakes, is recommended because you want to be able to stay ahead of the market.
Yes.
You don't know what it's going to do, but you know it's not going to beat 30%.
Yep.
At a flat line. Right?
Yes.
At a flat line, like that's the most bare minimum you're going to make here.
And you're not going to get mad if the price goes up and you buy more at a high price when your whole portfolio is also rising. You're not going to be like, I'm mad because the price went up.
Right. Like, this is bullshit. You're going to be mad you didn't buy more when it was at the price that you didn't buy more at. Right?
Exactly. It's amazing.
But the meat is going to stay on the bone. And that is the important thing.
Yeah.
That, that the system is designed in such a way that even if you're mad that you didn't get a certain price in the past, still your future self is still going to get paid based on what you do today. And so that's the powerful thing. And I believe that as a community in Hex, what we'll be able to do is to not only find people who believe in savings, but we will be able to create people that believe in savings, because it won't be a problem for people to put $20 into Hex whenever it costs a penny to get in, right? And so people will be able to get in, they'll be able to wait 3 months or 6 months. And then what does that $20 do? Well, we don't know what it does, but we know once it gets converted into T-shares, it becomes something very valuable because it's based on math and it's based on community and it's based on all these design parameters that have been created, in the favor of the little guy. And so that's why I'm so excited. I know Hex 19 is asking about our onboarding efforts basically in Las Vegas. And that is something that I'm excited to share with everybody, is that we went ahead, funding Gemini, standardized the hex badges. And so if you want an individualized badge, you can order directly from him. The deadline was today or yesterday or tomorrow. But basically what we're going to do is we're going to have it, he and I teamed up so that the QR code and the chip that's inside of the card, that you just wave at your phone, and then all of a sudden it pops up. If it's somebody else's phone, it pops up on their phone as a contact card, and it's going to go to basically a list of websites that it's going to feature Hex and Richard Hart and Quant Gang, and it's going to feature this app that I've created, and all the tools that somebody's going to need in order to be able to onboard people. And I mean, the other bit of good news is that the app will also be of great value to people who are already sophisticated users in Hex, because it's going to open up some panels of data that I don't think we have access to now in a nice way. And it's also going to be web based, so that has security advantages. And utilizing MetaMask is another advantage that allows us to have something that we know is safe.
Amen, Matty.
Hey, also, just to kind of piggyback off that point too, for those that are just getting into like Hex, like now, like I see this a lot in the chats, right, in Telegram chats. I don't think anyone should ever compare their wallet to somebody else. It's just not smart. Yeah. Just work with what you have. If you have $500 to work with, or you have $100, or you have $1,000 or $10,000, whatever that arbitrary number is, work with what you have and realize that the price of Hex today is 5 cents, and we're projecting the price to be, at least I'm projecting the price.
The dollars plus.
We're talking in 2035. I'm projecting the price anywhere between $1,000 and $10,000 per Hex, straight up.
Yeah,
so
I got the same numbers.
Yeah. So I mean, wouldn't you want to buy something today for 5 cents and grow that money, even if you don't quite reach those high numbers? But if you're getting like insane USD price appreciation, plus you're getting interest, like literally just focus, like even if you just put in $100 today and staked it for 5,555 or for 10 years, I guarantee that money will be worth a lot of money.
Absolutely.
So it'll be worth a lot of Hex is something we can guarantee. And this channel doesn't provide financial advice. It's an entertainment and education channel, right? And also, this is not therapy advice. But what I do with therapy clients is I focus them on just what Gunter said about, don't compare yourself to other people, right? That is out of touch with reality, because what other people have been through might be better or worse than what you've been through. And so it's not an accurate comparison. But when you compare yourself to yourself a week ago, then you have been through many of the same struggles that you have been through, your past self. And so when you're constantly trying to improve, let's say every Tuesday, if you're trying to have a better savings plan or you're trying to get more education, then that's a way that you can look back and you can be proud of the changes that are happening without trying to compare yourself on this fish scale.
Absolutely, because it goes back to the fundamental of what personal development actually is, right? Is you becoming the better version of yourself. Every day, you're either getting better or you're getting worse. There's no neutral, right? But as you build that, yes, it is mathematical advice. I can tell you that, because you can fact check that. That's for sure. But understanding those values is key, and building as you come. That's why we say it's not about making money. It's about building wealth. That's why we educate people about T-shirts. Let me remind again, some of you guys who knew, I wasn't here day one either, right? But I understood what the value was, so I played catch up. And that's what I was able to access. So if I can do it, everybody can do it. It's understanding the long-term value, having the plan, executing the plan, staying disciplined. Obviously, thanks to the Quant gang and many other people in the community, if we feel like there's going to be a nice dip buying opportunity coming your way, then yeah, of course we're going to let you know so you can get a better entry. Or if you already have a bunch of fucking Ethereum and that shit might be about to crash and you're sitting fucking idiot, like, oh my God, I should wait. And then you don't. And then Hex leaves you behind. I don't want you to have those buyer's remorse. That's why it's important that you understand what's here. So, hey, Brian, awesome. So, yeah, it's making sure you understand that. And I'll say this, a very important quote a long time ago, right? It's related to like opportunity cost, which is very important. You can pay opportunity costs or you can earn opportunity costs. The choice is always yours. Let me say it again. Somebody can even tweet it if you want. You can pay opportunity costs or you can earn opportunity costs. Which side of the equation you want to be? And that is a fundamental mathematical facts that will always stay true in anything. Finance, personal development, relationship, everything, because time doesn't stop for anybody. You can get better or you can get worse. You can use your time wisely or you can waste your time. And that becomes what? That becomes an opportunity cost, right? You can learn about things, be on great streams, learn or waste your time. And then by the time you get to a certain point, oh, I wish I've learned that sooner, this and that, because everybody has a timer, clock, right? It's never infinite. I think that's what makes life great because there is an expiration date, right? A limited edition, limited volume, whatever you want to call it, promotional. That's what your body, your rental is. So understand that, treat that correctly, use it to the wisest, understand the mechanism, ask questions. It's really good, but just build, focus on your goal, focus on your target, and that will give you that fulfillment that you want. So having that mechanism is key, and that's what Hex provides ultimately, that liberation, that financial freedom. And you feel so good because you did it yourself. You did your plan, nobody else's plan, yours. You had a plan, you went for it, you execute, you use the system the best way, you build wealth, not just make money, so that you don't get swayed. You got your own fuck you money and you're great and nobody's going to tell you what to do. You can just live your best life. So please remember that. That's the most liberating tool we have.
Even if the price went sideways for 15 years, literally a horizontal line, which the probability of that happening is really low. But let's just assume it goes sideways for 15 consecutive years. Can you get 38% APY in any financial instrument in the world?
Yo.
I don't know of any. I mean, maybe you guys are more knowledgeable, so maybe you guys know. I don't know of any.
I'll wait.
But the SEC says that if you promise high returns, then it's a scam. They meant dollars. They didn't put it on their website yet. They meant dollars, not hacks.
Yeah.
That's what they meant.
And it's quite a different matter if you're a company and you're making promises to people and you're behaving like a security that you're going to get some sort of like interest versus an immutable smart contract that's been audited 3 times for economic errors and for security errors, and none were found. Mm-hmm. And that code executes trustless interest for you. So you would have to like not believe in like math or science to not trust that code, because literally thousands and thousands and thousands of users continue to use it without any issue. So there's quite a difference.
But if you believe in math and science, then you can't be a cult. What are we? I don't understand.
We are consciousness.
It's like we're something new. I don't get it. Marco the Hexican, thanks for the $10 super chat. Folks, just take a second and realize what we're all holding in the time frame we're at right now. It's amazing. You took action and will be rewarded so well down the road. And get a clone of it.
Boom. Shout out to Marco, of course.
Nice.
Good vibes. I mean, say no more. I mean, and that's what's so beautiful about this. You come in, even if you're new, you come in, you explore. When you ask questions and you discover, you're like, oh, I found the promised land, Now it's just time to execute, take action. It's very important, right? That's the most important thing. You got to do. You can't just do all over. And then set up your plan, execute, and you'll be fine. The rest is just planning what you're going to do with all those gains when they come out, and then figure out what is it that's most important for you in your life, and then go do that afterwards. So,
I actually have another question for you guys. So, yes. we all. I got more questions than answers today.
Go ahead.
So we all know that you can't outperform the interest that you get in Hex, even if you were to like stake daily and then roll over the interest into like the next stake, and you stake every single day. You daily compounded interest cannot outperform the way that Hex is designed.
Yes.
So my question for you is, what is this interest called then? Because this is a new form of interest. Because it's not compounding interest.
It's really
something new.
It's really monotonically increasingly higher, right? Or successively higher interest, or monotonically increasing interest is really what it is, because the rate adjusts itself higher over time constantly, right? It doesn't really compound in the sense that we know it. It's just that the rate itself is repricing itself higher. So think about it like this, right? Instead of having some random persons decide the price of the money, the system is just dictating it based on a mathematical equation. That's really all it is. And
it's dynamic.
Yeah, and it's just always designed to reprice higher. That is all.
But the reason why we say compounding, Gunter, because that's a great question, is just because if you were to put that in a linear curve, which obviously Awesome Whales has already done, the closest thing to it that mimic it is the exponential curve.
Right.
So that's why it's
graphically it's the closest looking. It's the closest looking graphically, right?
Exactly. But then, because you know that the code is designed to be potentially, and it is better than that because it fights against it to make sure the rollover guy can never win more than the guy that stays in the system. Correct. So that alone already tell you it grow at a faster pace. And then you add all the penalty and all the stuff, which is basically free money. So if you were to put exponential curve and that, we are growing at a faster pace because of all those externality, extra bonus, if you will, that you're getting on top. So it's just next level. It just literally, you can call it proof of strong hands. You know what I mean? But it's great. We just have to represent it somehow to explain to people. So the closest to it will be exponential, the E, but it's definitely a higher log function. So.
This is why I think with everything that's built into Hex, it's more accurate to describe the growth of Hex, not like log base 2, but more like e to the power of X. Yes. When you consider USD price appreciation, interest, and also a ratcheting share price.
Yeah, because exponential is e to the 2.72, so it's higher than that. So you can just pick your X, and on any given day with a crazy emergency end stake, it's even more.
You have to understand the difference, Gunther. You're talking about the velocity of the price appreciation, right? Because at the end of the day, the price is going to appreciate. The question is, how fast is it going to appreciate?
Yeah.
Right. The only differentiating characteristic is going to be speed in that equation, because that's the only thing that can change the shape of the curve.
Yes, and the daily payout. If we were to take that as a curve by itself, the payout per T-share, it follows kind of exponential. But I think the also thing you can see is it's more like kind of like an S curve, because I'm sure as the price go higher and higher and higher due to bond math, at some point, the OA might shut down a little bit the drip in the water, because if we're like in the dollars and people are getting $100,000 a day, at some point somebody's gonna.
That's crazy, right? Somebody's gonna eat that bad boy ASAP. Like fuck this, I'm out.
At some point we're gonna be like, okay, guys, okay, kids, daddy's gonna turn off the what's it called, the sewer, the tap. Turn off the tab a little bit, but I'm gonna push the price up so that none of you, because at some point people won't be able to fight their emotion. They're gonna be like, all right. So, but it's beautifully designed.
Guys are printing a lot of money out here.
It will do an S curve, so that would be the closest. Geometrical looking chart you can call it as, because at some point it will curve the other way slowly over time, but the price is going to be crazy high then, crazy.
Yeah.
Your daily payout, if you were to do that in dollar term, will be insane. The same way people, getting $1,000 a day, that used to be like, $20, whatever. And then at some point, we're gonna get to those crazy, $50,000 daily payout, but you're gonna get just less Hex per T-share.
90 days ago, a T-share cost $130. Let's not forget that.
Let's not forget that.
Crazy.
1,000. We're on our way. By the way, after this little, I'm not jinxing anybody, but I don't want to say dump, but after this little situation that we're in the next pump, there's a high probability in a very not so distant future, we're going to show up on the Quant game and be like, hey, T-share is more expensive than an Ethereum. And then soon after that, hey, the T-share is more expensive than the Bitcoin.
Well,
Hey,
look,
the tippening.
Oh, man.
the tipping is occurring presently.
I'm
Yeah,
gonna be yelling. It's gonna be crazy. I'm gonna do a video. It's gonna be crazy.
T-shares hit a new high against Bitcoin today. So
T-share flippening.
Hey, when Hex is 14 cents, then one T-share is worth an Ethereum.
Yep.
And when Hex is $1.85, then it's worth one Bitcoin.
Boom.
And that's if they weren't both tanking, right? So
right.
what I'm hearing you guys say is
Well, current
H
price.
to the power of E to the power of X is some sort of math equation. And I'm hearing that there are lots of different force multipliers that act on each other. I have myself had to start a list of all the force multipliers in Hex because it seems like every time I turn around, there's another one that's force multiplying on top of everything. And so you know, take notes if you want. I know I usually take notes when Karim is talking. Up and to the right, force multipliers. One would be adoption. So this someday we'll find an equilibrium, but that's a long way off, given that Bitcoin has not even found, you know, a majority of people in the world that are using it. 3.69% payout of Hex to stakeholders from the total supply, which is compounding, times the unstaked percentage. So that's another force multiplier. T-share price in Hex goes up while becoming more scarce. So 20% more shares per year are locked. And the fiat value of Hex, that's the only one that can go down. But then but also acts as a force multiplier when it's going up. And then the other thing you have to consider is the value of the dollar goes down, right? And so that's another force multiplier. I've got even another one that it helps me highlight Casey's super chat here, that the Hex community will continue to compound, and the abundance of ideas, the abundance of generosity. So thank you, Casey, for the $50 super chat. And what you're saying here, you just realized how much this community means to you. You purchased about $1,000 worth of hats for Vegas, but honestly, you want this to be the gift to the community. You're going to give them away for free in Las Vegas. That's amazing.
We're going to dominate Vegas.
So the generosity here is obviously off the charts. And I know that there are other people who are talking in the Hex chat about what the different giveaways that they're going to do. People are giving away T-shirts. People are giving away hats. People are giving away their time and energy as well. And so we appreciate everything that everybody in the community is doing, because again, that's another force multiplier that doesn't exist in systems where there's a zero-sum game or a negative-sum game, or people are not owning a stake in something. In Bitcoin, you know, there are so many negative externalities. There's billionaires buying that then want to sell. There are exchanges that want to play around with the price and the volume and spend lots of money to try to get you into this 1 minute chart situation where you really don't know which way is up, right?
Even seconds.
So yeah, it's a totally different situation to have a much more pure decentralized crypto that really, I mean, let's see how the exchanges, you know, it's their move and they're not making one, and that's great. That's great for us because we're going to keep onboarding people, regular people, not just billionaires, not just millionaires, because I really think that the ethos is about, you know, minting new wealth, but then creating examples of how abundance can be used to create more abundance instead of creating more greed.
Because that's one of the beauty of Hex, right? When we're saying, which is true, that Hex is changing lives, right? What will be even better than changing the lives of people that would deserve it the most, because it will get them in a better situation. You know, chances are the billionaires kind of already said, you know, making extra money, this and that doesn't really change the life. But somebody that could literally not only financially benefit changing his life, but also learning the right way to build wealth. So the right mindset, delay gratification, not be stressed out, you know, getting yourself wrecked, taking the necessary risk, over leverage. I mean, we can go on and on and on. Those protection mechanisms, just not wasting your money, Just that alone is crazy. I know people that used to
when
help
you
them.
reward people for the right behavior, just like you said, when people are rewarded for delaying gratification, that changes behavior. That's a powerful thing, because now people who are locked in for 15 years have 15 years to learn how to become more productive, to become more generous, to become whatever they want to be, right? And so that's the cool thing in as opposed to the current system, where it's kind of like, there's a scarcity of money and people are feeling forced to be doing things that they don't want to do in order to survive. And so changing that mindset increases IQ. I mean, that's shown. We know that relieving people's financial stress and burden increases their IQ, and that is a positive sum game for the world. That means more things can be created and more abundance can be had and more IQ points can be freed.
Because, Maddie, what's happening is that they're leaving the low vibration for high vibration, fear, anxiety, hatred, all sort of stuff, so they can at least get to neutrality on their way to potentially, joy and happiness, so they can think at a higher level and then get to do the things where, like Casey having this realization, right? Because he was always deep down that person. It's just that sometimes when you rat race, taking care of business, paying bills, this and that, you don't get to really be that best version of yourself because you got to worry about all this other stuff. And when those are now taken care of, you get to realize who you really are, what's going on. And because you learn how to deal with how to handle that wealth too, then you can just have your best life because you can be your best self. And that becomes even more valuable than the money, because now you feel whole and complete. The money becomes truly just a tool, because you got something better, which was that fulfillment, that enrichment, the sense of community, sense of belonging, on and on and on. All that literally from one thing that just compounded all those other things that comes in the right way. And that's how lives can truly be changed. What I love the most about the price going up is more of the quote unquote little guy becomes the big guy, and then his life gets changed. And then each one teach one, and then we pull one, and then it just rise from the, grassroots, which is one of the best way, rising from the phoenix. And then we're turning the pyramid upside down, right? Grounds up. And this is really where you get true innovation, true change, and things that changes, again, people's life. And those things, they last. Because when you change someone's life and they change their community, their family, whatever, that is something they will hold for their grave. I mean, that's why you get people doing tattoos and stuff, you know what I mean? Because it means that much to them. And that is the biggest impact, as a human being you can give to somebody else. So, I mean, my humble opinion.
I love everything you just said, and people becoming their best selves is, that's part of achieving enlightenment and, the higher forms of functioning that people aspire to, and that more people, that everybody deserves, really. And that's what we see, is that human behavior is governed not only by individuals' free will, supposedly, but also by people's environment. And so an unhealthy monetary environment is a pretty good recipe to get people acting in ways that we would deem bad, and we would misjudge those people as being bad people. I worked for so many years in the rehabilitating people in the criminal justice system, and truly believing that almost all people are good, that makes a difference, because it becomes part of that person's environment, that people think highly of them, and then you see their behavior change, and then you've just proven to yourself that that the environment matters, and that it's our job to create a better environment. I love this comment, and maybe we could discuss this as well. So it takes one whale to destroy this.
This is funny. LOL.
Yeah, this is such bullshit. So the OA controls 95% of all liquid hex. And
you've done the audit, so you know.
Yeah, we know we've gone through over 3,000 addresses that the origin address controls. And by the way, that doesn't include any addresses that provide liquidity.
Yep.
That's 95% ownership, excluding addresses that provide liquidity. Right? Because you don't know who's providing liquidity.
Yes.
That's a hard one to
Sure.
But that's 95% of liquid supply, which we're talking about billions of dollars, and 87% of the entire hex network, where 8 billion tokens are staked. So I ask you, Chris, which whale has $26 billion that's going to overtake like the controlling entity? Which whale?
He must be
Well,
new.
maybe he means price in the short term or something,
Yeah.
but that's the thing. If people are staked in the long term, then the short term price volatility is a feature, not a bug,
Exactly.
because it shakes out weak hands. And it not only does that, but it teaches people to be stronger hands, because at any moment that you have a moment of clarity, you can time lock your money and have it immutably held for you, saving you from yourself. And that is different than other markets where people can panic sell when a whale comes in. And that, guess what? That encourages whales to have bad behavior too.
Yes.
Again, when the monetary system is sick, then all the participants become sick. So I'm not even gonna.
Yeah. But here's
Actually,
the funny
no.
thing,
I am
right?
still gonna blame the whales, the bad actor whales. I'm still
Right.
gonna blame them.
Here's the funny thing, right? The system has so many good self-defense mechanism that good well, bad way, it doesn't even matter, because like we talked about at length
True.
earlier, it's just understanding what the market maker is telling you. The whales are irrelevant. They're peanuts compared to the market maker. The bottom line is this. First of all, you got to ask yourself the questions, because we're going to break this down. You're talking about whales. Well, where is the coin coming from? If it's a new well, you have to buy, it's going to push the price up. And no well is going to dump below the price that he enters, or he's going to be wrecked. That's just number one. Number two, existing wells, so to speak, if they decide to take profit, it is their coin, whatever. Well, the liquidity is done in a certain way that if they decide to dump a crazy amount all at once, which then means that they're trying to be potentially nefarious, then the rightful defense mechanism is slippage is going to murder them. And that's fine. So by the time they dump whatever they have, whatever it's left, it's going to be worth way, way less. So it's designed in their best interest to do it over time, which is the right thing to do, or better yet, do limit orders so they don't even have to pay the fee. And then they will be bought it out of the system nicely. And by the way, this is the joke, and this is where I want Wells to chime in. In the regular market, it's like that. The stock market, people don't understand. There's someone that they don't have that much liquidity. Do you understand how many billions of shares of Apples are traded every day? Oh my God! If the Citadels of the world and the big institution were to just move 5-10% of their position, the Apple price could go from 200 whatever to like $5. They do it progressively over time because they understand how to take profit. And some of the pros, they do it so well, you won't even know they fucking did it. We have to come on this show to tell you patterns, distribution, to let you know what's going on. DMI has to track that because they do it so well, you won't even know what's happening. So
I would say, like, in response, and I
but
think we've gotten to a point as a group. I think we've gotten to a point, at least on this show, where we want concern trolls because they're just going to advance our thinking and make us prepare the community to defend the faith, like defend the math, in fact.
But Maddie, he's a perfect example of what I mean by, low vibration. It's not his fault, right? Number one, he must be new, so he doesn't know how the system works. And number two, because he's conditioned and so used to bad stuff, rug pull, this and that, which, I don't want to deny has happened to other community or wherever he came from.
Not his fault.
So he's in that low vibration of, fear, anxiety, what if, like Wells was saying, that's all hypothetical, right? And he's in that imaginary parables. So we just want to bring that information. So hopefully he gets educated and learn how this works because he's been doing that for a while. Now, if he decides not to take the information, now he's a concerned troll.
There's a lot of smart people who take in this information and it's too good to be true. And so I kind of understand, people not believing, but so that's why we're here, and that's the point of the show.
Questions. Yes, exactly.
I think, like, if I had to say like a one-liner to respond to this, I would probably say it only takes one Fed to destroy this, and I'm talking about the legacy system. So
pretty much. So let me explain how this actually works, right? Every day you see millions and millions of dollars sold. Mm-hmm. I'm not talking about bought. I'm talking about sold in Hex every single day. Now, if you sum all of those sales up, I'm pretty sure that's an equivalent of some type of whale. So why hasn't the price been wrecked yet? I'll wait. Matter of fact, we have all fucking night.
Yeah, right?
Yeah.
Exactly. It's hilarious.
You could rest your case at that point. I mean, honestly, we've seen since Big Payday, we've seen fat wallets that have just been completely and
Drained.
utterly annihilated and liquidated. I'm talking about wallets.
And they're all wrecked. Look at where the fucking price is.
Yeah,
look at where the price is. They're all wrecked.
They're wrecked. And look at the price. Look at the price. It's gone up 1,200x in 1.5 years. And they literally, they don't have enough economic mass to push the price down.
Yeah, this is nothing, guys.
A low liquidity environment, they don't have enough economic mass to push the price down. Because they're pushing the price down into fat green candles from large buyers that are defending these certain price zones.
Yep. I still remember the day when CM even like emergency end state that like 700 million, whatever. And even that we just have to be awake in a matter of just like a couple hours. The thing just got butt right back up. It was just like a non-event. It was just crazy. And that was like massive. Now it's a joke because they don't understand. Well, some of them do, which is why they understand now that the more you do that earlier, the less relevant you will become. There's people that literally lost their position, lost their class because of that. They are actually, as we speak, way poorer than what they used to be. And this is where it gets crazy. And this is where the only person they can blame is themselves because they're like, oh man, I should have done better. Because again, it's a defense mechanism. Nobody, and I think Johnny talked about it one before on the previous. Nobody really needs like $200,000-$300,000 every other day. No, you're just a fucking trader. And Hex is designed for the stakers to protect them, the best interest of the system. So if you behave like you clearly just trying to harm the system, then the system protects itself by getting you wrecked by slippage, and then perfectly wait for you to be done, and then we just wash you out and then see you later. And at this point, here's the joke: there's bigger well, and again, the well doesn't matter. Once again, market maker tells you the direction. You either participate or you don't. And if you're lucky enough to already be in, you need to understand what you have. Because it's in your best interest. You will get more liquidity over time because true investors understand that it takes time for liquidity to build. That's why it's called an investment to begin with. People that bought Apple, whatever, Tesla, they understood that the real money comes long term.
I think one of the wallets too that recently cashed out somewhere near around $6 million after analyzing all of the Hex to USDC transactions in the Etherscan wallet. So think about that. Like he cashed out $6 million, and look, the price went from 1.3 cents up to 0.8.
And somebody paid $6 million to get in.
Yeah.
Oops.
Yeah. Again, a perfect transfer because he forgets that. For anyone coming out, there's more coming in. Again, when I bought in first,
somebody must have slipped on that buy button.
Yeah, right. People forget my story. I helped make the top, man. The first time. Look, man, I wanted all of it.
Let me re-explain something that people seem to forget. This is very simple. When a product works like it's supposed to, money will come to it regardless of what the fuck people say. No matter what the fuck is on the internet. You want to know why? Because people that have money and know how to do their own fucking research know exactly what internet spam articles look like. You want to know why? Because that's how they make fucking money. By filtering bullshit. That's the only way you make money. So
preach. So
you really have to understand that it does not matter what a whale does. It never will, because as long as the OA owns 95% of that supply, it's mathematically impossible.
Yes.
Period. End of story.
Yes.
You have seen the billions of dollars of Hex sold.
This is why November, every month.
Since November 19th, okay? You have seen it.
Yes.
This is not like it's a debate. You, the fudster, have seen it.
Yes.
What is the problem?
By the way, fun fact, some of you were lucky enough to buy the price at what it is even now because some of those idiot exited the way they did. Because if not, you could have been buying it at 10 cents right now. You could be waiting tomorrow and the price is fucking 10 cents. You'd be like, oh my God, what did I do? I should have. And then meanwhile, your other stuff is gone. because we already show you how decorrelated it is. There's no reflexivity. The biggest pair is the USD. There's so many data, content that tell you it's just a matter of time. It's the defensive move. It's the new bond market. It does what it's doing in the regular market, stock market, but better. Because when people go defense, because this week, if the inflation numbers are bad and they start to rug pull people on the stock market, guess what? Everything is connected. Remember last stream, if you missed it, Tether is still a big risk. A lot of those, they invest in those commercial paper. If there is a rug pull in the traditional market, which could happen, the whole reopening shit, be prepared for that. It's going to rug everything else. And guess what? The shiny beacon light out there is going to be holding the fort. And as people lose more and more their value, more people realize, wait a minute, those hexagons are right. Richard is right. Look at all the tweets. It's literally free advertisement. The reason why we talk about this bear market stuff, it's not to create fear, it's to provide value so you're confident about what's happening, so you're not in fear. It's actually excitement, because that's going to be the biggest advertisement we're ever going to have. When everything crashes and you don't, first of all, you're gaining position without doing anything. And guess what? All the bots, the algo, and other market makers be like, oh, shit, like Wells just said, oh, is that where the money's going? Shit, we need to be there. Because because we'll recognize real. Market makers, no market makers. They're going to be like, oh, is this how this thing is moving? Okay, let's roll. That's it. The same way I did my math, I was like, oh, shit, it's moving like this? Okay, let's roll. Every month. I FOMO like an idiot. Like literally just a couple weeks ago, I put another 30K, stake for 15 years. I didn't even blink. Done. Why? Because I know for a fact that I'm buying Hex for less than $1, less than 10 cents. That's insane. That's insane. Any selling pressure, I'm like, thank you so much. I'm still not done accumulating. Hexagon, remember, true accumulation never ends. Never ends. Right? You never just say,
I don't see the Fed ever stopping printing dollars.
Exactly. So, because even when you want to understand or learn or build a business, you understand that the point about the savings is not saving to save. It's save to invest. It's capital that you can deploy when need be. It's like going to war. Real general understand art of war, understand that whoever really wins sometimes, even if you're outnumbers, is whoever control the food supply, the water supply. Especially if you're fighting a war. Go read history books, man. I'm a big fan of history. These are like literally wars were won with people that understand how to cut the supply because they couldn't get their saving, their food, and whatever. And then, if the troops are far away for where they're from and they're fighting, it's done. How do you think even Hitler and stuff got stopped? Right? How did they stop battles, Stalingrad, all this other stuff? Russia. Go read the history book. So it's important that you understand we're built to last. When everything crumbles and fails and whatever, they're just going to be washed by the wayside. We're going to gain at least, Maddie, 3 to 5 position without doing anything, just watching shit dies. Because that's what the bear market does. It grinds.
Top 10.
It really just squeezes so much that you're like, oh my God, like a ping pong slapping your left and right to the point you just give up. And then you just, right? Remember 2017? You got bounced around left and right. And at the end, when you thought, okay, this is it. This is the bottom. 6K. And then trap door, right? Wells.
Yeah. See you.
One more. We'll take it for one more rodeo.
Thanks for coming.
Yeah.
New highs, here we go. And then new highs, here we go. Just like that.
The new class comes.
I think there'll be another trap door at 20K. I think the price of Bitcoin will go sort of like 2017. Mm-hmm. It'll kind of try to build support at 20K, like the 6K support. Yep. And then another trap door, the support breaks.
Yep.
Boom. Bitcoin 10,500, Ethereum 645.
Yep. Because I need you guys to understand something. There's some really nefarious people out there. They're literally headhunter, just their agent of death. That's what they call. They're just out there to just take out people. You understand that there's some, not saying any name, but there's some Bitcoin businesses out there that literally cannot function if the price goes too low. It's going to trigger so much liquidation because some of those people, and again, we can talk about this, they live on borrowed money, loan that they took, all this other stuff backed up with their Bitcoin value. But if the price goes so low, you're going to see massive liquidation that you don't even understand. What you just saw is the liquidation of the retail guy. If the price goes too low, it's going to liquidate so many other businesses that got over leveraged. They got early, right? But the fund blew up. How many stories we heard that, right? Since back in 2011, people that used to have a bunch of Bitcoin that no longer even exist. Funds gone, this and that. So it's very, very important. Drama is going to happen. They're going to try to push the price down. If the support holds, at least the one for 24K, That's the big one. If that one fails, shit, you're gonna have big institutions out there purposely, hear me loud and clear, purposely dumping the shit out of it just to liquidate those other people, and they just come pick up the pieces at 10K, 12K, 14K, whatever you name it, because their goal is just to liquidate those people. They won't even care anymore, because that's when the shark really see the blood in the water.
I mean, it's just like you said, bro, earlier, right? I mean, they're like, this is why you can't use stops, right? Like the retail people when they're first learning, and this is how I learned. This is exactly how I learned. You don't use stops because they're gonna use them against you.
Yep.
And this is how we know retail is liquidated, because look at how price is moving. It's just going sideways, rolling over. And all that's happening now is that price is preparing for that next test of support.
Exactly.
Simply because now is when the game is about to get real.
Yes. And by the way, this is the reason why the definition of the scam week comes from. Why do you think the price goes so freaking low, 90% for just a freaking minute?
Split
just
second,
touch that shit, kiss it, liquidate, see you later, elevator, went back up.
Split second.
Just, I mean, you can make this shit up. You can't. It's just, it's literally, it will push the price where it needs to push it.
Yeah.
Because if the market maker already decided, listen, this is where the train is going,
that's where it's gonna go.
And you want to be in the way, shit. There's nothing.
You're gonna get ran over.
There's nothing worse than being a bull in a bear market.
Hex is a perfect example. Hex is a perfect example. Everybody is waiting to buy Hex.
Yep.
By default, everybody is waiting to make that market to the buy side strictly.
Yep.
Meaning any seller is going to get taken out. Period.
Because it goes the other way. Conversely,
exactly.
I'm going to say it again. There's nothing worse than being a bull in a bear market, or conversely, being a bear in a bull market. And the market maker tell you the trend, what's going on here. And that's really the key. And they're going to use narrative, the ALLin, the this, the that. No, that's just narrative. They already decided months in advance, guys, this is the game plan. We're going to run it like this, da-da-da-da-da. Because if they see massive bids and they just want to fill, shit, they'll dump that shit. They don't care. Because the moment they trigger the trade, the transaction, the swap, they already made their money. That's the point. They're buying when nobody cares, and they dump it after the fact. So it's just like the point is to get you liquidated. So they make money in those three ways that I've outlined many, many times, right? Get you liquidated, transaction volume, and then the rest is just destroying the business.
So I want to address something real quick that UFO Stewie was saying earlier about the fork and how we're not taking into account. Hold on, let me just read his comment. I don't agree with it.
Yep.
Hold on, it's the one right above that. He really disagrees on some points. The artist did not include any game mechanics or future events like the East Fork and his game theory. There are non-hex whales who'd like to see the fork fail.
Mm-hmm.
And well, I'll just start with that. Okay.
Now, haters. Yeah. Mm-hmm.
Yeah, of course, there's always going to be haters, but again, whoever the people that are meant to be excluded, right, that are of concern, they will be. That's already, right, baked into the cake. So we'll ignore that. We'll ignore that, right?
Yes.
Anybody else that's going to sell, well, here's the fact of the matter. The fact of the matter is that that's just creating an opportunity for those that are actually astute enough to understand what's going to happen past that point. Mm-hmm. This is literally going to be another big payday scenario. Mm-hmm. So that's all you really need to understand from that comment, because that's really going to be the net result of that comment. And then just go on to the next comment.
So I think recognizing that the audits, they don't cover everything and that we have to critically think about every new situation. I think that's an excellent point. And I also think that, there are going to be people, of course, who want to see the fork fail because they're stakeholders in the old system that's rigged. And that's a pretty sweet deal for them. What we're going to see is some of them are going to learn and some of them aren't. And it's going to be the ones that did their homework and who actually looked into it and looked into the community, looked into the math, looked into the smart contract, looked into the OA. Thank you, Gunter. And others who have done that. Silver the Antidote, I hope, can be a guest on the show sometime soon. Because the work that everybody's doing in all these different areas in Hex, it's combining to give at least the people who have maybe not the most money, but the most time and interest in learning about something, that's where we're going to succeed, is because really, what do you need to make the fork fail? Well, let's talk about that too, right?
Exactly. And, you see, and that's the key takeaway, right? Because we've done the time, we've done the homework, we understand how the mechanics works. And just to touch on that, this is why the sacrifice is going to be the way it's going to be to protect against all angles, right? Something can only fail if, again, just like in Hex, they talk about all this, that price, whatever. You can't dump something you don't have. It's first of all, just like market maker always controls supply. So they know that no matter what happens, no shenanigans, nothing's going to happen. You get to dictate direction, period, full stop, end of story. So number two, just understand sales 101, just like how if you work at a big company, you get equity, what they call golden handcuffs, because your interests are aligned, because you're getting basically free stuff. You're getting fork, you're getting copy. So you get instant buying from the community because you get a new free bag. Why would you not want to protect that price? Free money. You get that. Number two, Paul specifically, because of the way sacrifice is done, when you get the new value of the new thing, you have to actually sacrifice something else. Therefore, there is a level of a cost basis attached to it. So you'll be thinking twice about dumping the thing, so to speak. So, for example, if you sacrifice, example, at 20, 25 cents, and then you did the math and you got a certain ratio between what you sacrificed and your pulse value, no matter what happened to the price after a lunch, you will not sell below that minimum target, because if not, mentally it's like you lost money. So again, it's designed in a way that is always going to be a floor, always going to be a protection. And because you've done a sacrifice, those coins disappear, they leave circulation, which then create even more price support. But even the nefarious actor that's trying to come, well, first of all, he has to buy a bunch of hex, which is going to push the price against him. Which means no matter what, when he sacrificed, he cannot dump the price to a certain point, because if he dumps the price lower to the price that he purchased to create the sacrifice, he's going to be in the red. So all of those, again, those are mathematical facts, because that's just how the design engineering is done. Know who you're talking to. Like you know what I'm saying? The people that are doing that, like we don't do projects, we do products. Big difference. So people that have been in the crypto space since the fucking beginning, this is not their first rodeo. That's why we jokingly talk about all the scams out there and how we literally call up, oh, so-and-so is being rug pulled. Sometimes even live. I've seen where it's like it's literally being drained as we speak. And sometimes I've seen people in the community reach out to the developer or project that don't even know. Maddie, it's so sad. They don't even know that they've been hacked or drained until other people are telling them, hey, look, your stuff is getting drained. You don't even know. Like, it just shows sometimes lack of accountability.
So let's talk about the difference between a product and a project, because I think that's really a big, like, I think that goes over everybody's head, because that's why comments like that are made. Right? When something's a project, the implication is that there's always some potential variability in what is already known, right? Meaning that something could actually change. Right? If there's one thing that we know about the protocol that is Hex, is that that's never going to change. So if somebody is dumb enough to sell a bunch of Hex on the Pulse chain, well, I welcome the hell out of that. Because guess what? Hex isn't going to change, even on a freaking fork. No matter where it's forked, it doesn't matter. It's going to be replicated specifically as it is designed today. So there's just no way to FUD Hex. Like, people just need to get over that. Like, any concern is just opportunity. Because guess what? I am not the only person standing in line to want to buy this. And I'm not going to be the only person standing in line to want to buy this. Not today, not last week, and not next year.
And it's a mathematical fact. Like Nagabo would say, you get two bitches for the price of one.
Come on, man. Like, how many different ways do we have to break this down for people that have been in Hex to understand?
No, there
is no realistic. Like, yo, the internet has to just stop working and you just can't access that shit. Like, that's the only way.
You got other problems there.
Like, I'm being very serious. Yeah, I'm being very serious. Like, it needs to be a very, very serious problem for you to have an issue with Hex. Like, look at today. Perfect example. Half the damn web was down worldwide. You didn't notice because your Hex price was still ticking.
Facts. How many times we call like big market crash? You're gonna see another one. Everything shut down. The Coinbase, the this, the that, and then we just like, oh, another day.
I'm booking my room as I ignore this FUD.
Welcome, everybody. We've got an all-time high viewership, up to 270, 275 people watching all at the same time.
What's up, everybody?
Thank you for joining us. Hit the subscribe and like button or get out.
Welcome to the Quant gang, always.
Yes. Also, welcome. You're in the right place.
Yes. But we love those questions, at least if for those who are not at least consensual, because we love to educate and answer questions, because again, it's coming from that low vibration fear, because either trauma, personal experience. I mean, listen, we know we're in crypto. Like, we know that it takes time for people to deprogram the bad habits, to understand, hey, it's about delayed gratification. Hey, it's not get rich quick scheme. It's get rich for sure, long term. And the longer and the better you spend the time to implement those, the better you will be. You can't cheat the system. You do your time, you get your reward.
It's important to understand why, though, right? Because hearing us just talk about it doesn't mean anything if you don't understand it.
Yep.
It's very important to understand. If you don't understand, this is where the uncertainty comes from.
Lack of knowledge. Yep.
It's very critical, because how else could we sit up here and talk about the things that we talk about months in advance?
Great point.
It's because
it's all there on the channel.
It's all there.
The recording, all the proofs are there.
I mean, it's just a simple matter of understanding what is going on and understanding the differentiating points, right, between the properties of one item versus another. Because in reality, everything is the same, right? Because, the most important thing to remember when it comes to Hex FUD is that the first thing the person has to do in order to harm Hex is buy it.
Yep.
Just like Karim said earlier, that's step number one. You cannot duck out of that step. That's why it cannot work. Because as soon as they buy, somebody else is going to have to buy higher after them, and so on and so forth. So by the time they actually have to sell it down, hell, they might sell into a major buyer.
Yep.
Then what? Mission unaccomplished.
Oops.
Whoops.
Thank you very much. See you later.
Thanks for playing.
Can't take the buy button away then.
Like, you know what I'm saying? Like,
take the buy button away from yourself.
You guys got to understand, it's just about the design. It's not because I own it. It is what it is. It is what it is.
And this is what I always tell people, right? If you want to reach what I call level 3 understanding, which is key, right? Because the 3 level for the new viewers watching, right? First, you listen. Second, you understand. Third, you internalize. And that's the key. This is how the fear goes away. This is where you stop waiting for that other person, people, quote, whatever, validation, because that's dangerous, because you always become needy. Like, oh, if the news changed, you change. You don't know. When you really, truly internalize what is happening, how everything works, how the system works, like, you become less susceptible to the FUD and the negative influence of other people and all this other stuff. You just understand the mathematical truth and you use it the way it's supposed to do. And the secret to get to that level 3 understanding is by taking action, is by doing, right? Use the system. Do a stake. See what happens. Every day, 8 p.m., you get paid. Heck, you're lucky. This little bear market has lowered some of the fees. So we can actually, for some of the new guys, I feel good, that were sitting on the sideline because it's too pricey. Now I feel like, their day, weekly, monthly allowance, whatever, to build their wealth, because, again, they understand how CD works, is now going to be worth more. And maybe in the near future, they'll be able to buy Ethereum even cheaper, to give them even more X possibly. Well, no, obviously, unless there's another pump very soon. But this is something that is really going to help them. So if you're new, that's one of the best things you can do. And you'll watch how it's going to answer your own questions. Instead of sitting in what if, paralysis by overanalysis, overthinking things, just go do, right? It's like building something, right? Being an engineer, like overthinking stuff. No, just go do. Take action. Sell. Get on the field. Boom. Apply.
Yeah.
Right? You think of something, build it. Right? You want to paint something, do it. Because only by doing, you will get that muscle memory. You will get to really experience what is happening.
People always like to ask us, like, how do we know so much? It's just because we do.
We do. Take actions. Talk is cheap.
It's good. It's good to understand the risk of something, before you get into it. But you also have to think about everything in life. There's risk.
Right.
There's
I don't think.
You know what I mean?
You're right, Gunther, but I don't think you can really appreciate it. You know what I'm saying? I think there's risk in everything, just like you said. But I think You can't really appreciate the risk until you take it.
That's
because
true.
you can't really make sense of it until that point, because you can't really you're just trying to conceptualize something until then. You know what I'm saying?
Yeah, I agree 100%. This is the point. You have to take risks in life. So like if I'm afraid to get on the freeway because I see there's so many fatalities on the freeway and it's literally probably the riskiest thing I do in life. It's more risky than putting my money into any crypto investment, literally getting behind the wheel and driving on the freeway.
For sure.
But I'm willing to take that risk because I need to get from point A to B. I need there to be some convenience or whatever. But people don't understand that they take risk every day. It's a risk to go up to a girl that you like and be like, hey, like I'd like to have dinner with you tonight, because you might get rejected and people are afraid of that rejection. Or it's a risk to be like, you know what, fuck it. I'm going to train and I'm going to go climb to the peak of Mount Everest. Even though I know I'll see dead bodies along the way, I'm still willing to take that risk because I want to push myself and challenge myself to see what I can accomplish in life. It's important to take risks. It's important to understand risks, but it's equally important to actually take action, to take risks.
Yes. And more importantly, what people fail to realize, just like we learn in sales or whatever, and I've said that on one of my first interview with Maddie back in the day, is in the 21st century, your most important tools, skills, whatever that you want to learn is knowing learning your ability and your way to learn. Because the more you can learn, the faster you learn how to learn, the better you will be. And understanding how risk actually works. There is something called calculated risk. In other words, and I share my story, when I first started, I've done very short stakes in the beginning, couple of days, 1 week. Why is that? Because I was testing the risk of the system in terms of, okay, this is how I do a start stake, this is how I do an end stake. I'm gonna wait a couple of days and then boom, see what happens. I'm gonna end stake, watch the mechanic, make sure I do it safely, correctly. Why is that important? I've already done some of the math. I've already understand longer pays better, all that stuff. But I was just doing what I call calculated risk. Just like in crypto, if you have a bunch of money, first address, what do? You send fucking $50 just to make sure, hey, did I send to the right address? Boom, it goes through. Okay, boom, now you send the thousands of dollars. It's the same thing. So what end up killing people, what end up getting people the paralysis by overanalysis is they think they have to do like the one-time transfer, $1 million all at once. No, they're missing the fucking point. They feel like, oh, I got to go all in. No, it's not that. It's just do the calculated risk, do a little, test it out, get comfortable. It works. It does the mechanics. It does what it says it's going to do. The confidence is built up. And then you then double down. Then I went, boom, 555. It's the same thing. Just like a little kid. You don't just swim with the fucking shark day one. You go to the little pond, right? You get your little floater thing. You learn how to play in the water, get comfortable. Then you go to the six foot pool. Then you go to the Olympic sized pool. And then you go swim in the ocean. It's the same thing. It's a build up. Public speaking, same thing. Knocking on doors, same thing. When I learned how to build confidence. First, I went to talk to family and friends. Why is that? Because family and friends will judge me less. Lower the risk.
Yeah, right.
Literally, something simple, fucking stupid.
It's so true.
This is my product. This is what I sell. Be the customer. Let me role play with you. I do this for my team. I train people on that stuff. People that never had any fucking sales experience. I just said, no, just be yourself. Talk to people. Share the knowledge. Because if you're in fear, acting weird, that's what turns people off. So because you do the role play, no money lost, no opportunity lost. You're not out there blowing accounts, customers, acting weird. You're getting comfortable. Practice, right? Kobe Bryant, fundamentals. And then when it's time to go play, it's a video game. You're like, oh, shit, I've done it so many times. Boom. Practicing for a test. Everything that you do in life works like that. It's managing the risk, not understanding that if you're trying to do all in, that's how you're going to get too scared and then you're going to punch your way out of a great opportunity. Do a little bit. Do a small stake. Like I told people, there's no excuse. Everybody should have a 15-year stake. I don't care if it's one hex. Just fucking do it. So you get to see how much the daily payout works. You get to see the bonus T-share working for you. Earn to say, oh, wow, this is actually what fucking longer pays better means. If you have a short-term stake, I hate to break it to you, you don't really see what longer pays better can do for you.
Yeah. What's crazy, the first time I staked Hex, December 4th, 2019, My very first stake before understanding T-shares was a 5555 stake.
There you go.
My very first stake. It's insane. But I saw and I understood the basic value proposition of Hex without understanding all the details and all the mechanics. Yes, and then I spent the next year and a half to understand all the details and all the mechanics, and that's okay. Like, not everyone has to stake, 15 years, 10 years, whatever. You could still build. You could still build a nice, like, quarterly, like laddered CD from like present time out like 5 years or 10 years or 15 years. The beauty of it is that it's so flexible. It's flexible to meet your own specific financial objectives.
And by the way, it's done by fucking design, so that you can do the little one, realizing that you're fucking wasting your time. You should do the long one. But what it does, it gives you that peace of mind. Okay, I know how the system works. Okay, it's like the first time if you ever operate any like machinery or tool or whatever. First, you're like, okay, I don't want to mess this up, break stuff, or hurt myself. But then after a while, you're like whipping left and right because you just learn it like from back and center. It's the same thing. That's why it's so fluid. Understand something? In a regular market, CDs, sometimes they don't give you that fucking option. They tell you, sir, 1 year, 3 year, 5 year, 10 year CD. That's it. There's no.
They take what you take what they give you.
No, exactly.
There's no price appreciation.
Yeah, none of that shit. Zero.
You get 2% interest on a 5-year certificate of deposit. That's the best rate you get globally.
Exactly.
If you're lucky.
Yeah.
If you're
2%,
2% is being
in interest while they're taking 4% out of your back pocket, huh?
Yes,
that's right.
It's like this amazing system that the more you learn, the more you operate, the more you do, the more you realize how great it is and how flexible it is. It's like reading your favorite book. Like my favorite 10x. I read it 10 times, and every time I do a read, I learn something new. It hit different.
Yeah,
that's what that internalizing does.
That's right.
No, if you're religious, like reading the Bible, and then
it elevates your understanding.
Exactly.
It really
because you're reaching different phase, and you get to see, oh wow, that's what they meant when they say X, Y, and Z, and then light bulb moment, and then all of a sudden you're like, of course, 555. But
people used to think that the Earth was the center of the universe, right? Like they used to think that, and then they did the math, and they looked at.
Because we're human beings, right? We're selfish. We think we're the center of the world.
Yeah. That's by nature. That's default.
Right? Yeah. I'm the center of the world. What are you talking about?
That's right.
But yeah, Hexagon and new Hexagons. Again, you have no excuse. Do a little bit, try, test it. See how the system works. Watch how beautiful it is. Don't just take our word for it. Go and fucking do it. You get to see for yourself. You know what I mean? How great it is.
Also, if you miss the Hex opportunity, well, Pulse is your second chance. Like, don't make the same mistake twice. That's like retarded. That's incredibly dumb. Absolutely. Like, do some research, and even if you don't put in that much money, just always. I mean, like, you always have to take actions based on your own risk appetite. But at least go for it. At least put something in, even if you don't
risk appetite.
Yeah, you're lucky. Number one, you're in crypto, risk appetite. That's kind of a joke, but you're lucky. only in crypto, a little bit can turn into a lot. Only in crypto. It might take some time, but that's only in crypto. I don't care. Name me any stock. There's no other places where you can buy a stock for like $100. And then within 5 to 10 years, it does crazy ass return. You've never seen that. Okay. Even Warren Buffett back in the day, and that took him like 50 years.
Warren Buffett is going to look like a peon compared to us. Straight up. Because even he doesn't have 30% APY.
Yes, exactly.
He doesn't have a 30% CAGR.
You don't realize that the calculated risk has already been done for you. All you got to do is take action. So that you get to build that inner confidence, so you won't have to come to a stream to worry about, get that validation. No, you're getting from yourself, because you understand math is the same for everybody. But if you don't do, you won't experience what we're talking about. And this is how also we get to call you out, because if you were doing what you were supposed to do, you will understand, because you'll be getting the benefit of what we're talking about. So it's not fake, it's real. You can double check. When you end a stake and you get paid the interest and you see it, however stupid it is, just a weekly stake, just to be like, okay, does it work? Do I get the stake? Does what it says it's gonna do? Just to do that, just to get that peace of mind, and then boom, then you do the big stake. Simple. And you're lucky. Fee went down. Shit.
Yeah, do it right now. Fees is cheap, baby. Get it in.
The staking aspect too is extremely important, because there's so many wallets that hold stacks of liquid tokens. And I mean, we're not talking about like the whales, right? Because they're extremely disciplined, and they have no incentive or need to sell because they're already wealthy. So they can have millions and millions and millions of liquid hex sitting in their wallets. I'm just talking about regular users, right? Not like OA ownership. Regular users that have fat stacks. They could do short-term stakes or not stake at all, and they're perfectly fine, right? They just get the USD price appreciation, and they can also defend the price of hex. But everyone else, the temptation is too great. The volatility will absolutely destroy you. It will eat you alive. It's like you go for a nice swim in the ocean and you get hit by a fucking tsunami and your ass is taken down. And just the waves just keep rolling over you. They just keep bringing you in, the riptides, and you'll never come out of that. You'll stop yourself out of the market. Volatility will wash you out of the market. You have to stake to protect yourself.
Yeah. And by the way, I will be saying thank you very much. Now you understand where the yield is coming from. Thank you very much for your kind contribution to the cause. I mean, literally, because we're going to keep it to a factual from the get-go. That's what Quant Game is about. And that's what those who understand and take the action, they're like, why am I wasting my time trading? I'm getting all this money passive. I'm getting peace of mind. I'm getting the best shape of my life. I'm thinking long term. I'm planning for the future. I mean, it's a no-brainer. No-brainer. And then shout out the comment. We're getting some great comments today. So that's awesome. Say Sam. When Karim start cussing, he gets in the zone. Yes, I'm in the zone right now for sure. But yeah, literally. And then Hex Monkey had a great comment. See, the interest rate right now are less than the freaking inflation. So yes, technically you're losing money. If we were to talk about just like purchasing power, I mean, it's insane. You have something that's doing so many function, protect yourself from yourself, get you your yield, protect you from inflation, and give you all the great psychological and physical threats that's going to give you a better life. Delay instant gratification, working on becoming a better person, working how to be able to understand what to do with all those gains so you don't go crazy because you have an action plan. Oh, this is what I want to do in my life. This is who I want to help, community, this, that. So you can deploy that capital and not feel like, oh, you lost your purpose for life. Like none of that stuff. So that's important. So for anybody that's new listening today, go take some action. Do it. Short-term stake in the beginning if you have to, just to see how the system works, to realize it does it. You know, some people understand right away. Some people take some time. That's fine. It's okay. We all learn at different speed. The point is we all learn, right? Some people can swim. They take one lesson. They're already there. Some people, because they're natural, right? And some other people, they take some time. But the point is they get to learn how to swim so that if an emergency happens one day, they get, in the water, in the cruise or whatever, and they fall off the boat, they know they can survive.
You set me up, Karim. You know what I like to say? There's two types of people in the world. People who understand hex and people who will.
Yeah, exactly. Well said, Maddie. Amen.
That's
to
right.
That. Amen to that. That's awesome. This is great, yeah. Money printer, baby. Yep. That's
baby. Look, I personally cannot wait for PHEX to drop because I'm gonna go in like if it's December 2019 or January 5th, 2020.
Yeah. Like I think just let that sink in, right? Number one, it's a snapshot copy, which means quick math. Let's have some fun. Not only it's a snapshot. Why is it the snapshot is after the launch phase? People have no clue. It's simple. It's great. So everybody, especially people like analytic like me, we're already gonna know because we know how much the OA has. We know how much is gonna get sacrificed by then. So when the snapshot happens, we already know what the copy will have. So it's automatically already scarcer, probably even more scarcer because those hex got literally donated, whatever, sacrificed. So which means the only liquid PX you will have is the hex that you haven't already staked. Because if you're smart, you'll stake those so you get the copy of the t-shirt. Are you fucking kidding me? That's like bail. But let's say you were smart enough to do that, right? So you get that copy, which means the only liquid that's left is the stuff that you haven't already staked and that you haven't already sacrificed. Which means when it's sacrificed, it disappears. Which means what's actually left is going to be even lower. Again, done by design. And when the new people come in with a low float, what if it's going to happen? right? When supply is steadily decreasing and demand comes in, what do you think that happen?
That's an excellent point.
Come on now. Especially if the value of your sacrifice gets better by the time the launch phase comes in, so you get more pulse, which is what some of the new people want to be involved with. So it's like it's literally designed to help you almost safely FOMO in, because people, entity, whatever you want to call it, had to think about how to design something that even with human nature, people being crazy, they don't end up screwing themselves. Like it's amazing. So you can do the right thing, get the best reward, and live the best life.
You also have all the tokens that are going to be sacrificed, which are non-hex tokens, which the controlling entity you would imagine would probably dump on the market and buy up hex.
Fuck yeah.
To pump the
price. Even more scarcity.
That's what I would do. Up. But I don't know. Would they do something different? Or
yeah.
Think about it.
It's not going to dump.
Because think about it. What are you going to do that? Number one, the hex liquid just stay liquid. It gets copied on the other chain, just sits there to pay the interest because that's its job. Again, it's a function of the system. And then with all the other coins, like Maddie said, because there's so much money on the other coins, those literally get dumped, sacrificed, pushing the price even higher. And then literally, because if we're about to hit bear market, why the hell would you want to hold those other coins that are literally dumping? Makes no sense. Again, we're just using logic here. We're not even talking speculation. It's just logic.
Especially if they're sacrificing bullshit tokens. Okay, forget about Bitcoin or Ethereum, for example, but just like all the other shit coins, right?
Exactly.
You're not going to
get hammered when Bitcoin crashes. So therefore, you want to get rid of that shit as fast as you can, convert that to at least USDC, and then push the other price up because you get your bigger value sacrifice. Because it's the same play with telling people, stop holding your shit coin that are losing value, that are not paying you daily interest, convert that into hex via USDC or directly, depending if you have the correct pair, because I know you may have a shit coin that doesn't have a direct pair to hex, so you may have to go to USDC first. But the point of the matter is you're protecting that value before it goes down. That's why we're spending the extra time showing you, hey, look out for the indicator. Look out for the trend line, because when this shit dumps fast, you won't even have the time. Market makers are so fucking smart. They do it sometime when most people are asleep. What do you think most of the time the price dump around 3 a.m.? Why the fuck do you think that?
Also rips around that time.
It's perfect. Americans are asleep. Even in Asia, usually around the early afternoon, people have those kind of breaks.
Even London isn't really up yet. They just get started. That's like 7 a.m.
It's literally designed to do it at the perfect time. You went to sleep.
We've been at this for a little while, people. We know the tricks.
You woke up, shit. Price is down 15, 20%. What are you going to do? Sell? You already missed the move.
Your ass is in bed, sideways. You ain't doing shit.
It's like we're talking about snipers, right? Sniper already did the deal, and then the fucking police shows up, and the detective. Let me tell you what happened, bitch. The guy's dead.
This is long gone.
You're supposed to prevent.
There's always money to be made in people day trading. So if you create, a certain timing that people think it could pump or dump, then people are going to try to play that. Like the daily lottery or something, and then there's going to be money to be made. If you can pick up that
trade, yeah. There are certain markets that move at certain times. If you can pick those trades up, you're a winner.
Until
even in the traditional market,
until the fifth time, and then it trades against you, right? And it only takes one time for them to take everything. Right. So
steamroller effect, baby.
This is why even in the traditional market, you have what I call those gap time. Pre-market, post-market, 10 to 15 minutes at opening, 10 to 15 minutes at close, all this sort of stuff. Sometimes the expert, the market makers, dude, they make money. They make hundreds of thousands of dollars in 10 minutes. They literally just play the open or the close. They just run a scenario, rug pull, push the price up. You come in, oh my God, this news done. Or they dump the price. Oh my God, it's going by, and then you sell, and then they just purchase everything. Yeah. So it's just literally they know those timings things that they do because it's also low liquidity. So they get to do what they plan on doing or the manipulation that they want to do. So it's just understand why we're showing you those things to learn ahead of time. So you have no fucking excuse. So if the price dump, you can't be like, oh, I wish I knew. No, bitch, you knew ahead of fucking time. We told you already. Watch the fucking indicator. When it crosses, don't wait. Be wise. Don't be smart. You're always going to miss the move. They're always going to do it when you expect it the least. Heck, better yet, you fucking awake when they do it. What do, Maddie? They lock you out of your fucking account. Oops. Like, even when you're awake, oh, I'm catching the move. Oh my God, Bitcoin's going down. You can't log in. and then you go on Twitter and oh my god, Coinbase, dude, learn from that shit. Come on now. Stop being like, because that's why you feel bad, because you're getting triggered, you're getting emotional, all this other stuff, because you're feeling helpless, because you never understood, not your key, not your crypto, right? We're all about personal accountability. Again, Mexican, we're not nice people. We're kind people. Understand personal accountability. Fool me once, okay, shame on them. After many times, whose fault is it?
Yeah.
Come on now. When are you going to learn? And Hex fix all that, says all that. So
It's the environment's fault. That's why we have a better
oh my
environment.
God, yeah. His environment, it's ALLin, is this, that. Next week, you're going to get a new name. I mean, meanwhile.
So, yeah, I guess what ALLin's doing, now that I think about it, he's probably dumping the price so he can like buy it lower, right? So he can say that he got more Bitcoin and then come off as like a god again to the Bitcoin people. And he shook out all the weak hands, so you're welcome.
Right.
That's definitely the play.
Could be.
Yep.
Why else would he be waffling back and forth? We've seen him do the same behavior with Tesla stock and wrecking the futures markets that were betting against him and that sort of thing, right?
Yeah.
So, yeah, we're getting great comments again.
Unless he's just psychotic, but
yeah, no, I mean, listen, he has his own plan, but people need to understand at the end of the day,
Doesn't
it's
mean
not
it's
worried
gonna
about
work.
individual and this and that and be triggered and all, because here's the fucked up part, right? Here's the reality. Again, accountability. When the person, whoever it is, you know what, it doesn't fucking matter. When the person does whatever you want to happen, oh, he's great, he's out there kissing ass and doing all this other stuff, and then when they start doing or saying the thing that you don't like, now all of a sudden it's market manipulation. No, you can't have it fucking both ways. What you need to understand is individuals are individuals. They will always do what's in their best self-interest. You need to understand that Elon Musk is not your friend. As much as you want to idolize him and this and that, and it's not just him per se, he's other people. He's very useful to the world of what he does. The same way people who are investing in not because they like him, but because they know they can get a return. It's as simple as that. Understand how a company works. This is what I say R1, and I'm going to say it again. It's very important. When I saw Tesla started to dump 5%, that's a big deal because that's big money. And usually those market makers, they can push Tesla all the way to $1,000. The reason why they're pushing the price down temporarily is because they still know, well, Elon still owns like 1 point something fucking billion dollar worth of Bitcoin.
yeah.
And there's a high chance that, again, this is just math. I'm wearing my investor hats again. There's a high probability that by the time the quarterly earning report comes out, it's going to be negative. And because it's going to be negative, it's going to trigger a sell event because Tesla is still not that profitable. It's still riding a lot on the government subsidies and stuff like that, which is why, as a company, they had to play that defensive move because they don't give a fuck about you, rightfully so, because their credit is more important. Because without that, they will lose even more shareholders or value because that profitability will go lower if they get canceled out because they're not at the point where they can be self-sustainable. Because I'm in the renewable energy fucking business. As much as I love solar, we still can't do those no upfront cost deals without the subsidy. Now, we're planning for the future to build enough economic mass, customer base that by the time the subsidy goes away, we're perfectly positioned to win. We're actually wishing for that shit to happen because we're going to destroy the competition like that. Because those who are not built to last won't be able to survive. Therefore, they're going to get washed out. That's just a business move. So they're doing what's in their best self-interest, which also tells me when Elon says it's not me, it's Tesla, I'm playing the scapegoat, that tells me as the price goes fucking down, they're going to be fucking selling that Bitcoin if they haven't already, because they cannot afford to have a $500 million. I mean, they bought it around 35K, price at 33, 32 right now. They're already down like $80 million. Okay. So smart investors, swing traders, or people that do the research, they're like, okay, price went up like crazy. Okay. They hold a lot of fucking Bitcoin. They made more money in selling Bitcoin than the cars. That should tell you something. When the price goes up, buy the fucking Tesla. You're riding that wave because indirectly you're owning the Bitcoin. Same shit with the Michael Saylor. Same shit with the grayscale. That's the play. So they can own the asset indirectly through the stock market without having to worry about holding the Bitcoin. Because the big institutions, they can care less about Bitcoin. Let's be real. They just care about where's the yield, where's the gain. That's it. Wait until they find out about Hex. It's going to be even better. But the point is, now the tide has shifted. That's what grayscale premium is going down, negative. People are exiting because if somebody is willing to take a negative 13, 15, 20% pay cut, it's because they fucking believe the price is going to go much lower. I said it again. It's common fucking sense. The same way the little guy should only do a swap at a high fee if he believes the price is going to dump lower. If not, you shouldn't do it. It makes no sense. If you're going to swap and you got low money and it's going to cost you 20%, 30% cost, and you don't believe, keyword, that the price is going to go at 30% lower, then you're stupid if you sell. So if they're willing to take that pay cut, knowing how high they bought it, that means they believe they can buy it much fucking lower. Okay? That's important. And new Bitcoin is going to keep mining every day. They can tell you about halving all they fucking want. It's still not deflationary. It still inflates. Yep. Guys, if they see the tide is switching, they're going to dump every Bitcoin they get because they're like, yo, let's get this 30K while we can before it goes lower. So you see that, you see the writing in the wall. And because the big institutions are selling Tesla, it's telling me they believe that the Bitcoin value is going to go lower because those people are going to have that in their balance sheet. And Tesla most likely going to probably get rid of more of it, if not all of it, depending on how low the price goes, because they're going to be like, this is the margin call. They're going to be like, okay, if it goes below a certain point, we're going to cut our losses. Make no mistake. If the price goes below 20K, I don't think Elon and the board is going to hold that. They're going to dump it, push more FUD to buy back lower. That's what they're fucking doing. He's going to create this narrative.
Buy back lower.
Price, buy back fucking lower. Tell you that Tesla is going to do X, Y, and Z, and you're going to be able to mine from your house with renewable energy and blah, blah, blah. All along, they dump the price, push it lower, buy back lower, and then come back with a new narrative. Remember, I don't really care about the mining stuff. It's just a new narrative to repump the price up. You're going to hear it. Make no mistake. But first, they got to create the negativity first. Push the price down. So when I saw that sell-off, to me, that's a big, big negative sign that even the big investors are saying, okay, it's just like the BTC premium. Same shit. Negative 12%. Right now, people buying Bitcoin 20,000 to 29,000 as we speak.
So what you're saying is Elon's going to land the price of Bitcoin like he lands a rocket. Then it can go right back up.
Right? Oh my God. So you need to understand, and this is how business works. That's how you remove the emotion. You don't need to like or hate Elon. Elon is Elon. He's going to do what he wants to do or whatever for the world. Understand what's happening so that you can position yourself so that you can win. Because everything else is just fucking narrative. Just like the Bitcoin miners, they got no fucking clue. Because a lot of those people, they just inherit the money. They never really understand how business works. They never build a business. They don't understand. And that's why they get so triggered because they're in that primitive state. Oh my God, this is my wealth. Because they don't know how to create actual wealth. So they have to latch to what they have and that's why they become very toxic and tribal because that's the only way, sadly, how they know how to make money.
Scarcity. Digital scarcity is their only real narrative. And so when you operate from scarcity, then you can't operate from abundance. And
this is why the Ethereum community is a little bit better overall, much better in terms of less toxic, because at least some of them know what DeFi, they're trying to create and replace the banks, new businesses, DeFi. They're trying to create new product. Some of them might disagree, NFT, this, that, but at the end of the day, I can't knock a hustler from hustling. People shouldn't be stupid to like buy those NFT, but hey, somebody selling the NFT is smart. He's making money. He's selling you some shit he created for free. I don't care what the price is. Money in his pocket, nigga. What? What are we talking about? You're buying the thing. He's selling. So, no. Now, obviously, some of them trying to make and provide value. This is a difference I told you all the time. Salespeople, a sales professional. Sales professional truly believe they want to add value to the people's life. So when they buy the product or services, their life actually get better. It's a win-win-win. And what that does is you create recurring customer, fidelity, long-term investor. That's why Hexicans are cool and they got a great product. What do you think they're going to do for Pulse when they know what Hex has done for them? It's a no-brainer. They're going to support the thing that getting the wealth to begin with. It's the same thing. The same way accountability is important. Respect is important. And your reputation is important. That's why Wells was talking about earlier, finished fucking product versus project. Like we're just going to wing it and see what happens. No, because those people are not built to last. Again, they have that instant gratification. Let's go to market. It's not finished. Who cares? Let's go to market. Let's go raise money. And to some extent, that's why Ethereum also did. We're just going to build that. Oh, I mean, I get the entrepreneurship, but at some point, after a while, you got to deliver some shit that's not going to get people fucking destroyed. Got to be responsible. Not jumping at the top of the market, be like, hey, thanks for playing. We get the highest value, and then we see you at the bottom when we're going to buy back everything much lower. Come on now.
Thank you. Try again.
So somehow people decided that making a token non-fungible is a good thing. Of course, Here's a good definition I've found of good money in the information age. These are properties of money.
Yeah.
There's 10. 1, recognizable. 2, scarce. 3, censorship resistant. 4, durable and indestructible. 5, extensible. 6, saleable. 7, portable. 8, fungible. 9, private. And 10, divisible. So maybe we can make a non-divisible coin and make billions of dollars off that. I don't know. If we're just making things that are bad versions of money and that's what the market wants, then that's pretty silly. But
as long as you know.
I mean, that's important. Again, that's how you create win-win-win versus win-lose situation. People don't understand. When you understand that and you delay that gratification, even as a business owner, this is how you'll be able to last. You're creating so much wealth and abundance that your shareholder will hold your stock, your whatever, your whatever that is for decades and decades and decades, because they got so much more. I always tell people all the time, people that I even train, always give people more value, more than what they expect. Always deliver more value than what you're getting paid for, because that's going to create that positive reciprocity that people will always want to buy from you or interact with you or do business with you, or if you need a favor or whatever, because it's coded and built into your DNA. Because, you know, good people attract good people, right? You do something good, you get that karma, which is just basically that memory effect of like you did something good for somebody, they remember that, so they want to reciprocate. That's what's important.
I've got a favor to ask of the audience here to make a 60-second video testimonial about how Hex has helped you, and to post it on Twitter, #HexChallenge. And this is an initiative that I've started with Markable Thoughts, who did a compilation of Johnny Chaos's campaign to raise awareness about Coinbase not listing Hex. Well, not allowing you to buy it. They list it, the price of it at least. But so here we're trying to create a mega testimonial video so that people can come and see your testimonial and other people and how Hex has been changing lives. What's your use case for Hex? You don't have to have perfect hair. You don't have to wait until Hex is done changing your life. We're asking that you do this now as a way to give back. If Hex is given to you, then you can give back in this way. And the ones that we've gotten so far are outstanding, but we haven't gotten enough yet to make really the impact that we want. So if every person watching, if you've been helped by Hex, now's the time to speak up and pull out the camera and do a 1-minute video. Are you guys willing to do one?
Amen. I'm always doing videos, so
that's true. That's true.
So it's just like, you know, one day. I mean, they, for Gunter and Well, they get this to audio.
Word.
I
mean, that still counts, right?
Yeah,
like, they have valuable things to say.
That's it. With the sniper logo. That's it, baby. Tilton 6. Oh man, it's awesome.
I can definitely do one.
Yeah.
Awesome.
Yeah,
thank you. Yeah.
We love you too, brother. Coconut in the chat. Boom. So no, that's important. So, and I'm glad we're having this conversation. It's important. This is why, again, sense of purpose, sense of community. That's why we're spending the time coming on the streams to add value. And it's great to see, you know, the committed Hexicans that come on the stream. Again, just like a business, you're adding value, people come back. It's the same thing. You don't add value, you treat people wrong, you do the wrong thing. Well, guess what? People write you off fast. It's as simple as that. It's a very basic concept, but it's so profound. Most people missed it. Like I've said it many, many times. What's easy to do is also easy not to do. This is the reason why it's so profound. People don't understand. Like basic stuff, anything you want to do, whatever it is, like eating healthy, exercise, whatever. Like when we talk exercise, we talk about like when I used to be young, I didn't have time, whatever. I just do like 50 push-ups a day. Just simple, whatever. In my room, I didn't have like fancy place. I didn't have like, oh, I'm gonna go downstairs to the gym, luxury condo, none of that stuff. I just did what I could because I understand that repetition, right? Mother of all skills. You know, Jet Li said it best, right? He doesn't fear the man that can do 1,000 kick one day, like one kick 1,000 times. That muscle memory that you retrain And you see how you're naturally getting buff without even doing anything crazy. You're just being consistent and have that frequency. So, and that's why it's like yield. It's consistent. You don't see it, and then one day it's just wow, so big. That daily, especially in the
Hex Scoop. I already posted mine, so I can link to it on Twitter here.
Oh,
yeah, I definitely did.
That's awesome.
A little late to the party,
which is now perfect timing, like we always do, right around hour 4. Wells, I think it's time to run the charts.
Let's do it, baby.
Yeah.
After Maddie. Yeah.
We'll start with my little trend lines over here on the Ethereum and the Bitcoin charts. First up is Ethereum, looking sick as a dog. And yeah, it's just moving averages, man. They're looking just not as steep as they once were, and that is just not a positive sign. As you guys already know, I've discussed this many times, and we even have my little directional trend lines here highlighting that we are currently in sell mode. Now, the one item that I'm keeping my eye on is this trend line here, currently targeting 20,060 or 2,067, 2068, 2,100 basically. And we're just waiting to see what happens there. And if that bad boy breaks, well, then there you go.
And if I may, funny enough, if you kind of like zoom out and go together, it almost looks like a mini Wyckoff version of Bitcoin. Same thing, just weeks ahead. We did a little dancing, created a new last all-time high, fell out of the trend line, and then literally it's almost the same shit, but just a week behind. You see how he went a long trend line, right? When he broke that, it was just
this instead of it being sideways, it was just slanted. Right. That was really all it was.
My eyes just see patterns like that. So when you go out to, that's why I told people, watch that long-term trend line. If it's gone, see you later. So we already broke the big one. Now there's that little one, that purple one that Wells has, which is the one that I show on my thing too. So when that one is broken, forget about it.
Yeah, but the main thing I want to highlight is just how RSI and the MACD have run, right? Like you had a bull. This is a bull trap. This is what this is. You had bullish momentum set up, but the moving averages never went over the zero line. Never went over the zero line, right? So this is important because that's highlighting how RSI ran up into his mid-range.
Got rejected.
Defining now that we are in a bearish trend, right? And we've talked about this before numerous times, how when the RSI is probing the middle band and bouncing off of it, that's bullish. And when it's doing the opposite, that's bearish, as we can see that here, right?
Perfect example, the COVID dip. Just zoom into that. It's the perfect technique. Broke down, went to retest, got rejected, and then plunge. Look at that.
Boom. I mean, this was sharp, right? This was just drastic.
It is mimicking that right now. It did an all-time high dump, trying to go back up, bullish, got trapped.
Same exact thing.
Same thing. And then now, see you later. Now, the see you later might be 1,500, 1,800. Nobody knows.
Yeah, I mean, that's the thing. Like right now, I got those levels. So that's what we're looking at right now. And if 1,200 breaks, then I don't know, bro. Damn. Right, like that's a pretty big gap right there, man. It could stop here. It could stop here, right? Like you got. Well, I don't even want to say it out loud, but let's go with 650 first, right? Like if we break this 1,200 area, it gets hairy because you got nothing but air under here, right? You got this 930 area. Then you got this 645.
Damn.
And then you got this area here, which is 507, which we kind of traversed along for a while before we actually went anywhere, right? Like this was.
Damn.
Yeah.
Mexican, listen up. This is to remind you.
100 days or so, 90 days. So it's a little while. Yeah, a little bit of time.
So manage your own greed. Manny can talk about that. Manage your own greed. You're sitting on the $24, $23, $2,200 Ethereum. You're still, I want the 3,500. And then, like Wells tell you, next thing you know, it's at fucking 900, 1,200, or 600. You're gonna wish you sold that shit when it was 2000.
Yeah.
Understand what's happening. We're not calling any bearish, but we're just telling you if the trend line is done, understand the trap.
It is what it is, man. I mean, you know, I didn't even really talk about Bitcoin because I feel like I've talked about that one enough, but maybe not. Bitcoin is, you know, looking even worse, right? Like,
it's ready for the next box, Wells.
Yeah, it's ready for the next box. Yeah, and I told you guys these boxes.
Did you call the market makers?
I mean, yo, look, I know this is like unorthodox, right? But let me explain how I look at the market, because the reality is that price is what matters, and that's how I look at the market. So if the price is telling me this range matters, then I need to draw that shit out. And that's what the market did here. And look at what happened here. Not a coincidence, folks. And here we have another box. But here's a beautiful thing, right? Fibonacci and symmetry is everywhere. And this is all that is. This is just a function of the retracements that the market is doing already. It's just the natural retracements that the market is going to do. So in reality, it's like using a Fibonacci retracement indicator. I'm just doing it manually. That's really all it is, because it's all the math, right? Because I took this range and I'm just replicating it below. I literally took that, copy pasted them. That's where these other boxes came from. Yep. So
61.8.
Yeah. So exactly.
That traps door, and then see you later.
Yeah. I mean, it's you know, this is no joke, right? Like, Bitcoin couldn't get above this line, right? This line is important because it's defining the upper bound for price at this current moment in time.
Yes.
Right? And it's sloped downward, meaning that upper bound is decreasing over time. That's very important.
Yes.
Because what's happening here is that now you have a red MACD reading.
Yep.
After having a bunch of green ones, aka the bull trap.
And this is why, to keep it simple, when you look at DMI, it tells you all of that only ones, the intensity, let you know the market maker is giving you that fake out, that bull trap. You think, oh yeah, it's going back up, and then you stay there, you're complacent, and then you become the Wall Street cheat sheet textbook, and then you sell at the bottom after all the fear came in and whatever, and see you later.
This looks just like negative X squared, man. Look how concave down it is. There's nothing that suggests that the price will go up. It's only concave down.
Yep.
Taking the stairs, baby. You're lucky. There's no elevators. Market maker has a lot of liquidity. Has a lot of inventory. So he can't take the elevator. Too many people. He has to take the stairs. He can't just spook you like that. But understand what's happening.
Trying to find that drawing tool that lets people draw curves. I can't remember which one it is. Like,
and
curve lines.
Just keep making like lower highs and lower highs.
Yeah, that's exactly, because here's the thing, right? The RSI is literally grabbing. It's literally grabbing. It's literally grabbing the return streams, right? And it's calculating them to show the strength. So the thing about it is, like, this trend line just continued, right? It really never stopped, right? It just kept showing how weak price is going. That's really all it's been doing.
And if you switch to the weekly chart, you can see even more clear, because that shit turned fucking bearish as fuck.
Yeah, I mean, look at that shit.
Look at this. Remember a couple weeks ago? Oh, Karim is gonna bounce back up off the dude. It can't get any more fucking bearish than this. It's textbook.
Remember when it was over here? People definitely thought it was gonna bounce. Yeah,
and remember 2017? You can make this shit up. Once it got oversold, what happened then? Stay there for fucking months, years almost. Look at this. Disgusting.
Yep. And this is basically the same view right now. So good luck to those that hodl the wrong coin.
Yeah, you become the liquidity. I told you. Market maker got inventory to liquidate. And
hey, look, I'm gonna be buying Bitcoin and Ethereum once they get to those crazy levels. I'm just saying it now, so don't get it twisted.
And Maddie, this is why, just like a fucking IPO, no offense, when you hear, oh yeah, country, this and that. No, you're the liquidity. You're the new person, the new holder, the new bag holder. They need to dump it on you to become the new bag holder for the next cycle. That's this. That's the brutal, honest truth.
Yeah.
Given this fact too, with Ethereum's chart, we should expect to see more liquidity providers pull their liquidity from the Hex ETH pair and transition that over to the Hex USDC pair, which is where we have the majority of the liquidity anyway.
Yep.
But you would expect to see even more and more, given the fact that they can see how bearish Ethereum is.
Yep, because the problem is liquidity, which is amazing, right? Because it works both ways. It messes with them two ways. Number one, as the Hex price goes up, mathematically, the Hex ETH will readjust itself too. And then because they get those who are lucky enough to buy early, they have some inventory to liquidate. But those who didn't, and the price continued to go up. Now the trap door is fucking you up. It's like a short squeeze because you can't get fucking back in. The only way you get in is by pushing the price up against you, which now you become the new support. Or you convert to USDC because by doing so, because it's the biggest liquidity, you can come in with size, because we talk about big players, without pushing the price too much against you. If you buy 100,000 right now, just work for Hex on the Hex ETH, you're going to probably push the price against you like 10, 15%. Easy. But if you do it on the Hex USDC, you'll still push the price against you, but less. This is where, again, liquidity is protecting the system and making sure you're incentivizing the right behavior. Come here on the USD side, not on the other side. Because we don't want to deal with the bullshit when Ethereum shit the bed and then fucking bots comes in and trying to, arbitrage and basically steal money from the system. That's what we're fighting against. Look at this beautiful thing.
That's right. This thing is singing to me, baby. Woo! Look at this. Hex versus Ethereum. So this is just to answer Seth Jordan's question. If ETH has a drastic dump, what does that do to the Hex price? Since Hex to ETH is the second largest LP pair. Well, I think this chart answers your question.
Yes, and keyword is the second by a landslide smaller compared. And Wells, if you go to the apex.win, we can even pull out liquidity and show people.
Yeah.
Because we have V2 and V3, and the combined liquidity USD is like somewhere around 70 to 80%. What is it now? Like, yeah, if you combine the two, yep.
Let's see. V2 USDC is 57%.
And then V2.
And then the ETH.
No, and the V3.
V3 is 23%.
Exactly. You have to combine both.
What do you mean? You want both? You want all the V3 or just the whole shebang?
No, all the USD, because they're both USD.
Oh, you just want the USDC?
Yes.
Yeah, that's going to be about 75% of the pool.
Exactly. And that's the correct answer, because V2 and V3 USD, because some people that do limit orders and stuff, it's still basically a USDC pair. So it shows you that literally more than 70%, amazing, is USD.
57 plus 23 is what, 70?
80%.
Oh, that's 80%. My bad.
80.5.
Yeah, 80%. Yep. Because the only ETH pair is the 17 V2 and probably the 3% V3. So it's amazing because it creates a protection mechanism. So the reflexivity is not bad, meaning if Ethereum dumps, it's not going to affect as much because the liquidity is only 17%. And I'm sure the smart whales and those who listen to the show who understand that the Ethereum is about to lose fucking value, go get your yield before it's too late. Protect yourself. Common sense.
Don't wreck yourself for fun now.
But I know some of you guys listening, you got that fucking Ethereum on the sideline that doesn't pay you any interest. Use it before the value decreases.
Yeah, it's gone.
And T-share is above 1,000, just chilling, which is amazing.
So let's get to those charts. All right, as you guys know, the information displayed in this broadcast is known to cause increased amounts of FOMO. Quant Gang and their guests are not responsible for any losses you may accrue for not staking your T-shares accordingly. Sounds like a personal problem. All right, just as a friendly reminder as to how economies work, right?
ELLin hands.
At all levels, right? When you have public entities sucking up a big chunk of the economy, that leaves a whole lot less for us.
Yeah.
Their job is to work for us, not for us to work for them. So let's keep that in mind as we move forward in time, because a lot of people seem to have that confused. They don't run it, we run it. So let's remember that.
Mm-hmm.
All righty. So the first 541 days of exchange activity on Hex that is recorded. We lost the first 2 weeks, so this is all we have. We are comparing Bitcoin, which is the flat line here, Ethereum, which is at 875 on the index, Hex and T-shares, which are at 27,586 and 49,186, rounding up on their respective indices. Now, here's the thing.
Amazing.
T-shares don't stop going up, right? It's kind of hard for that to happen. And the reason for that is because people are staking. And with that, people are also end staking. Sure. And that end staking portion of that equation is what's driving up this T-share rate. But here's a cool thing. While people are here worried about a little down move in Hex, what they don't know, or maybe they're ignoring, is a simple fact that the correlation between Hex and T-shares is 99.9+%. So what does that mean? That means that the longer that this keeps going up, the longer that's going to keep going up. And that this trend line here, that is by the function of the curvature, meaning the characteristic of this return stream, is just going to stay that way, right? Like something drastic has to happen and stay drastic in order for this to not be true any longer, right? So, understand that this is what you want, right? No matter where you buy Hex on this curve, the longer you hold it, the higher this value is going to be. That's the most important thing. It's crazy, but it's true.
Know where the train is going.
That's right. That's right.
Now, if we go back for just a second,
sure.
I know that WhalesOnly and I had the idea the other day off stream, if maybe we had a little pizza party for when Bitcoin moves off the zero line there.
First day.
Hold on. You know what? I wonder. Yeah. I'm about to check. We might be in Las Vegas at this point in time.
Yeah.
I think it's right after. Isn't it the week after?
Oh, I think we checked. I think it's the 28th.
So
yeah.
So on WhalesOnly stream, so on his channel, go ahead and subscribe to youtube.com/WhalesOnly, and then I'm hoping we can have a stream there, and everybody can order pizza at home, and you can pay in Bitcoin or dollars, whichever one you value the least.
Right, probably Bitcoin.
Funny joke. If you're in New York,
let me stop lying.
Yo, if you're in New York, you can hit up Pompliano's spot and then give him the Bitcoin.
That's right.
Word.
Right. Jump on his head.
He'll be selling it right after anyway.
Give it back to him. You can have it. You can have it. Before the value goes down. Oh, by the way, shout out to Food TV in the chat. Great comment. Sold my ETH when it was 3,500 in BTC at probably 55 there and bought Hex at 3 cents.
Lovely.
Never look back, my man.
Wow,
make me proud. That's what we do.
That's a trade right there, baby. Look at that.
And a man of action. He just saw the writing on the wall. He knew what was good. Let's go.
Because the value would be too slow. So low. That was funny, man. Oh man. I mean, this is just crazy.
Yeah, they might say, sir, we need another 20% the money lost value.
Oh boy.
But with the Lightning Network, then the pizza place, they could hold on to their own Bitcoin and not buy ingredients and then give you an imaginary pizza, Like that would work.
Rehypothecated pizza.
Yeah.
Definitely doing it.
Dumpster pizza.
Because that day is what, 556 or 558?
562 is
562. Perfect. So we are 41.
21 days away from that point in time. So it should be it should be on the 30th according to that calculation. So I was off by a day.
The Saturday, the most craziest night.
I think that's gonna be a Wednesday actually.
On June 30th.
Yeah.
Oh, 30th. That's the 29th. Yeah. It is. Yeah.
Yeah. That's Wednesday. That's Wednesday.
What? Quant game stream almost Tuesday night.
Yeah. We're missing it by a day.
Maddie, we can switch it for Tuesday.
We might have to make a special occasion. We'll see.
And we can go and look at the forum, the BTC forum, they still have the posts up of the guy who was offering $10,000 for Bitcoin. So we can read the original timestamp.
Oh, that's true. They do have it.
Because there was a time difference between Europe, the person who ordered the Papa John's pizza, and so I think it took them like a week to set up. So I'm not sure what they're counting. Probably when the pizza was delivered is the day that they've been counting.
Yeah, probably. That's crazy.
But we can look into that. Yeah, no problem.
All right, so let's get back to this post big payday. We're at day 203.
Amazing.
And Hex is shining like a star, as always.
Like it is, yep.
With the index at 1,154 rounding up, outpacing the first, second, and third halvings of Bitcoin. Yes, by 42%, 721%, 459%, respectively. I mean, this is not even a race anymore. It's
over. It's a wrap.
It's over. That's right. It's just.
The game has been won, people.
Yeah, it's just.
Is this?
Sorry.
Would it be helpful to show this, like the actual post? Because I found it.
Sure.
Show people how valuable Bitcoin wasn't back then.
Right.
And they can think about Hex. Yeah. So here we can see Laszlo posted on May 18th of 2010.
Yes.
I'll pay 10,000 Bitcoins for a couple of pizzas, maybe two large ones. So I have some left over for the next day. I like having pizza left over for the next day to nibble on later. You can make the pizza yourself and bring it to my house or order it for me from a delivery place. What I'm aiming for is getting food delivered in exchange for Bitcoins where I don't have to order or prepare it myself, blah, blah, blah. Then talks about what kind of pizza he likes: onions, peppers, sausage, mushrooms, tomatoes, pepperoni, right? And then somebody's saying, well, what country do you live in? United States. 10,000 Bitcoin. That's quite a bit. You could sell those on Bitcoin market for 41 USD right now. Good luck on getting your free pizza.
Okay. That's a profound post right there, right? Because 10,000 Bitcoin is a whole lot more than $41.
And Hexagon, that's wisdom for you right now. Understand what you hold. Understand your T-shirts.
Then he goes up. He offers an extra 10,000, but I think they only took 10,000.
Thank God. Yeah.
Wow.
Just think when Bitcoin crashes to 10K, that's a loss of $100 million.
Yeah.
That's insane.
That's a crash level, $100 million.
These are the pizzas.
This is what happens when you don't delay gratification.
That's right.
Correct.
You eat a pizza.
Mm-hmm.
And then that pizza becomes a whole new lifestyle.
That's right.
That you couldn't have imagined.
Oh, man.
Hope the pictures are worth it, bro.
Amen.
Crazy. That shit is crazy. I'm here like staring at the screen, just like can't believe it.
Yeah.
Get your wisdom. Wow. Protect yourself from yourself.
I'll share the link here in the chat.
Shit is wild. So here we have T-shares versus Bitcoin and Ethereum. Ethereum is a pink line and T-shares versus Bitcoin is the orange line. And we have made a new high versus Bitcoin at 3.2%. And we're still traversing at the highs for T-shares versus Ethereum at 42.66%. So just 1.3% off of that. And we're just, hovering, baby. Doing what we're supposed to do.
Ready to pop.
Ready to pop. At tonight's crossover on Eastern Standard Time, which is 0000 UTC, the cost of 10,000 hex was $599.72, whereas the cost of a T-share at the time was $1,070. And again, 90 days ago, right? Like right over here.
Mm-hmm.
Right? That's about 90 days, is it? Yeah. The cost was about $130.
Yep. It did a 10x T-share price in literally 4 months. It's insane.
I mean, hey man, this thing is no joke. No joke. And as always, the payout per T-share sum line is letting us know how many hex we've been paid since inception for one T-share, for one T-share since inception. That number is at 2,140 hex per T-share.
Mm-hmm.
And this is the hex index. And this is just on this chart to highlight the value proposition for hex being the payout per T-share sum line, because the whole objective is buying and staking hex, because that's what gives us that S curve that generates the value proposition. So over time, this S curve is going to look like something you just can't even imagine. Congrats to Crypto Journeyman there.
Welcome to the fam.
Word. Welcome aboard, brother. It's going to be a nice ride. And this is the return. This is the percentage return, the index metrics of the same chart we were just looking at, basically. And for the payout per T-share, the sum index return is sum index is at 194,000. Now, percent. That means from 0 to there is 194,000, basically. That's interest. That's just one T-share.
Yep. Completely trustless and depending on news, BS, this, that. Just understand the power of the system.
That's it. Just one T-share. That's it.
The money printers.
Just
the best investment, the best worker in the universe. Pays you on time, every day, on time, and gets better over time.
I mean, this is just crazy. Right? This is crazy.
Yeah.
And the payout per T-share has only increased 5-fold since inception. So even though the payout has only increased 5-fold, since you're getting paid every day, right? This is why we can call it compounding.
Yep.
Because your returns are being compounded at this rate. Yep. I mean, this is since day one. It's only 500 and something days
because
old.
It's a sum.
It's just a sum. It's just happening every day. So because it's happening every day, it can mimic the effect of compounding interest in a continuous fashion.
Yep.
Right? Because it's happening daily. So that's why we can talk about it like that.
So for people watching for the first time too, what the yellow line does within constant is determine the slope of the arcing of the red line. That's why we have that 45-degree angle. And you can continue come like that for a very, very long time. And this is how we're doing kind of the S curve. And then it's just doing that until we get to a point where with more adoption, when the yellow lines start to trend down because more people are staked over time, keyword, many years, then that's when the arcing will start to trend a little bit down, but still going up. It's a sum. It can never be a negative number.
Right.
When we go up, it can arc at a different pace. But right now, we're just ready for takeoff.
That's it. We're just chilling. And the daily payout index is at 17,000. Basically, X of 1,700. I mean, this is just insane. Just insane. The daily, so the total shares are at 11.024 million trillion, giving us a payout per T-share of 5.751 hex for today's crossover and a daily payout of 63.4 million hex. Now, what I'm seeing here is that the share pool is contracting because it was a little high for a little while, right? Greater than 11 million trillion, right? And with that increase that we were seeing, that positive slope is coming back down to where it was trending before. But in conjunction with that, we also have a decreasing payout pool, right? So it seems like people are exiting the system for this point in time. But we'll see, because they always come back.
It's a combination of two factors. The little spikes are mainly due to emergency
stakes.
Yes, this is what we tell people. Being staked long term is so key, because you never know. Imagine you are not staked that day when there was a spike, when we got that nice 6.1, 6.2, then you missed that day. This is why it's very important to understand the long-term value. And over time, as more people stake, right, as the total T-share pool goes up, the payout per T-share goes down. Just simple math, because more people sharing the pool. But at any time in one day, you can get the amount of like multiple days worth. So that's why it's important to understand the long term. We're going to get to a point where staking is going to be so massive that if we get like an event or whatever, or people cashing out or whatever, you're going to be for a short period of time get a massive, massive amount of interest. The same way, don't believe that the 37%, 40% is going to be here forever. So maximize that before the bond math comes in, because Hex is getting scarce by the day, baby.
That's
You
right.
haven't seen nothing yet.
Unfortunately not. Don't wait around because it's coming. So now we're going to get into expiring shares. There hasn't really been much activity. It's just really going to be going from May to June. And as we've already covered before, we have 40% here for May going into the end of it. And what we're going to ultimately see is how it just collapses over time into the end of the month. And we're going to see how June starts picking up into the end of May. And we see that transition in the staking activity, which is what drives up the T-share rate, which is ultimately the value proposition for Hex.
Absolutely.
So this is for May 23rd. Then we go to the 24th, and we see that we got a nice little bump up in the June staking percentage by about 3-4%. Then we go to the 25th, and it's right back at 40% versus May, which is down to 39% or so. And on the 30th, we got a major collapse for June, excuse me. Well, we have a nice increase for the month of June into the end of May. Now, when we jump to the 2nd, we already have a fall off of May because it's at the end of the month. Doesn't matter anymore. Those stakes expired. They're going to drive up the T-share rate. And now we jump from, we don't jump anywhere. We just stay pretty stagnant, right, over the next few days. And into the 6th, it's pretty much just went up 1%, if that. Really negligible, hard to really see.
Yep, and a lot of them also are always stakes that just here to rotate to increase share rate.
Right.
And there's no protection mechanism, like Maddie says, to make sure if a big well is going to do certain things, they always take before and after so that you get that protection.
Right, and then today's count is basically the same. It is nothing special. It's just the same as the 6th. So just status quo for now. Shares are ending, or end stakes or stakes are ending, and the share rate is getting ratcheted up. I mean, it's gone up at least 20 hex in the past 2 days. Yeah. So
it's so good it gets boring.
Yeah. That's basically what it is.
Yeah,
that's basically what it is. So here we got the all-time correlation charts for Hex versus ETH and Hex versus Bitcoin. As always, 0 for both. And Hex is on the x-axis while Bitcoin and Ethereum are on the y-axis. And the important thing to realize is that each coordinate is giving you an X and Y plot of the returns for Hex and Ethereum or Bitcoin, depending which chart you're looking at. And the important thing to understand is that Hex outperforms both because the plots for Hex are primarily focused in the positive quadrant, right, where the majority of the plots are on the right side of the x-axis, which is the right side of 0, where the positive return lies for both, versus Ethereum and Bitcoin, where they're pretty scattered across the y-axis, right? And that's not what you want to see if you're trying to allocate capital. You want that thing to be locked up nice and tight and giving you positively skewed return, which is what Hex is clearly showing here.
Yep.
And now here's the kicker. Ooh. This is an updated chart. We're still at 1. But this is the real joint because I zoomed it in for the last 90 days.
Up and to the right, baby.
1 since the middle of May, basically, and it hasn't stopped. So the longer this continues, the higher the T-share rate is going to go. You know where Hex price is going to go, right?
Drag it out, baby. Take me on.
Choice.
Take me on.
Got no choice. We're going to drag you out to the back of the shed and beat you without any kind of consequences. Like, ain't nobody thinking about it. It's just, it is what it is. And the T-shares letting you know, look, all the correlations are up here at 1. Not some of them, all of them.
Yeah.
This is a dangerous fact.
This is amazing. Or in a nice way, I'm taking you guys.
Can you guys flesh this out a little bit more? The correlations.
Sure. Would you like to know?
Like what does it mean?
Okay, so what this is a correlation between Hex and the T-shares specifically. So each line is detailing a specific finite period of time where I'm recording a series of correlations. So the first plot over here is the first 21 days of correlation recordings, right? So over time, at this point in time, it was negative, and then it changes over time to reflect with the current market environment, right? So for it to be negative, that means the price of Hex has to be opposite the price of T-shares, meaning the performance had to be negative on the day versus positive for the T-share, right? That's what that means. So once it crosses over into positive territory, then that means that the relationship is starting to become positively correlated, meaning they're working in tandem. So if Hex is going up in price, T-shares are as well. And that's what that means. And it's the same thing for the 34-day, just a longer time period. And the blue one is the 55-day, which is an even longer time period. So I'm grabbing that correlation over each series of time, right? Whether it's 21, 34, 55 days, and recording it for each point in time.
Yes.
And we're getting a snapshot of that correlation at that point in time during that day. But over time, we're getting a real live picture of the behavior, right, between Hex and the T-shares. And this is what we're trying to determine. How close are they? Go ahead, bro.
Yep. And this is the key for everybody listening and watching. In simple terms, psychologically, which is very important. I'm going to try to say this as slow as possible so they understand. What that means is, and it's a shout out to everybody on the stream and the entire community. What that means also is that the behavior has changed over time to maximize the system and to do it the way it's supposed to do. When the correlation was negative, it means that people who were buying or getting Hex were not using Hex the way it was designed to do. This is the reason why when the share rate was increasing, but the price was going the other way because people were just selling, or early days, launch phase and all that stuff. That's why that correlation was negative. But now that after obviously many times us explaining the community, the value, long-term and better, launch phase is done, and people are utilizing Hex the way it's supposed to be done, which is you don't sell the principal, you only sell the interest, so you don't disturb the price too much. What ends up happening is as the share rate increase and push up the share rate price in Hex, and the Hex value doesn't crumble, but actually just go up into the right nicely, steadily, just like the Amazon chart after the dump, that correlation can go towards 1 because the system is behaving the perfect way it's supposed to behave. So when the share rate goes up and the price is stable and increasing, it allows that correlation to be 1 because it's saying share rate is going up and price is going up. So it's perfect symmetry. Before, in the beginning, share rate was going up because it can only go up, but price was going down. That's why correlation was negative. And also, to be fair, in the beginning, share rate was also increasing very, very slow. That's why some of the early traders or during launch phase, you can make a fancy move and move the price because there's that daily 1 billion Hex. Now those days are over. Liquidity is scarce. The real game is starting or has already started, which is just you can only get the free Hex, new Hex from staking. So you add that plus the education of the community and what we've been doing, people staking the right way, long term, only taking what they need. Beautiful word. This is, again, sound like a breaking record. Marco, don't attack me. It's my new favorite chart. So it really shows the perfect behavior and makes me even more bullish because people are doing what they're supposed to do. But this is also a friendly reminder, Hexican, the higher the price goes, the faster the T-share price is going to go because correlation goes to 1, which means it's $1,000 T-share. We go to 10 cents, it's $2,000 T-shirt. We go to 15 cents, $3,000 T-shirts. Understand what that means. And you can get there in a matter of weeks. Next thing you know, you can't afford a T-shirt anymore. So understand what you have. This is the time. Again, I'm begging you, understand the long-term value. Even if you say, oh, I'm just taking the 1 year or 6 months. 6 months from now, a T-shirt can cost you $5,000. And you might not be able to afford one. compared to what you used to have. And the share rate went up. Therefore, what you have is now much less. And that's how you're getting diluted by the system because you're not maximizing the system. So this is a very bullish chart for the long term that our education is working. People are learning. They're using the product the way it's supposed to be used. But that also means that I told you before, T-share acceleration is starting to happen. The higher the price goes in hex and in dollar term, the higher that share rate increase is going to be felt. When we're going to start moving again 30, 40, 50 points in hex term, and we'll start to be at 10 cents, 20 cents, 50 cents, $1 hex, that means share rate goes up in dollar term, T-share price, 30, 50, 40, $50 a day. That's insane. It never looks back. So don't get left behind. This is a very important chart. The most bullish chart we have now today to show that
it really is. It really is.
The system is being maximized the way it's supposed to do.
Because we know the T-shirt rate goes up every day. We know that.
Yep.
This chart agrees with my numbers too in the spreadsheet because if you look at like the ownership of just normal users in the network, they have staked 66% of all tokens and 34% owned by the users are kept liquid. But even the 34% that are kept liquid, I mean, a lot of them don't even move. Like we're talking like less than 5 billion tokens are actually moving.
Amen.
Right? Not even like 28 billion. So it actually agrees with that chart.
Yes. It's a great visualization. Amazing. Just to simplify that Wells had thought about this, it's amazing. Because this is really just show again, using math, not feelings, that the system is doing what it's supposed to do. And again, it's designed to go up into the motherfucking right. So this is literally the interest, the stars, whatever you want to call it, are all getting aligned. So, and when the next major move happens, make no mistake, it pumps even better in the bear market. It's just one of those things where you just wake up and then it's a new paradigm.
Whoops. Slipped into some money again.
Yeah.
How did that happen?
One last thing I'm going to say, Hexagon, I'm fucking proud of you guys. You're paying attention, you're learning, you're listening, and you're taking action because the fucking chart is saying so. So
that's it, baby.
Shout out to you.
That's it. So this chart is just the dollar chart for Hex. This has the price of Hex in dollar terms. Well, price of Hex and Hex is just one, right? Mm-hmm. So in dollar terms, it's going to be different. Payout per T-share in dollar terms. Adjusted Hex is just the sum of Hex and the payout per T-share in dollar terms. And I have added a trend line, which is just the exponential trend line, which is just going to show the linear characteristic of the payout over time, meaning it's always going to go up in a 45-degree angle, which is in line with, give me a second, because I got to find this bad boy.
Amazing.
That chart, right? Because this is what determines the payout. And this line is basically a 45-degree angle because once we had big payday go into full effect, which this was basically it right here, the system just 45-degree angle since that point in time. Yep. And this is what we're seeing here is just a reflection of that because the payout, I think up until that time, it was 350 days, and now we're at 200 plus. So now that nature that we initially saw, right, which wasn't really true because all of the supply was kind of not out in the system yet. Yeah, now
we're still in the setup period.
Correct.
So the system couldn't fully function. That's what I told people. I told Hexagons after big payday, that's when the real game starts. Correct. Like we're literally, technically speaking, we're only about 200
days. This is 203 days after the big payday. So we're still not really a full year old yet, which is crazy.
Yeah, it's amazing. Funny comment earlier. Children of the Great said this is Karim Turchin's favorite chart.
Yeah.
Who's counting, right?
I mean, he might have been counting.
Don't count on me, man.
Right.
I just like to see beautiful things. I like patterns. So, and it's great. That's why we're a great team. Wells put the pattern, the chart, and I just really good at explaining it. It's amazing. Dude, this almost up to the right, man. There's so many signs, man.
That's it. 5.997 cents. Payout per T-share was only 5.751 Hex, decreasing the payout per T-share in dollar terms of 32.856 cents 32.856 cents. I remember when this thing
right?
was less than 5 cents.
Yep.
The payout per T-share. Now we're 6 times or 7 times ahead of that.
Hexagon, remember what that means. That means your money printer is not just working every day diligently on time, but it's getting better. His skills getting better. It's yielding at a higher clip. For every T-share that you have, that trend line is telling you that it's exponentially becoming more valuable over time, exponentially paying you a better yield over time. This is how you shut down the haters, because this is facts right here. The data is verifiable. That's what it's done.
Opinion there. It's
and
coming
going
straight
back
from
to
the
what I
blockchain.
said, very important wisdom. If you don't fucking do it, if you don't take action, if you don't stake, everything that we're telling you right now, it sounds like a foreign language. You know what I mean? Like if you don't speak Chinese, you'll sound to you like that, or Russian or French like me. So just understand the language, take the action so you can benefit. Be on the train. Don't get left behind.
For sure. Look, this trend line is serious. I mean, this I didn't draw this. This came directly from the data.
Yep.
Like, this is coming from Excel itself, not from me. So.
And this is another proof, back to what we were talking about earlier on the macro, big institution, whatever. The market maker is telling you where this is going. Understand.
Yep.
The value is in the system. Like a CD, it's stored, it's there. It allows times to do its work, and those who respect time will get rewarded. Come in, put your thing in the vault, do your time, get paid. That's it. It's that simple. You get paid a higher yield that's unheard of. And the thing that's creating the yield is becoming more valuable over time. That's insane. That's unheard of. That's crazy. Like, people need to let that sink in. It's so important. People just say, oh, yeah, it's just APY. No. The thing that you get paid is hex, is APY and hex, and then the hex gets more valuable. That means if you can get 15, 20, 30% of something, and that's something to a 10x, that's 300%. That's insane. No fucking trader can ever make that kind of money. And you don't have to trade. You just need to allow time to do its work. It's the most fairest thing for everybody. It's the most fairest thing.
That's a super important point. Like, those that don't stake, not only are you not getting the interest, but let's assume the interest you get per day, let's just say it's like, $25, right? So like, not only you're not getting that $25 of interest, right? But then as the price of hex appreciates in US dollar value, you're also forfeiting the USD price appreciation for that interest.
Amen.
Right? So if the price goes up 10x, you're no longer missing out on the $25 per day. You're now missing out on $250 per day. Yep. And then another 10x, you're now missing out on $2,500 per day. Yes. Just because you chose not to stake. So like, you're basically fucking yourself in both ways.
Yes.
Much.
And you're missing that. Plus the opportunity cost too of all the days prior to that price appreciation. You're missing those two.
That's correct.
I was talking about that. I think it must have been on the Hex Asian stream. It wasn't long ago. It must have been this morning. I don't know, but I stream so much I can't even tell the difference anymore. But I was talking about it like the other day. I swear to God, like, because it's so blaringly obvious, right? The system functions off of Hex. Everything is in Hex. So if you're getting paid 30% year over year, just in Hex, and Hex is doing crazy runs. Mm-hmm. Oh man, you just can't beat that with a baseball bat. You just can't.
No brainer. It's a no-brainer.
Oh my God, look. So this chart, right? Right now we're getting an adjusted Hex value of 40.48 cents, 40.5 cents. What this means is that the next time Hex decides to do a run, that's where price is going to go, because that's what the behavior has been.
Yep.
Of this chart.
Yep.
It just marks time. It plays along, right? It plays along, and then price just catches up. Boom. Right?
Perfect.
Boom.
Yeah, it's literally what you're talking about, like a leading indicator, kind of like saying that it tells you, kind of like a futures market, where this is trending and pushing towards, which is why it's perfect. And then the more it's aligned, thanks to that correlation, the almost predictable it becomes, because it's literally just doing what it's supposed to do, which is amazing. And then I just want to answer a question in the chat here. It's important from Tex Hex. So let's say, you get when the price go to 5 cents or 10 cents, and let's say there is a pullback or whatever, the new T-share price in dollar might be a little bit lower for you to be able to buy. But what's amazing is the T-share that you already have are going to constantly keep paying you regardless. Plus, like the person saying in the chat, all the emergency penalties you're going to be able to get. And more importantly, the share rate is the key. That's what you don't lose. Because if you're buying one T-share now, what is it? 17,600 something, right? And let's say we go to 18,000 hex.
Wrong.
What is it?
17,836.
836. See, it's going up. That's what I thought. 836. Amazing.
Yeah, that thing is flying, boy.
Yep, flying. So let's say price go to 10 cents, and then at some point Sherry went to like, let's say 19,000 hex per T-shirt. Even if the price in USD were to trend down in hex term,
it's up.
It will still be 19,000 hex per T-shirt or more. That number will never go down. Never. And that's the single most important thing. That's why longer always pays better. And for people to don't understand, quick math, when the share rate goes up 10%, what you're losing in terms of opportunity cost is not 10%, it's 30%. And the reason to that is because of how the system works. For longer pays better. You get up to 200% bonus or 3x factor, because for every extra year, you get that 20% bonus. What that means is if you're able to lock in T-share, let's say at 18,000 hex per T-share, and then it goes to 19,000 hex per T-share, those locked in at 18,000 hex per T-share, let's say they did a 5-5-5-5 stake, so at least 10 years, they're getting that 3x factor bonus based on that 18,000. So share rate is flying, like Wells is saying. So when it goes up 50 points, 100 points, 1,000 points, whatever it goes up by, think of it times 3, because you won't be able, you would have got more plus bonus at that lower entry point. So it's very, very important that you understand that, because the higher the price goes in hex term, in dollar terms, the higher that increase in share rate will be felt. And the higher and higher it will make for people to be able to acquire a T-share, because it becomes more and more expensive, which is, again, it's a feature, not a bug, which is why longer pays better, which is why the total T-share pool over time will start to shrink as a T-share becomes more expensive, because no matter what, after 15 years even, you're going to have to give that up, because that T-share will burn and you will have to restake at whatever new share rate is. So this is why longer pays better, protects you. The longer you stay in the pool, the more value you will get over time. So hopefully that answers your question, because you must be new. So, and welcome to the team. And yeah, BJ101, welcome. You did a 5-year stake. Somebody did the big stake. I saw that. Welcome.
Yeah, welcome to all the new Hexicans, man.
And
guys,
definitely
throw them in the chat. Reach out. We're all over the place.
Yes, sir.
Hey, Wills, can you go back to the previous chart for a second?
Sure.
So my eye caught that 32-cent target there, because on the log chart, so Hex is in a bullish pennant formation right now on the log chart.
Correct.
And so actually the target based on the flagpole on a log chart is 32 cents. On a linear chart, it's like 10 or 11 cents, but log chart, it's more like 32.
And you know this thing moves in log fashion, so you might as well go on ahead and put that 30 on it.
Yeah. So my projection for the next move up is somewhere around I'd say 25 to 40 cents in that range.
There you go. 32 sounds about right.
Because it's a return stream, and then you move that function square. So that 32, that's that multiple, because we've been hanging around very nicely around that, 9, 5, 6 cents. And then after that, just boom. Because you can always easily overshoot, because again, liquidity is low. So this is one of your last chance, if you're not in the bus yet, to get your ticket, get your seat. Because at some point, it's just going to leave the building.
Important to note the range that Gunther just laid out, 25 to 40, and the range I have here, 32 to 40. Not a coincidence, folks.
Yep.
Also not a coincidence that in 2010, Bitcoin went from sub-penny levels, right?
To 30 cents.
Literally
right around that top. Ain't that funny, huh?
It went to like 8.5 cents. It retraced to 5 cents, and then went from 5 cents to 39 cents.
There you go.
So, I mean, I expect something very similar.
Same here.
39 cents? Shit. Ain't no big deal.
You do the log two, right? You do the multiples, right? 2, 4, 8, 16.
We went to 5 to 6 in no time. Hell, we went to 7 in no time, really. We were just a couple ticks shy of 7 cents.
Yep.
So,
full send.
40 cents is really nothing. It's really just a 5x.
Yeah. Perfect.
7x to 42 cents, really, right?
And which is also cool with that next chart too. The P is still ridiculously low.
Yo, it's gonna be low until T-shares go deflationary. You know what I'm saying? Like, and that's the thing people have to understand. This shit is gonna be cheap for a long time.
Which is why, once again, the price at which you get in doesn't matter, because the value proposition, the yield is still very high, which is why PE is this low. Because that's what price to earning ratio does. Like how long it takes me to double my money. And so it's below 1 because it's just stupidly high, which is great. Which is why if you have a lot of money, you come, oh, the price is this, that. No, because we just showed you correlation is great towards 1. The price is strong. The support is there. Most of the coin are in strong hands. It's a feature of the system, not a bug. So your money, your value is better served here with a really insane PE, high interest rate, longer period of time, especially if you know, hand, there might be a bear market, there is, and you might lose even more of your value. Or worse, if you're holding USDC, they're not paying you any yield or pays you garbage. I don't even know what those other companies do now. It's probably like 5% or less. And guess what? All the people that do the margin loan, they all got liquidated, which means they will borrow those yield farm allocation for less because they don't need it as much because nobody's borrowing anything because they already got wrecked. Everything is connected. Exchange is the biggest buyer for those other yield platform stuff because that's what they use the money for, to allow people to go long or do their leverage shit. But those people already got liquidated, which means the exchange will need those coins less and less, which means the yield that those companies used to pay is going to be less and less. So everything is connected. Bear market fixes all that. And this is where we pump the most because money will eventually figure out where the highest yield is this amount of time. So position yourself first. Once again, play chess, not checkers. Because when that major event happens and Hex continue to shine as it should, it's going to bring even more and more eyebrows, more and more. And more people that did it will be left behind even more. So do yourself a favor. Take actions. Even if you're new and you're scared, just do a short-term stake. See how the system works. Build your confidence and then restake.
I got so many short, crappy stakes because I just didn't understand. It's okay. Just do it. That's how you learn.
Yeah, because eventually you do. The community is great. We're not going anywhere. We do weekly streams.
Sure they are.
Long term, in fact,
the streaming is about to ramp up. Oh, hold on. Let me, because I forgot to announce it on my stream. I'm actually going to be streaming with the Discord Syndicate on Sundays now. Whenever they start that thing, So
that's great to hear.
Yep. Everybody's going to be contributing a stream over there because again, the whole objective is to get the word out. That's all.
Yes.
It's not about anything else. It's about Hex and the Hexagon community. It's not about any one particular individual or nexus. It's about the whole community. So that's what the Discord Syndicate becoming a network is all about. So everybody just be ready for that.
Nice. Hey, also, if you don't like Hex at 6 cents, you can buy it at $1.
Oh yeah, you can always buy it higher.
That's what's coming.
That's a fact.
And if you don't like it at $1, you can buy it at $10. And if you don't like it at $10, you can buy it at $30.
We'll get you on the right price at the right time.
I mean, I don't know when I'm gonna sell it to you, but maybe never.
Would be.
I'll sell a stack at $1. I ain't got no problem with that.
Yeah. I don't know if I will. I'm not really motivated at $1. I need some motivation.
$1 is just a stepping stone. I still got my eyes on $30 for end of year.
There you go.
All my T-shirts get restacked, and then you can have the rest after that. First check that. Yep.
What's crazy though, as the price goes up, though, like you sell less and less over time.
Yeah.
Like everyone has this like unrealistic fear. Oh, these large wallets are just going to dump all their tokens on everyone's head, and it's like, no, actually. We'd rather get to a point where we're just selling our interest and restaking our principal. Yeah, if you even need that. How much you really need to sell when the price is $30?
Yeah, I mean, come on.
I tell people all the time.
Yo, and we've gone through this math. How many times? Yo, we even did the calculations in real time.
You don't need to.
In real time. And we did it two ways, Gunther. We did it two ways. We did it the lowest. We did the way where the worst case scenario is the present day T-share payout, right? Which is 5.75 hex or whatever.
Yeah.
And we also did it the opposite way, where it's you're taking the 40% of the actual hex, right? And so that's going to be the actual return. You feel me?
Yeah.
It's not going to be the 5.75 because that's literally the worst case, assuming nothing improves or changes ever, which is not going to be the case because the T-share rate is designed to go up over time. So the payout is designed to go up over time. You understand?
Yeah.
So it can't be that way. So the system automatically compounds on itself year over year. This is why it's designed to geometrically perform. And this is what people don't get.
Yep.
But they'll learn it the hard way. So.
Yeah, exactly. The only way that will be a little bit different in behavior is the adoption becomes so insane that it catch up. Basically, the adoption rise faster than the T-share price increase, which I don't see happening anytime soon. But that will be some insane adoption, and the price will be just, I mean, forget the solar system. We're just going somewhere else.
So if you're calculating your interest based on, let's say, 5.7 hex, per T-share, and then you're multiplying by, let's say, your T-shares times like your average stake length, for example. That's actually a very conservative way to project it.
It's
using
that USD
number.
The proper way is to never do it in a duration sense because you're not getting the true actual net effect of what the math is going to do. The math is going to function with respect to the duration of each specific stake, not an amalgamation of the stakes you have.
That's correct. Yeah.
So you have to actually do the math independently for each respective stake. And then, if you like, sum those up. But again, they're still independent. They're not.
Yes. Unless hint, if you have a dream account and you have maximum stakes already, it's easy math because you know how many T-shares you get with the bonus T-share, right? So it's
that's all one duration unless they starting and ending at different times.
Right? Hint, yours truly only do 10-year plus, and that's all 15 now. So I always get maximum T-share, and it's an easy math. And here's the cool thing. The real cool thing is that literally you just need to do the math based on, from my skeptic friends in the beginning, right? On those watching, I do the math based on the worst case scenario first, just to show them how much of a no-brainer it is and how they get stupid interest. And then I start saying, hey, imagine, dream, right? They call me Karim the dream for that. Imagine if the price is this, 30 cents, 50 cents, $1, $2. I leave you with the calculator and then you just go have fun. It blows your mind. But once you just show them that it's a no-brainer, and the price never leave, let's say we pretend it's just where you price that you entered in, just that yield alone is insane. And then anything above that is just great. Like one of my conservative stuff when I said in the beginning is like $1. I look at it like every hex is at least $1 or more. So when my daily payout says whatever in hex, I'm just multiplied by 1. So it's like, okay, today I got this much. Okay. And then I use that for my targets. How fast can I get to, this much? 4 figures, 5 figures, 6 figures, whatever. Because it's all about that daily payout.
That's it, baby.
Collect interest, sit, relax, enjoy life. Simple. Be right back. I got a refill.
All right, so let me get. Sorry, guys. So this chart here is the comp chart that I use to reflect the hex PE chart, which is at 17.4% basically, versus the all-time low of 551% for the S&P 500 PE ratio, letting you know how many times cheaper hex is versus the S&P 500's all-time low in recorded history, which was towards the end of World War I in December, Q4 1917. Yeah,
wait,
insane.
Hold on,
right?
you're gonna have to flesh this out a little bit more. You're gonna have to hold on.
It's insane, right?
All right, break this down for me just a little bit more and break this into
sure.
something very digestible.
So the lowest point on this chart is 551% in numerical terms. right? This is a ratio of 5.51 times, which is the same as 5.51x, which is 551%. It's just a multiple, right? So when we look at it versus this, we're not even at 1. We're still beneath 1, which is all the way up here. Damn, the scaling is wrong. It should be a percentage. Sorry about that. It should be 100%, not $1. Sorry about that. Let me fix that.
Yeah, the price to earnings ratio tells you how many years you have to get the earnings in order to make up the price that you paid for the investment. So like,
correct.
If a stock has a PE ratio of 10, then they're paying out a tenth of what you paid for the stock every year in dividends.
Okay, I gotcha. Yeah, that's where that was the gap for me.
You wanted to know what the heck?
Yeah. I'm at the basics. You gotta.
Sorry.
You gotta give me bite-sized chunks.
I thought you knew what like a PE ratio was.
Sorry about that. It's been a while. I mean, at some point I learned it in accounting.
Yeah, no. That was too long ago, bro. Yeah, no, that's too long ago. All good. My bad, though.
But so what you're saying is the price earnings ratio for Hex is significantly lower than the lowest point for the S&P 500 during the time of World War I.
Correct.
Damn.
Yep. Pretty much.
Damn.
And only select few people on the planet understand this. So.
Yeah, I'd say that percentage is probably really small.
Yeah. So, life-changing opportunity indeed. And just as a reminder, the network effect in real time. You have Google here. This looks like Bitcoin up here. Below that, Microsoft, Apple, just to show that every market evolves in the same fashion.
Amen.
And we're all here at this point in time, and we just have to ride it out. Yep. And this, I just throw it in there just to throw it in there because I feel like people need to talk about it because I don't feel like we talk about it enough. Just the staking pool and how the staking percentages work. And we're currently right here in between 9 and 10%. We're at 9.7% approximately, which gives us a yield of approximately 37% or so, 37, 38%. And this is how the ROI is determined on the stakes, right? It's not the price. It's not anything else. It's the staking percentage of the total supply. So if we go down, the ROI goes up. And if we go up, the ROI goes down. So that's pretty much that.
So a couple of things here for people watching, which I think is so powerful. And again, Gunter, now you understand why, I say all the time, I can't buy anything else because it doesn't make any mathematical sense, right? I'm glad you learned about P. I cut that when I was walking back in. But this is where the human behavior psychology comes in. I want everybody to pay attention because that is the only X factor that we can somewhat predict, but there's something that could potentially happen. So I want to give kind of both sides of the coin, which is great. Rule number one, we're going to be around here 9 to 10% for a fairly good amount of time. So this is why the yield is so powerful because 95% is in the OA and OA is not staked. Therefore, you can safely say that this percentage that we have now is going to be here for a while. Now, here's the two scenarios. Scenario one, which we would like to do. That's what we do all those great streams. We educate, we teach people, they stake. So percentage goes up, adoption kicks in, the pie gets bigger, everybody wins. And then what happened is bond math kicks in. Staking percentage rises. Let's say we go where the cursor is where Wells has it. Let's say we go to 30%. That's a stretch. But let's just say crazy. 5 years from now, crazy amount of adoption. Massive people come and stake. Percentage goes up because so many T-shares in the system. What ends up happening is your percentage ROI in hex term goes lower, but the dollar price just explode.
That's right. That has to happen.
Or option two, which we could have done in the beginning, but we decided not to because, again, abundance mindset, which we don't teach anybody, we don't train anybody, whatever. People don't know what they have, the emergency end stake, they don't stake, whatever. Percentage goes down, and then the yield becomes even more insane, but the price is kind of like where it is now. Or maybe trend upward, obviously, but it will be accelerated at a slower pace, so to speak. So it's such a beautiful dynamic system, like Wells was talking about, because no matter what, you're going to get paid. Either the yield goes lower, price goes higher, bond math. or the yield goes higher because people don't understand what they have, but then it's harder for the price to go up at first. But over time it will, because if you're measuring yesterday, you're just gonna go sit in the OA address and not do anything. So it's literally up and to the right forever. The moral of the story is, how fast are we gonna get there?
That's it.
I like to believe, and I want it to go fast. This is why we're working hard. This is why the Quant gang is also here, educating people, because the interests are so perfectly aligned that even me doing my own selfish interest helps everybody, including myself. This is how beautifully designed this is. So I wanted to take that 5 minutes to explain that, two scenarios. So, and we're doing good right now. We're doing good. Almost 10%. We could have been, I promise you, if we didn't do what we're doing and talking about, if I wasn't talking about 15-year stakes, Maddie, I wouldn't be surprised if we'll be at 6% stake right now. All these extra bonus T-shares wouldn't be, but then again, the price may not have been where it is now. Maybe like I want to. So again, this is beautifully balanced, and I'm okay for the slow grind, grassroots, true staker, long-term believer, people understanding what they have. And this is why, once again, like a breaking record, that new chart that Wells has with the correlation is so powerful, because people are literally doing and using the system the way it's supposed to. All we got to do is just continue our efforts, virality, and onboarding. Remember, right? Onboard. Very important. Rule number one in sales: if people don't know you, they can't transact with you, period. They can't get involved. You can have the best product in the world, best tool, service. If they don't know you, they don't know that it exists, they can't have it. So spreading the word, increase the adoption, and with Pulse is going to help even more. So, and I'm excited that the fees are getting lower. This bear market is great, because on both sides, we're going to be able to onboard people left and right.
Oh yeah, it's going to be.
Because I'm going to talk to everybody. Again, say I'm not in a vacuum, no matter what. Anybody, Pulse, new people that got wrecked, the mother shit coins, hey, that might be a savior. Ethereum people, whatever. Listen, because at the end of the day, you're going to see the writing on the wall. You know what I mean? Because bear market grinds people, Why don't you want to come here? It's nice, it's comfy, it's warm, right? Don't worry about price swings. Just get your daily payout. That's it.
Come to the shallow side of the pool.
The shallow,
where you don't have to worry about drowning.
You got some beverages, you know what I mean? I got everything. You can get drinks, you can get tea, you can get lattes.
We even got a bar in this motherfucker.
Everything.
We're just chilling.
Come to Vegas if you can.
So go ahead and get your orders in for Las Vegas. Go ahead and make your 60-second testimonial video and post it on Twitter, #HexChallenge. Make sure to watch all the 100 hours, literally, of episodes of Quant Gang at the YouTube playlist, quantgang.com. And I want to thank Gunter, the accountant, the protector now. Okay, Gunter.
Yes.
Gunter, who goes by many names, for his outstanding work and for joining us on the stream tonight.
Oh, thanks for having me.
Yeah, thanks for coming on, Gunther.
Thanks for taking the invitation. So
I'm really in comparison to you guys, I'm like a wrecked pleb. I have a lot to learn. So,
okay.
I really don't have much to contribute.
I think he's the only one that's retired out of all of us. But all right. Oh no, wait, Maddie just joined, but he's still working like an animal.
Yeah, I'm working more than ever, actually.
Exactly. There you go. So somebody just wanted me to explain the Hex PE one more time, and basically the Hex PE, it's just the earnings, or how long it's going to take you to recoup your earnings based on what you're paying for them up front. Yeah. And basically the best way to think about it is, for Hex, you're paying 17 cents on the dollar versus the lowest point for the S&P 500, which is $5 for the earnings. Right? $5.51.
Let me throw a little joke for people to understand how disgusting it is sometimes. The Tesla P right now, I'm not trying to scare anybody. The Tesla P right now is 607. 600. It's insane. The level of hype. Listen, I love my boy Elon. I drive Tesla. I get it, but I need you to understand. So the market can sell off. Tesla can sell off. The P will still be insane. So if you understand the value of especially long-term hold, now don't get me wrong. It's normal to be insane to some degree because Tesla has a bright future and all that stuff, but it's still 607. So when people start telling you, "Oh, Hex is this, that," I'm like, dude, P is what matters because it's a yield product, it's a fixed product.
Shit.
And the PE is
Like, yo,
low.
I don't know what the hell I'm gonna buy besides Hex for like the next 10 years. I can't imagine it.
Yes.
I honestly cannot imagine it.
And another way to put it in perspective, when your PE is this low at 0.17, let's say 0.2, right? What that means is because at 1, it means 1 to 1. For every unit invested, you get 1 unit of return, which is already insane because it's a 1 to 1. Most places, you don't get that. The reason why the lowest in the shitty market used to be 5 is because you got to invest 5 plus to get 1 unit, right? So this means that literally you invest literally 5 times less than what you get in return.
Yep.
It's almost, I don't want to say risk-free, there's no such thing. But again, it goes back to the early conversation about this is literally a calculated risk. It's risk suggested in the highest appreciation in the history of the world, designed to outperform in the bear motherfucking market. Let me remind you, there's a reason why on the Quant stream it always is a pump, because we're here to remind you again, give you that weekly dose, repetition. Understand what you have, because even some of you guys, I am promising you, you kind of know what you have, but you don't really know what you have until the price is like
Too damn high.
You're like, shit, we should stick longer. Don't be that guy. Do it backwards, okay? And for all the new people, remember the ultimate easy strategy, no matter what. I challenge anybody. Take 30%, stay for 15 years, get your 3x bonus, do your T-share preservation, and then freestyle with the rest. If you're on the scarcity side, keep more of it liquid there, the 70%. If you understand the long-term value more, you can stake more longer over time, just build that ladder. And as the price go higher and higher, as we've been talking about, and Gunter's been saying that, you actually need to sell less and less coin because you're building wealth. Therefore, let's say you used to have 50% liquid and then the price double, then now you can actually stake another 25% of that. And you still have that same emergency fund in dollar term that you have. Does that make sense? It's very important. Let's say you wanted to have, I don't know, 10 grand or 20 grand liquid, and then the price double. That means that now you have 40,000. So now in Hex term, you can stake half of that to create more yield because the price went high enough. So you always have your emergency fund for whatever situation, but then you're allowing to not create dormant capital. You're allowing the rest to work. And you're very fortunate. We're about to have Pulse soon. You're very fortunate. The fees are lower than what it used to be. So you can do more stakes now. But be careful. Don't be like one of those with 100 stakes. Don't be stupid, okay? Stake for a reasonable lengthy amount. The point is, as the price goes higher and higher, you need to sell less and less coin. Therefore, you can build more wealth by staking longer.
Also, with the tokens that you're going to keep liquid, it is highly recommended that you keep a very, very small percentage of your entire position liquid. Like me personally, I keep 3% or less. It's literally less than 3%.
I'm at 1%.
Entire position. Yeah, 1%. It's even better. This way, because obviously there's too much temptation. It's too alluring. When the price is 50 cents or $1, it's so alluring to cash out or at $5 or $10. It's so tempting, but you're forfeiting the opportunity to cash out at much higher prices. So if you got a fat stack, you don't want to like sell 90% of your position when Hex is $1. That's just dumb. Or 100%, because now you stop yourself out of the market permanently.
Yep.
Where's the wisdom in that? This is a beautiful passive income system, the most beautiful passive income system in the world, I think.
Yes.
So if we don't shut down the stream now, then there won't be any meat left on the bone because everybody who's watching will buy it all. So
let's do it on the 5-hour mark. Perfect.
Yeah.
Gunter, where can people find you?
Only in Telegram. I'm not on Twitter. I'm not on normal social media.
People have been looking, so
yeah. I try to stay. I try to fly underneath the radar.
Okay.
He's very active on Telegram. No, seriously, guys, be on the Telegram. He's most likely there on Hex, the Telegram, or also Hex Trading because
Hex Trading chat, Hex Bear chat. Those are the two best places to find me.
And he has beautiful chart that he posts there too every now and then. Just want to watch it for fun. But remember, don't trade, stake. Watch it for fun. Watch it for entry, like we talked about all the time. We talk about DMI and stuff like that. We don't want to talk about price. We just want you to understand what's about to happen, what's the move, so you can be at peace and also make your move now. Don't be in reactionary mode. Okay? Don't try to be smart. Be wise.
Also, with any price, any discussions about price on this stream, it's 100% pure conjecture. And even all the targets that I mentioned, I could be 100% wrong. So please, like I just strongly emphasize that it's just conjecture. This is a very highly speculative asset, and we could be wrong about things. And so, like Maddie corrected me earlier when I said I guarantee like that this will happen. I mean, honestly, the only thing we could really guarantee is that you'll get interest back in Hex, but we can't guarantee any value. So I think it's important to make that distinction.
Yes, the guarantee, which we always say, the guarantee is in Hex, and that's why on the Quant game, right, we don't give financial advice, we give mathematical advice. Anybody can test. That's why it's all recorded. They can go back. The math is a standalone truth. 2 + 2 = 4. Doesn't matter who you don't need to like it. You just need to know that's what it is. And that's always why we're trying to present here. And again, I want to give a big shout out to Whales again, coming with those great charts, because people don't understand. It takes also a certain level of understanding and depth to be able to create those. So we can just come in and interpret for people to understand. But that
takes. Karim, where can people find you?
Well, Telegram as well. Karim, be careful. Don't be scams. There's a lot of people out there. Make sure, it's very important to forget that. Yeah. Because in our community, me, Maddie, Wells, Gunther, very soon, because the scammers are fucking lurking. They see somebody on stream. Oh, you seem to be cool in the community. They're going to try to impersonate. So be very careful. Always. That's why you have to go to the main chat, because that's when you can see the reputation. There's a reputation system, so it's the right person, and you message them from there. Don't reply to somebody that messaged you first. If you're going to talk to somebody, you send the message. You go to Hex Crypto. You find the person there. My @ is very simple. Hex Dream Account. It's very easy. I'm here for the long term for you to do. If you type in also in your browser, Staker with a K, stakerclass.com. Shout out to Maddie. Give me the website. It goes to my Twitter directly. You can follow me there. I only tweet when it matters, like things are very important. Obviously, I retweet Richard a lot in the important things in the community, but you can follow me there. And importantly, if you're new and you're coming to Hex and you're looking to get a wallet, we have something called Staker app, one of our best tools to be able to watch the price, check everything all in once, not be able to be scammed if you go to the wrong website, stuff like that. Because you can use MetaMask too if you know what you're doing. But if you're serious and you're new, you want to come into Hex, I'm still gifting a bunch of wallets to new people to come in so they can, experience this great thing that we have.
And all the links are in the description below. Whales, where can people find you?
Twitter at WhalesOnly1 and on Telegram at Twitter or WhalesOnly1. That's it.
YouTube, just WhalesOnly.
Oh, and YouTube. Yeah, I forgot about that. And at youtube.com/WhalesOnly.
Sounds good. Well, thanks everybody for joining us tonight. We have 234 people who are going to cry themselves to sleep now that we're ending this. So have a good night, sweet dreams, and stake wisely, my friends.
Peace.
Peace out.